Happy day to all my Nanbas and Nanbis. As promised, I am here at sharp 7:15 with the expected questions marathon. Before we get into the marathon, I want you to guys to do two things. One is subscribe to the channel if you have not already, because I'm not gonna just stop with expected questions. There are so many other things which is planned from my side with respect to audit and also SM. I don't want you to miss out on anything. And tell me in the comments as to from where you are watching this marathon. Put it in the live chat as to from where you are watching. From Tamil Nadu. Put it with the city and the state. Last time there were so many people from Kerala watching, Gujarat, Maharashtra. And honestly guys, when I see all of those states, all of those cities that you are watching from, the efforts from my side. There's lots of efforts during the exam time. You yourself know it. Each and every effort seems like it is worth it when I go through the comments and when I see that so many people from so many different states are actually getting benefited because of my marathon. Just put it down guys. I will definitely go through each and every comment that you are writing here. Now coming to the expected question marathon, what is the flow that we will be using? We will be going in the same flow as the expected question list. I hope you all have the question list in your hand handy. Now we'll start off with chapter number 1 and then we'll go to chapter 11, chapter 6 in the same flow. If you see here, marks are also given for each of the chapters. SC 310 marks you will be getting, and once you finish the first page itself, you will get 40 plus marks with just these standards, and we will be completing these standards in probably 2.5 hours, and then 2 to 2.5 hours it will take, and then we'll move ahead with the other standards also. We will be completing all the standards which is given in the expected question list. You yourself know that standards come for 70 marks, so minimum 60 to 70 marks you will revise today itself, and then you will go to sleep. Trust me, it is gonna be a peaceful sleep for you if you stay with me till the end of the marathon. For this, what are the materials that I have used? You are all already familiar with my concept book. I'll be using my concept book. I will also be using the Auditify book. You would have seen the simplified reel and all where keywords are marked. The same way for audit also, I'm working on a book which is like a chart book where only keywords are specified, where you will exactly know where you have to emphasize, where you have to study properly. So for whatever standards Auditify book is ready, I have used that. Otherwise, I have used the concept book. That's the reason why I've used both these materials. Now, how I want you to watch this marathon is, we will do a standard. You're going to recall all the points along with me. You're going to listen to me in headphones, recall all the points along with me, move ahead with me. Don't get stuck in just one standard. Keep moving ahead, keep marching ahead, and yes, let us finish all the standards today itself, guys. Travel with me for just a matter of 5 hours and see how much confidence you're going to get at the end of the marathon. And let us get started, guys. Essay 200, just 12 questions. The first one is, what is the meaning and nature of audit? Interdisciplinary nature of auditing. For meaning and nature of audit, audit is an independent examination of financial information of any entity, whether that entity is profit oriented or not, whether that entity is small or big, whether that is a partnership firm, sole proprietor, whatever it is, whatever legal form it has, you can do the audit. Audit is an independent examination of financial information of any entity, whether profit-oriented or not, irrespective of its size or legal form. But the intention for doing the audit is what? To express an opinion thereon. When such an examination is conducted with a view to expressing an opinion thereon. If you have the view to express an opinion, then that is called as auditing. Now, what is this interdisciplinary nature of auditing? All of this is there. It is given so easily here. Now, there are 8 points that you have to remember. The first 4 are your foundation subjects. What are your foundation subjects? Accounts, law, economics, and max. These four are the foundation subjects. What is given in the bracket is a key word that you have to remember. Accounting means result of accounting process. Accounting, auditing reviews of financial statements, which is nothing but the result of overall accounting process. That is a key word which you have to write. Second is law. You have to know business laws. Auditor should have a good knowledge of business laws. Third is economic. You should know the economic environment surrounding the entity. Statistics and mathematics. The auditor is not going to see each and every bill. The auditor will do a sampling basis. So you have to know statistics and mathematics also. Now in CA Inter Group 2, what are the subjects? Costing, audit, FM and SM. Costing is nothing but the production. That is the fifth point. Production. Under that we have cost system, marketing, etc. For FM, it is FM only. That is financial management. Under that we have fund flow, capital budgeting, etc. For SM, it is data processing. Electronic data processing. In strategic management, about computers you study, correct? So data processing, that is electronic data processing. And the last one is when you have to do audit, you have to know about human behavior, that is the behavioral science. So for interdisciplinary nature, how are you going to remember? If they ask in the exam, the first four are the CA foundation subjects, the last four are the CA Inter Group 2 subjects. Simple as that. What is the responsibility of the management? Now you tell me, who is going to prepare and present the financial statements? The management is going to prepare and present the financial statements. Then what only auditor will do? Auditor will only give the opinion on the financial statement. So when they ask for responsibility of management, preparation and presentation of financial statements, what is the responsibility of the auditor? To give an opinion thereon is the responsibility of the auditor. Simple, easy question. Objective of auditor as per SA 200. What is SA 200? Overall objectives of an independent auditor and the conduct of audit in accordance with standards on auditing. What are the objectives of SA 200? They're asking. They have a twofold objectives. The first one being to obtain reasonable assurance whether the financial statements as a whole are free from material misstatement. The material misstatement can either be due to fraud or error. What is the difference between fraud and error? I hope you know. The intention is different. If I purposely do a mistake, it is called as fraud. I myself don't know. I have done a mistake, that is called as error. That is the reason why whenever mistake is nothing but misstatement is the mistake. Material misstatement, important mistake. So the objective of the auditor is to make sure that the financial statements are free from material misstatements, are free from any important mistakes. The mistake can be either fraud or error. I don't care about the intention, but the financial statements has to be free from material misstatement. Thereby, it is enabling the auditor to give the opinion. Ultimately, the auditor has to give the opinion. The auditor will say in the opinion that the financial statement is correct. That means the financial statements is prepared and presented by the management. Now, when the management is doing the accounts, in accounts, I'm not talking about audit. In accounts, how you have to prepare the accounts? As per accounting standards. As per schedule 3, you have to prepare the accounts. Yes or no? So the auditor is going to see whether the financial statements are as per the accounting standards. The financial statements are as per the schedule 3. If it is as per the schedule 3, auditor does not have any problem at all. That is the basics of audit. The objective of the auditor is to obtain the reasonable assurance whether the financial statements as a whole are free from material misstatement, thereby enabling the auditor to express what? The opinion that the financial statements are as per AFRF. What is AFRF? AFRF is the framework which is adopted in the preparation and presentation of financial statements. In India, the AFRF is Schedule 3. You all know that. I told you the objectives as per SA 200. There are twofold objectives. The first one being to obtain reasonable assurance whether the financial statements are free from material misstatement. Thereby, the auditor can give his opinion. In the opinion, he is going to see what? Whether the financial statements are as per the applicable financial reporting framework. The second objective is he is going to report on the financial statements. He is going to report on the financial statements. He is going to report as per what? The communication will be as per the standards on auditing. So standards on auditing is for the auditor. You all are going to become the auditors of the future. So the standards on auditing is for all of you. Whereas in the financial statements, when the management is preparing the financial statements, the management will be doing what? As per accounting standards, as per the AFRF, that is accounts. They have to prepare the accounts. We are auditors. We will not be involved in the preparation process of the accounts. We will only give our opinion whether the financial statements are as per the accounting standards, that is the AFRF. Is that clear? Very, very clear till here. Yes, guys. This is the responsibility of management is done. Objective of auditor as per SA 200 twofold objective, that is also done. AFRF also we studied, that is a framework. Now comes benefits and limitations of audits. Benefit is in red, that means it is important for this attempt. Now what are the benefits? Whenever they say benefits, you remember stakeholders. Who are the stakeholders? The employees, the government, the shareholders, all of these people, banker, all the people who are interested in the organization are called as stakeholders. So the benefits of audit is basically, why am I doing the audit? To ensure that all the stakeholders know whatever is happening in the company. Because ideally the stakeholders are interested in the company, but they are not involved in the day-to-day operations. For example, you are buying shares of Tata. You can buy with Zerodha, you can buy Light App, is there, yes or no? You are buying shares of Tata. On a daily basis, how will you know whether shares are going up or down? You as a shareholder, you have to know. How will you know when the financial statements are presented? You will know. Will you directly accept a financial statement prepared by the management? No, you will look for auditor signature, whether it is a signed report, what kind of an opinion the auditor is given. You will see all of that, then only you will understand whether you have to invest or if you have already invested, whether you have to hold. All of those things you will know only then. So shareholders may or may not be involved daily. It is a moral check on the employees. Employees are also stakeholders in the organization. It is helpful for the government authorities. The manager is saying, sir, I am not paying tax because I am a loss-making firm. How will the government believe this? How will the government believe it? Only with the auditor's signature, the government is going to believe. There is also relied by lenders, relied by bankers. Audit is going to detect any fraud or error which happens. And if the internal controls are operating effectively, whether the internal controls are there, existence of internal control, and then whether they are operating effectively. All of these are the benefits of audit. See in the concept book also, the benefits of audit is right here. Audited accounts provide high quality information. It gives confidence to the users. In case of company, shareholders will not be involved in the day-to-day affairs. The financial statements are prepared by management who are consisting of the directors. But the shareholders are who? They are the owners of the company. They also need to know as to what is happening in the company. An audit acts as moral check on employees. If they do some fraud, when the auditor comes, they will get scared. So it also acts as a moral check for employees. Audited financial statements are helpful for all the government authorities. Audited financial statements can be relied by the bankers, lenders, and audit may also detect the fraud or error or both. Audit reviews the existence of the internal control and operations of the internal controls which is there in the entity. Hence, it is useful at pointing out the deficiency if there is any. These are the benefits of audit. What are the limitations of audit? Nature of financial reporting, nature of audit procedures. It is not in the nature of investigation, timeliness of financial reporting, and future events. These are the side headings for limitations of audit. What is the nature of financial reporting? Financial reporting means what? It is accounts. In your CA final, the paper number 1 is financial reporting, which is nothing but your advanced accounting. So nature of accounts is such that there are a lot of subjective decisions and judgment which is made by the management. If they say to provision of bad and doubtful debts 1 lakh, how do they know that it is bad and doubtful debts? Why they've created the provision? Maybe in 3 months, the debtor will give the money back. It is involving some kind of a judgment by the management, which has a subjective decision. Therefore, auditor will not be able to give an absolute assurance that the financial statements are free from material misstatement. Nature of audit procedures. There are practical and legal limitations on the ability of the auditor to obtain the audit evidence. What is the practical limitation? What is the legal limitation? Practical limitation is, as an auditor, if I go for L&T and do the audit, L&T has lakhs of invoices. Is it possible for me to go through each and every invoice by L&T? No. So what will I do? I will do a sampling basis. So there is a practical limitation that I will not be testing all the transactions and balances. I will only be testing the samples. What is the legal limitation? I am going and asking the management, sir, I want to check these sample basis and these bills you have to please submit to me. Then only we will be able to give the opinion. But management is saying, sir, you are asking for a bill. I also want to give you the bill. But I don't know in this dustbin room wherever it is you take, I don't know where it is. Like that, management may not be able to give the complete information what was requested by the auditor. There is no way by which auditor can force the management to provide complete information as it is requested by auditor. Nobody you can force in this world saying give me information, I want to know each and everything about you. Can you say that? No, even if you have a partner, can you say, I want to know each and everything about you? If you sit, you have to tell me. If you stand, you have to tell me. Make a call and tell me. Is it possible? Practically, it is not possible. So, auditor also cannot force. Management may not provide the complete information, whatever is requested by the auditor. It is not in the nature of investigation. Of course, audit is different. Investigation is different. Audit is only a reasonable assurance. This is not an official investigation. The timeliness of financial reporting. Now, today some data which you have has highest value, but through time, if you see, the intensity of the value of the data will reduce. So, the financial reporting also, it is done for 1 year. At that time, it might look important. When the shareholder is reading it, might not look that important. So the relevance of information decreases over time, and that itself becomes a limitation of audit. Future event. Okay, you made a signature saying everything is proper, but after 1 month, something bad is happening. Now, can the auditor be held liable for that? No. Future events also may affect an entity adversely. Adverse events may affect the ability of the entity to continue the business. It's a going concern itself might be affected. The business may cease to exist in the future due to change in market condition, emergence of new business model or products, or due to onset of some adverse events. Anything can happen in the future. Yes or no? In politics itself, we saw someone will come, but somebody else is coming. Now something is happening. Don't know whether they will come. Some other alliance might form. Anything can happen. So future event may affect an entity adversely. So these 5 are the limitations of audit, benefits and limitations. Audit requirement, whether audit is required for all. We saw that audit can be done for small, big, any legal firm, for whomever we can do audit, we saw. But is it a requirement? No, audit is not required for all. Audit is not mandatory for all. But it is mandatory under law for these people. Companies who are registered under the Companies Act 2013, mandatory for audit. Any banking company governed by Banking Regulation Act 1949, yes, audit becomes mandatory. Any statutory body required by a regulator or a specific act, audit becomes mandatory. For these people, it is voluntary. If they want, they can get their accounts audited. For proprietary, for partnership, for HUF, for these 3, audit is voluntary. But if it's a company registered under the Companies Act 2013, audit is mandatory. If there is an internal rule, they've told in the MOE itself that audit has to happen year on year, then audit becomes voluntary for them. If government is giving a grant, how will government give a grant based on some business? How will the government know that this business is existing in itself? Or government will ask for the sign of the auditor. So sanction of grant for any loan, banker has to believe, that also may require the audit. These are voluntary under law. So if they normally ask in a question, is audit mandatory for everybody? Then we should say audit is not mandatory for all, but under law it is mandatory for these people. It is voluntary for these people. Next is appointment of auditor and how the reporting happens and who fixes the remuneration. Now for companies, the appointment happens in the shareholders will appoint the auditor, where in annual general meeting. For government company, comptroller and auditor general. This is not controller, guys, it is comptroller. and auditor general will appoint the auditor. For the firm, the partners will appoint. So one basic thing which you have to remember is whoever is making the appointment, to them only the reporting also will be done. That is the reason why if you see in the audit report, to the members of Reliance Industries, to the shareholders of, like that it will be written. Why? Because the reporting is done to the shareholders. Why is the reporting done to the shareholders? Because the appointment is done by the shareholders. So one thing which you have to remember is whoever does the appointment, to them only we will also report. So for company shareholders, we will report. For government companies, C&AG, we will report. For the firm, to the partners, we will report. So audit report is submitted to the person who's making the appointment. Is that clear, guys? Audit versus investigation. See here, both audit and investigation are under assurance engagement and under historical financial statement. Both are with respect to the past only, that is historical financial statements. Investigation gives an absolute assurance, audit only gives a reasonable assurance. Reasonable assurance means something less than 100%. That means it can be 99%, 98%, 99.99% is still reasonable assurance, that is audit. For investigation, that is absolute assurance, it will be 100% assurance. That means they will dive even more deeper. That is investigation. For audit, we have standards on auditing. The next one, what is historic versus prospective financial statements? Historic means past, prospective means financial information for the future. See here, for historical financial information, the definition is, it means information is expressed in financial terms of entity from entity's accounting system about events which occurred in the past period, about conditions at points in time in the past. Of entity from the entity's accounting system about events which happened in the past, about conditions at points in time in the past. This is historical financial information. If you see prospective financial information, it means financial information based on assumptions about events that may occur in the future and possible actions by entity. So assumptions about events that may occur and any possible actions which can be done by the entity. This can be a projected financial statements or a forecast or a budget, something like that is prospective financial information. The practitioner, that is the auditor, may obtain sufficient appropriate audit evidence to the effect that assumptions are not unreasonable. Of course, if you're talking about the future, there has to be some assumptions which you have to make. These assumptions are not unreasonable. What is the basis of these assumptions? Presented and all material aspects are properly disclosed. It relates to future events. Auditor is not in a position to express an opinion. He provides only a moderate level of assurance. Of course, for something which happens in the future, how can we give a 100% assurance on that? There can only be a moderate level of assurance. He cannot give an opinion saying this is only correct, this only will definitely happen. We are not astrologers, correct? So that is the reason why he is in a position to express, he is not in a position to express an opinion. He can only give a moderate level of assurance. What is the difference between historical and prospective? Information expressed in financial terms about economic events or conditions and circumstances occurring in the past periods is called historical financial information. Prospective financial information means financial information based on assumptions about the future events and possible actions. This is historical and prospective financial information. Qualities of auditor. How should the auditor be? It is in red. That means it is extremely important. The auditor should know that whatever he is seeing is of financial matters. If financial matters, that means the management is only doing the preparation and presentation of financial statements. In that case, human fallibility is possible. Errors and fraud are frequent. That means he has to be extra careful. How he will be extra careful? By using all these things: tact, caution, firmness, good temper, integrity, discretion, judgment, patience, clear-headedness, reliability. These are some of the qualities that an auditor must have. If the auditor is there, he should be a good businessman because he has to understand the business. If you have to audit something, you have to understand what you're going to audit. So he has to make a good businessman. He should have a shine of good culture. He should have highest degree of integrity. He holds a position of trust. He he has expert knowledge and exhaustive knowledge of accounting in all its branches is the sine qua non of the practice of auditing. He should have complete knowledge of accounting. Then only he can become a good auditor. So qualities of auditor, you should write about tact, caution, firmness, good temper, integrity, discretion, judgment, patience, clear-headedness. All of these are good qualities to have for the auditors. As an auditor, what is the duties in relation to engagement and quality control standards? See here, you will understand with just these 5 points. What is the duty for the auditor in relation to the standards, engagement and quality control standards? It is the duty of all the professional accountants to go as per the standards. Here it is given in the concept book. Duties in relation to engagement and quality control standards. It is a duty of professional accountants to see that standards are followed in the engagement which is undertaken by them. Specific procedures as required in the standard if it is ineffective. Now say for example, now a standard is going to say, for example, now I say 520 is going to say you have to go and do an inquiry at this point. But when you did the inquiry, you understood that it is going to be ineffective. So it is required to document how the alternative procedures are performed. Okay, inquiry did not work. Now I have to do something else. Okay, I will go and do an observation. I will go and do a re-performance. That is an alternative procedure that the auditor is doing. Now, what is the reason for departure? That also has to be documented, and mere disclosure does not absolve a professional accountant from complying with the accounting standards. So here clearly duties in relation to engagement and quality control standard, it is the duty of the accountant to follow the standards. However, if a specific procedure is ineffective in a particular engagement, then he is required to document how the alternative procedures which is performed is going to achieve the purpose of that procedure, and he also has to document the reason for the departure. It is also to be noted that a mere disclosure does not absolve a professional accountant from complying with accounting standards. When you saw here, it looked very easy, correct? Because this is the keywords that you have to write and frame your own sentence. It is the duty of professional accountants is given here. Now you have to frame it as it is the duty of professional accountants to see that the standards are followed in the engagement. A situation may arise where a specific procedure is becoming ineffective. In such a case, he has to document as to how an alternative procedure can be performed to achieve the purpose. Also, reason for the departure has to be documented. This is duties in relation to engagement and quality control standards. Now, why standards are needed? This is the question I know every student is also thinking. Why, ma'am, we have so many standards in auditing? Why are these standards needed? It is extremely important, guys. Why are standards needed? Now, say for example, if I'm going to tell you, you make biryani. I love these examples. Biryani example. You make biryani. You will simply put cooker, rice, ghee, water, some vegetables, and you will say, this only is biryani. How I can accept that? I will tell you, definitely you have to put meat inside. Definitely you put at least soya chunks inside. Paneer and all, you do it. I'm not saying you don't do it, but please don't call it biryani. You call something else. You call it pulao, you call it veg rice. Anything is fine. But don't call it biryani like that. I'm setting the rule for you to call a biryani. Same way, when you go and do audit, you have to do it a specific way only. Then only it is called audit. So here, we have to do audit at par with global practices. You are improving the quality of financial reporting. There is some kind of a uniformity. Professional knowledge and skill is there, and quality. If you see here, there are 2 quality points. Why are standards needed? There are 2 quality points. The quality of financial reporting, audit quality. When you say quality of financial reporting, that means financial reporting is nothing but accounts. The way you are accounting, the quality has to improve. The way you are auditing, that quality is also has to improve. So 2 points with respect to quality in itself. Next 2 points is respect to uniformity and global practices. Then you as an auditor, you should have the required knowledge and the required skill. So why are standards needed? There are 5 points that you have to remember. 2 are with respect to quality itself. 2 are with respect to uniformity and global practices. And the last one is professional knowledge and skill. Is that okay? With that, the chapter number 1, that means 4 to 8 marks has come to your pocket already with just these 12 questions, guys. Moving on to chapter number 11, just 9 questions and 8 marks from this chapter in itself. That's the reason why I said you have to come in the same flow as to how the expected questions is given. Small questions, big marks. That's the reason I've kept it like this. Just 9 questions. Be with me and secure that 8 marks, guys. Now, first question, EL is what? Engagement letter is what? It is sent by whom? What are the contents of engagement letter? They could also ask a sample engagement letter. Now, when I was doing my articleship with KPMG, almost every other day, in fact, my first job as an article in KPMG was to do a EL, was to do an engagement letter. That means me as an article, I'm doing for whom? For my partner, who is the auditor. Yes or no? So the auditor is preparing the engagement letter. It is sent by the auditor to the client. One question done now. What is it? Why are they doing this? So that the terms between the auditor and the client are set and both of them are aware of the terms. Now see here, the auditor and client should be clear about the nature of the engagement. It must be reduced in writing. Engagement letter is always in writing. You can't make a phone call and say, hey, these are the terms of the engagement. It should always be given in writing and it should exactly specify the scope of work that the engagement letter is done. Now, the engagement letter is sent by the auditor to the client. The reason why I told my story is because I don't want you to miss this part. It is always sent by the auditor to the client. Engagement letter includes the objective of the engagement, scope of the engagement, responsibilities of both the parties, that is responsibility of auditor and responsibility of the management, what is the applicable financial reporting framework, the expected form and the content in which the audit report will be given. All of these will also be there. What? Sent by whom? Contents. What is the objective of auditor as per SA 210? One thing, guys, this engagement letter, if a law or regulation is giving the engagement letter, now as per the law, the auditor is being appointed and the law itself is saying these things are the duties. And the client also has understood that then an EL in writing may not be required if the auditor feels that the management also has understood the responsibilities. That only is given here in red. If law or regulation prescribes in sufficient details the terms of the audit engagement, then the auditor need not record them in written agreement except for the fact that such law or regulation applies and the management acknowledges and understands the responsibility. If the auditor feels that the management have understood the responsibilities, then again they don't have to have an engagement letter. What is the objective of auditor as per SA 210? We will see now. See here, as per SA 210, usually if someone comes and says, I love you. Now what you will say? You will say yes or no, accept or reject. Usually the terminology accept or reject will be used, but in SA 210, if you see, the objective is accept or continue. It is not reject, it is continue. That means what? The acceptance will be done for new client, the continue will be done for existing client. So here SA 210 itself is talking about what? Whether I have to accept the client or continue the client. So the objective, the first objective is accept or continue an engagement. When will you do it? Only when the basis upon which audit is to be performed has been agreed. How are you going to agree? Through the preconditions you are going to agree. There has to be a common understanding between the auditor and the client that the preparation of the financial statements must be as per accounting standards, that is the AFRF. There must be an internal control in place and the management must provide all information, and if there is any additional information, that also the management has to provide. And if the auditor wants to go and interview a few people in the organization, that also has to be given unrestricted access to all the people as part of the organization. So the objective as per SA 210, if they are, start off with accept or continue an engagement. Only when the basis upon which the audit is to be performed has been agreed through the preconditions. There has to be a common understanding between preparation of financial statement, internal control, and to provide information. How the information can be provided, access to all information. If there is any additional information which is required by the auditor, that also must be given. And unrestricted access to all the people in the organization must also be there. That is the objectives. Is a written agreement required if law or regulation specifies? We have already seen this. If a law or regulation prescribes in sufficient detail the terms of the audit engagement, the auditor need not record them in a written agreement. However, the management has to acknowledge and also understand the responsibilities of the management. What is this 4 cases? Actually, few people also messaged me, ma'am, you've given 4 cases. What is those 4 cases and all? Now, here in my concept book, I always start off with the mind mapping, guys, because it really helps you to understand what the standard is saying. Essay 210 is actually talking about the objective, that is accept or continue. The engagement letter, who gives the engagement letter, for what is the engagement letter given, and all of those things, and contents. The third Roman number is the cases. There are 4 different cases where each of these can be a separate case study in itself. Now, what are these 4 cases saying? What happens if a precondition is not there at all? If there is a limitation on the scope prior to the acceptance, before accepting itself, I know that there is a limitation on the scope of audit that I'm going to do. Change in terms of audit engagement. Now, after accepting, they're asking for changes in terms. Recourse for auditor in a situation of non-agreement. I'm unable to continue with the audit. In that case, there is a recourse for auditor. What is it? So, these 4 cases can be a case study in itself. Say, for example, they will say this company name, this company is in the nature of this business, this auditor name they will give, and they have the engagement letter in hand which is signed on this date by the client, this date by the auditor, and they've started the engagement also. After a few days, then the management came and said that he wants to change the terms. In that case, you immediately have to come here to this case. That's why I said each of the 4 cases can be a separate case scenario based question, can be a case study in itself. Now see here, what are the 4 cases? What happens if preconditions for an audit are not present? If preconditions are not there, discuss the matter with the management. Unless it is required by law or regulation, the auditor will not accept if the financial reporting framework to be applied is unacceptable. He is not doing as per Schedule 3. Then you will normally not accept, but law or regulation is the master. Unless required by law or regulation do so, the auditor shall not accept the financial reporting framework to be applied is unacceptable. The management is not understanding the responsibility. Management is thinking auditor only will do the financial statements. Auditor only will do the presentation of financial statements. Is that correct? If management has not understood the responsibility with respect to preparation of financial statements, internal control, and providing access to all information and unrestricted access, then in that case, then the auditor has to discuss the matter with the management. Unless required by law or regulation, the auditor need not accept this kind of engagement where financial reporting framework is not proper and management has not understood the responsibilities of the management. Then they will not accept. Are you able to understand? But if law or regulation says, they will accept, because law or regulation is the master of all. They are in the top position. Now, what happens if preconditions are not present? You have to start your answer with discuss the matter with the management. Then you talk about the law or regulation. He is not going to accept if there are these 2 points. Case number 2. If auditor believes a limitation will result in disclaimer of opinion, I know that if I accept this engagement, I'm not going to get any information. There is not going to be any sufficient appropriate audit evidence. I'm going to give you a disclaimer of opinion. Then in that case, now itself I know, don't accept a limited engagement. The auditor shall not accept a limited engagement. I told you the case about change in terms of audit engagement. Whenever they talk about change in terms of audit engagement, the key terminology that you have to use is reasonable justification. Now, just because they are saying you have to sign everything and you have to follow this only. Now, maybe there is a genuine reason in the client side as to why they are asking for changing in the terms. There is a reasonable justification. If it is yes, then you will accept. If there is not a reasonable justification, then you will not accept the engagement, that is, reject the engagement. recourse in a situation of non-agreement. That means you are not able to continue this engagement also. For change also, the management is not cooperating. Then in that case, there is no agreement between you and the management. In that case, you only have one option, that is to withdraw from the engagement. But whenever there is a withdrawal from the engagement, you will have to see whether you have to report to the owners, TCWG, or any regulators. That means SEBI is a regulator. See whether you have to report to these people, and then you withdraw from the engagement. Is that clear, guys? So recourse in a situation of non-agreement, you can withdraw. But determine if there is any obligation to report to the owners, TCWG, or the regulators. These four are the cases that you have to know. The next one is respect to ethics, principle versus rule-based approach. Now, what is this principle-based approach and rule-based approach? Now, before I go to the answer, I will give you a small example. Now, boyfriend, girlfriend are there. Now, girlfriend is saying, hey, one thing which you should never do, only one thing, only one rule which you should never do. I hate people who are smoking. I hate people who are doing cigarettes. Now the boy is saying, hey, promise on anybody, in my life I will not touch the cigarette. What that boy is doing? Promise on anybody, in my life I will not touch the cigarette. After few days, the girl is finding out, after marriage everything. Now the girl is finding out that boy has habit of doing some, what is that called? Drugs. He is smoking drugs. Now the girl is coming and saying, hey, you promised me, saying, I told you first itself, I don't like this cigarette habit and all. Now you're doing this. Now boy is asking, you tell me what you don't like? Cigarette. What you don't like? Cigarette. Did I touch it? I told, promise I will not touch the cigarette. Now what the boy is trying to do? Is he following the rule? Yes. In paper, he is following the rule. But did he understand what the girl was actually trying to tell him? The girl was actually trying to tell him, I don't like anybody smoking, whether it is cigarette. I don't like bad habits. Any kind of bad habits, I do not like. That is what the girl was trying to tell. But he understood it as, I will not smoke the cigarette. Now, this is a rule-based approach. If he has understood what the girl is trying to tell, that is principle-based approach. Are you able to understand? I followed the rule. You said no to cigarettes. I did not touch the cigarette. I am doing only drugs. That is, I followed the rule. Rule-based approach. But I understood the rule and I am implementing it properly. That is principle-based approach. See here, principle-based approach is the spirit of ethics. Professional judgment in every situation based upon their professional knowledge, skill and expertise. Professional judgment to evaluate every situation to arrive at the conclusion. Here I am using the professional judgment and there is spirit of ethics here. What is rule-based approach? You told the rule, I followed the rule. Established rules, strictly adhering to the rules. What conclusion you want? I follow the rule. That's it. Rule-based approach is somewhat rigid as it may not be possible to deal with every practical situation. Now, the example is making you understand what the concept is trying to tell. That is principle versus rule-based approach. What is this professional skepticism? What examples of professional skepticism? It reduces the risk of what? Professional skepticism is basically having that extra skill to find out mistakes. Now, girls usually have this, yes or no? They have some kind of an extra skill to find out if there is any mistake. Now, say for example, the boy is saying, hey, I don't have any friends who are girls. Correct? This is an enquiry which is made and the boy has given a statement saying, I have no friends who are girls. Now the next day, there is some, in the button there is a long hair. The girl is seeing. Now this is inspection. When you did the inspection, in the button long hair is coming. When you did enquiry, he is saying nothing is there. So one audit evidence is contradicting another audit evidence. If you are being shrewd only, you will be able to find out the other audit evidence. That is the professional skepticism. It is the innate nature of girls where we keep questioning the reliability of whatever you are saying, questioning the reliability of documents, possible fraud, need for the audit procedures. The professional skepticism means being alert in circumstances. When you are being alert in circumstances, it reduces the risk of overlooking unusual circumstances, over generalizing, and seeing the inappropriate assumptions that you are making. See, in the concept book also, very, very important, professional skepticism. I will show you here. Professional skepticism refers to an attitude that has a questioning mind. That means being alert to conditions which may indicate possible misstatement due to fraud or error, and a critical assessment of audit evidence. Example, audit evidence that contradicts another audit evidence. Information that brings into questioning the reliability of documents. Conditions that may indicate a possible fraud. Circumstances that suggest the need for audit procedures in addition to whatever is already there required by standards on auditing. Maintaining professional skepticism is required throughout the audit. If the auditor has to reduce the risk of overlooking unusual circumstances, overgeneralizing when drawing conclusions, using inappropriate assumptions in determining the net of audit procedures and evaluating the results thereof. This is professional skepticism. What are the principles of ethics and threats to independence? Principles of ethics is what? Principles of ethics is basically copy. What is copy? COPPI, confidentiality, objectivity, professional competence and due care, professional behavior and integrity. What is confidentiality? Whatever relationship is between the auditor and the client, whatever information that they are sharing is completely confidential. Respects the confidentiality of information acquired as a result of professional relationship. Only because you have the professional relationship, they are sharing all that information. This is confidentiality. Objectivity. Bias, conflict of interest or undue influence must not be there for the auditor. Professional competence and due care. The knowledge and the skill must be there with the auditor. Professional behavior. The auditor should not do anything that is going to discredit his profession. Integrity. The auditor must be straightforward, honest, he should be truthful, he should do a fair dealing, and any information which contains a materially false or misleading information, he will be able to see that. So that is copy, confidentiality, objectivity, professional competence and due care, professional behavior and integrity. What are the independence, threats to independence? There are 5 threats to independence. That is self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat. I have given the examples in each of the threats because each of the example can be a case study and they can ask you to find out what kind of threat is this. Say for example, they say the auditor has given a loan or a guarantee for the client. So loan or guarantee is an example of self-interest threat. Deals with shares or securities of the client, then it is advocacy threat. It is a close relative of the client, then familiarity threat. There is a long association between the auditor and the client, familiarity threat. So each of the examples can be a case study. So under self-interest threat, direct financial interest or indirect financial interest, automatically I will have an interest in the company in itself. I have given a loan or a guarantee. Unique dependence on the client's fees. Close business relationship. See here, close business relationship is a self-interest threat, but long association or close relative is a familiarity threat. In business itself we are close, that is self-interest. Potential employment is there. Contingent fees, that is self-interest threat. Self-review threat. Review of any judgment or conclusion reached in a previous audit or non-audit engagement, or when a member of the audit team was previously a director or senior employee. What are they going to say? Self-review means I only did the work, I am only reviewing as auditor also. That means I was part of client initially. I only prepared and presented the financial statement. Now from that company, I moved to KPMG. Now KPMG is becoming the auditor. Now he is the partner in KPMG now. Who did the preparation presentation? He only did the preparation presentation previously. So review of judgment or conclusion reached in previous audit or non-audit, or when a member of audit team was previously a director or senior employee, then it becomes a self-review threat. Previously I was director, right now I am the auditor. So I prepared previously, now I am auditing. I only prepared, I am only reviewing. That is self-review threat. What is advocacy threat? Promote or is perceived to promote, as if it is his own. He is becoming like an advocate for the client. He deals with the shares or securities. Clients advocate in litigation and third party disputes. These three are for advocacy threats. Familiarity, long association, we're together for too long. Former partner. Previously, I was the partner. Right now, I joined the client entity. So, now whoever is a partner will be my junior only, no, previously. So, I know him very well. That is familiarity. Say, first, I was part of client. Then, I became part of audit team. This is what? Self-review threat. Are you able to understand? First, I was part of audit team. Then I joined the client later. This is what? Familiarity threat. Because now as a client, I know who is going to be my auditor. They will be my juniors only, or they will be my peers only. So it becomes a familiarity. I have a long association already with them. So former partner, acceptance of significant gift or hospitality. If lots of gifts are being exchanged between them, usually clients will give gift to the auditor. Lots of gift. Every time I go, one iPhone, one iPad, one MacBook. So all of these things will lead to familiarity. And this is the reason as to why they have something called as cooling period for the auditor. 5 years I will work. Again 5 years I can be appointed for the auditor. Then I need to have a cooling period of 5 years. Yes or no? The rotation of auditors is basically there for the familiarity threat only. This is threat number 4. Threat number 5 is intimidation threat. Auditors are deterred from acting objectively. They kept a knife here and they said, hey, put the sign. They are intimidating me. Or they're saying, sir, if you want to put the sign, otherwise I'll just change the auditor. Threat of replacement. That also is a intimidation threat only. So these 5 are threats to independence: self-review threat, self-interest threat, advocacy threat, familiarity threat, and intimidation threat. Principles of ethics and threats to independence is done. Now under SA 220 and SQC 1, it is given in red. That means it is important. Now what is SA 220 and SQC 1? You have to first understand the basics of it. See here, the audit is first of all done to give an assurance to the people who are reading the audit report. Now, whenever I'm giving the assurance, the audit quality has to be high, correct? We already spoke about the quality of audit. Now, how are we going to measure that audit quality? For quality, these two standards are there, that is SA 220 and SQC 1. Standards on quality control 1 applies to all engagements, that is audit, review, other assurance engagement, whatever it is, SQC 1 applies to them. If it is an audit engagement, then standards on auditing, SA 220, is applied for audit engagement only. So SQC 1 has a broader purview, SA 220 has a narrower purview, because SA 220 is specifically for audit. SQC 1, is it not for audit? No, it is also for audit. Audit plus other things also are there for SQC 1. Now just see here. For SQC 1 and SA 220, these 6 pillars are there: leadership responsibility, ethical requirements, acceptance and continuance of client, assignment of engagement team, engagement performance, and monitoring. In the expected question list, we have 2 questions, that is human resources and monitoring. So quickly we will just go through the human resource part and monitoring part. Now, whenever they ask a question about SQC 1, the answer should always start with the firm should establish policies and procedures, because this is for the firm as a whole. Firm should establish policies and procedures. This is the keyword. Everywhere, the firm should establish policies and procedures. SQC 1 requires firms to establish policies and procedures. This is how you're going to start off with. So under human resources, the firm is going to establish policies and procedures designed to provide a reasonable assurance that it has the sufficient people with capabilities, competence, commitments in accordance with professional standards, regulatory and legal requirements. When it comes to SA 220, now they're talking about audit engagement. Now for the audit engagement, there will be one engagement partner, there will be multiple team members under that engagement partner. So engagement partner will ensure that the engagement team members, along with any expert which is being deployed in that engagement, they have the collective competency and capability to perform the engagement in accordance with the professional standards. Here it is professional standards, regulatory and legal requirements. Here it is professional standards because it is only SA 220. Is that clear? Here we talk about engagement partner, engagement team members. Here we talk about policies and procedures for the firm in itself. This is human resources. For monitoring, again for SQC1, how will you start? The firm will ensure the policies and procedures relating to the system of quality control is relevant, adequate and operating effectively. It should also include periodic inspection of selection of completed engagements. Here, engagement partner should document the following pertaining to audit engagement: any issues which is identified with respect to compliance with ethical requirements, conclusion on complaints, conclusions regarding the acceptance and continuance of client. Is that clear? Engagement partner is going to document all of these things with respect to monitoring any issue which has been identified. What are the conclusion on the complaints? Any conclusions regarding acceptance and continuance of client? All these has to be documented. This is how they are going to monitor whether the quality is being proper in the organization, whether it is for the entire firm as a whole or whether it is only for audit team. That is engagement partner plus team, engagement team along with the experts. Are you able to understand? If they're talking about engagement partner and all, then mostly they're talking about SA 220. If they talk about firms, policies and procedures, then they're talking about SQC1. We are completed with SQC1 and SA 220, these two questions also. And with that, the chapter number 11, 8 marks has come to your pocket, guys. Chapter number 6, that is SA 230, audit documentation is actually a question that ICA loves to ask, guys, because documentation is not only there here, it is also there in SA 300, it is also there in SA 320. There are multiple other standards also who talk about documentation in general. So here, only with respect to SA 230, I have given 6 questions. The first one is definition of audit documentation. What is the objective and purpose of having the standard SA 230? And audit documentation includes what? So definition of audit documentation. Now documentation means what? Whatever is happening, I am writing and keeping. It is like my summary of things that I have done. As an auditor, what are the things that I do? I go and do my audit procedures. I collect all the evidences and I'm going to come to conclusions based on the evidences that I observe. Now audit documentation refers to audit procedures performed, audit evidences obtained and the conclusions that the auditor has reached, which is recorded on paper, that is paper and pen. I can record this also is documentation, or I can record it in iPad like this. I can keep writing. Electronic or other media, that also is documentation only. But this audit documentation is not a substitute for accounting records. How it can become a substitute for accounting records? Accounting records is completely different, which is prepared and presented by the management. We already know that. Audit documentation is something which the auditor does. He writes down what and all he is doing. This has to be done at a timely basis. Yes or no? In my class, usually after the class is done, we write something called as summary notes, correct? That only I have actually given it here for every standard. The keywords in every question, we write it as a summary notes. Now, after every standard, if I say we have to write the summary notes, it becomes easy. If I finish 10 standards and now I say, now let's write the summary notes of all the 10 standards, you all become mental. Yes or no? So that time when it gets over, we have to finish it. So audit documentation also, that day's work, you have to finish that day itself. So it is a timely process where you keep documenting the procedures that you perform, evidence that you obtain and the conclusions that the auditor has reached. Definition, objective and purpose. Now, the objective of the auditor is what? To prepare audit documentation that is sufficient and appropriate record. This becomes the basis for the audit report in itself. Now, we all know that the auditor has to do his audit in a uniform way. That means the way I do audit must be similar to any other auditor. That's the reason why we have standards on auditing. Now, what is a proof that this auditor has done the audit as per standards on auditing? The audit documentation is the proof. So the audit was planned and performed as per the standards on auditing itself. Now they're not only talking about performance here, but they're also talking about planning an audit, because planning an audit is also as per SA 300 only it has to happen. So whether it has done as per SA 300, how will we know? Once we see the audit documentation, we will know. So the objective is basically sufficient appropriate record for the basis of audit report, evidence that audit was planned and performed in accordance with standards on auditing. Now, why do I need this? What is the purpose of audit documentation? Now, this assists the engagement team to plan and perform the audit. Assists the members of the engagement team to direct and supervise the audit work. Enabling the engagement team to be accountable for its work. Retaining a record of matters of continuing significance of a future audit. So, basically, I'll tell you what will happen in practical scenarios. When I went for my first audit, my partner told me, you please read the audit documentation which was done for the previous year so that you have an understanding as to how the audit was done in the previous year. You will also do it similarly for the current year. So the previous year audit documentation was like a standard which was set for me even before I went to the audit. Same way, when I went for audit, I will do all the audit procedures that I performed, all the evidences that I obtained. That will become a framework for all the future audits. So retaining a record of matters is significant for future audits. Enabling the conduct of external inspections. Now say for example, whether the auditor has done the job, ICA will want to come and see. Now if ICA wants to come and see whether I have done my job properly, how will they see? They will see the documentation as to what are the procedures that I have done. Now this is for quality purpose. Quality in a sonnale standards on quality control 1 must come to your mind. Purpose of audit documentation is assist the engagement team. It assists the members of the engagement team. Enable the engagement team to be accountable. So there are 3 points with respect to engagement team in itself. What are the 3 points? Assist the engagement team to plan and perform the audit. Assisting members of the engagement team to direct and supervise the audit work. Enabling the engagement team to be accountable for its own work. Then comes recording for future audit, enabling conduct of external inspection. Now this is as per SQC 1. Audit documentation includes claims. What is that claims? Claim stands for CCL. AAIMS, correspondences between the auditor and the client will form part of audit documentation, including email concerning significant matter. Another C is checklist. L, letters of confirmation and letters of representation. A, analysis. Another A, audit program. Audit program will be done by the auditor itself to do the tick mark activity in SA 300. You would have studied about audit program. That also will form part of audit documentation. IM is issues memoranda. If there are any issues that I am identifying, I will make a summary of those issues. That is the issues memoranda. Any important matters, the summary of any significant matters, that will also be part of the audit documentation. So audit documentation includes claims, correspondence, checklist, letter of confirmation, letter of representation, analysis, audit program, issues memoranda and summary of significant matters. You should be able to write everything. Audit documentation includes claims. IM is issues memoranda, S is summary of significant matters, A is what? Analysis, letter of representation, correspondence is checklist. Form, content and extent of audit documentation depends on what? In documenting the net of audit procedures performed, auditor shall record what? Significant matters and inconsistency they are asking. Basically, what is the audit documentation depending on how should be the form, content and extent of audit documentation they are asking. Form, content and extent of audit documentation, I already told you the timing is such that it has to be done at a timely basis. Now, how deep, how detailed should the audit documentation happen? Now, if I am doing the audit documentation, that is all the audit procedures that I did, all the evidence that I did, I am writing the diary as to what and all I have done. Like how we write journal. Now, all Gen Zs are doing journaling activity and all of those things. Correct? At the end of the day, you write like diary. Those days we call it diary. These days we are calling journaling. What we do at the end of the day, whatever happened in the day, we write it down. Yes or no? How deep You have to write that down. An experienced auditor who has no connection with the audit must be able to understand what are the procedures which has been performed. If they is able to understand, that level is sufficient. The auditor shall prepare audit documentation sufficient to enable an experienced auditor having no previous connection with the audit. He has to understand what is the nature, extent and timing of the audit procedures performed. What is the audit evidence that has been obtained? Is there any significant matters arising, and what are the conclusions that is reached with respect to the significant matters? The auditor has to document in such a way that an experienced auditor having no previous connection with the audit. Now, why this terminology experienced auditor is given? Say, for example, they're saying an auditor will prepare audit documentation that is sufficient to enable an auditor. Now, yesterday only I cleared my exam. Today I am a chartered accountant. Now, I might not understand. That is the reason why the standard is specifically saying an experienced auditor having no previous connection with the audit must be able to understand these three things: the significant matters, results of the audit procedures performed, and nature, extent, timing of audit procedures. Further, in documenting the nature, extent, and timing of audit procedures, here we saw net of AP, star was there, so this only is given here. Further, in documenting the nature, extent and timing of audit procedures, the auditor shall record the identifying characteristics of the specific items or matters tested, who performed and the date of completion, who reviewed and the date of review. Discussion regarding significant matters, the nature of the significant matters, when and with whom the discussions took place, that also has to be documented. Inconsistency regarding the significant matter. If something is inconsistent, if it is inconsistent with the final conclusion in itself, then document how as an auditor you have addressed that inconsistency. Did you do further audit procedures? Did you leave it like that? How did you address that inconsistency? You please document that also. Now see here. Form, content and extent of audit documentation is a beautiful question. The auditor will prepare the audit documentation such as who will understand? An experienced auditor who has no previous connection with the audit is able to understand three things: net of audit procedures performed, results of the audit procedures performed, that only is the audit evidence, and significant matters arising and the conclusions reached. Now that net of audit procedures performed, what they are saying, the auditor will record identifying characteristics of specific matters, who performed and who reviewed. Here we saw significant matters arising and the conclusions reached. Respect to the discussion regarding significant matters, the nature of the significant matters, when and with whom you discuss these significant matters. If there is any inconsistency regarding the significant matter, then what is the final conclusion of the auditor? Is it inconsistent with whatever he has found? Now you please document that also as to how as an auditor you address the inconsistency. Form, content and extent of audit documentation is the question. Do not forget the question. Now, if they ask form, content and extent of audit documentation depends on what factors. Factors is the key word in the question. If you see that, then you come to this answer. If factors is not there, if they just ask form, content, extent of audit documentation depends on, see, it's a twist question. 2 and 3 are twist questions, similar questions. Form, content, extent of audit documentation depends on means you will write these points, what we just saw right now. It depends on whether the it is sufficient to enable an experienced auditor having no previous connection with the audit to understand these three things, yes or no. Now the factors, if they ask form, content, extent of audit documentation depends on factors such as, factors means how deep I have to go and document the audit documentation. Now the size and complexity of the entity is going to tell me how detailed my documentation has to be. Big entity, obviously documentation also will be detailed. Size and complexity, entity is too complex, that time documentation must be extra. Nature of the audit procedures performed, identified risk of material misstatement. If it is too risky, then documentation also will be high. ROM is low, then documentation also will be low. Significance of audit evidence obtained. I received an audit evidence which is extremely important for my opinion, so audit documentation in that area will be high. The importance is not that much, then I can reduce my audit documentation at that extent also. Nature and extent of exceptions identified. Lots of exceptions, record each and everything. document each and everything. The audit methodology and the tools used and the need to document a conclusion is high, then obviously you'll document much more. So if they ask factors, then you will go to the extent of audit documentation depends on the size of the entity, complexity of the entity, nature of audit procedure, identified raw materials, significance of audit procedure, audit methodology, tools, and need to document a conclusion. If they ask form, content, and extent of the audit documentation, timing, and all, if they ask, and the auditor shall prepare audit documentation that is sufficient to enable the experienced auditor who has no connection with the audit, she should be able to understand net of AP, results of AP, significant matters. For net of AP, the auditor will record identifying characteristics of specific items, who performed, who reviewed, what is the date of performance, what is the date of review, and all of those things. Is that clear? Factors is the keyword which you have to remember for this answer. Now actually guys, keyword is there in question also. We are thinking keyword is there only in answer, but for which question, which answer you have to write, that is extremely important. So keyword in question, please note form, content, and extent. If it comes immediately, the word you have to look for is factors. If it is factors, then you will go off to this answer. Clear guys? The next question is audit file, timing, and 3 cases. What is audit file? Audit file will be defined as one or more folders or other storage media. One or more folders or other storage media. Now here they are talking about file. In answer, they're talking about one or more folders. I want you to think of in 12th standard, 11th standard, you will have a file like you can open it like a fan, correct? Some box file, I think it is called. Have you seen that box file? I will show you how it will look. Box file. Yes, this one. Have you seen this organizer file? Yes, imagine audit file to be something like this file where you open, there are multiple folders where each folder in our 12th standard will be like a subject, correct? English means you keep in orange, Max means you keep in yellow, like that. You'll have multiple subjects where each of the folders inside the file will have different subjects. Now keeping this in mind, you please come here. Audit file may be defined as one or more folders or other storage media. Why I showed that is usually in our computer, inside the folder only file will be there. Files will be there. Excel file, PowerPoint file will be there inside the folder. I don't want you to think of that file. That's the reason why I showed you that box file and triggered your nostalgia on all. Audit file may be defined as one or more folders or other storage media. This can be in physical form or electronic form, containing the records that comprise audit documentation for a specific engagement. For each and every engagement, you will have an audit file. For each and every engagement, you will have an audit file. That means for audit engagement, have an audit file. Are you able to understand? For tax engagement, have a separate audit file. Inside each of the engagement, there will be multiple folders or other storage media. This can be in physical form or electronic form. Are you able to understand? So the documentation for that specific engagement is called as audit file. Inside the audit file, there will be one or more folders or other storage media. Timing of audit file. You will assemble as and when it happens, timely basis after the date of audit report. Shall assemble the audit documentation and audit file and complete the administrative process on a timely basis that does not involve the performance of new audit procedures or the drawing of new conclusions. There is a time limit for audit file, not more than, that means less than or equal to 60 days after the date of audit report. So once the audit report has been prepared, say for example 21st June is audit report, from here 60 days you can take. Calculate and tell. July, August, 21st of August, correct? So 21st of August to Kulla, you have before 21st of August, you have to finish your audit file. That is the timing of audit file. Not more than 60 days means less than or equal to 60 days after the date of audit report. After audit report, you can do the audit file. Changes to audit documentation during the final assembly process. That is a case number 2. Changes can be made to the audit documentation if they are administrative in nature. What is that administrative in nature? The standard itself has given a few examples. Deleting or discarding superseded documentation. Superseded means I have version number 2, version number 3, version number 4, version number 5. Version 5 is the final version. Version 1 to 4 I can throw it in that dustbin. I have superseded it. So deleting or discarding superseded documentation I can do even after what? During the final assembly process, because it is what in nature? Because it is administrative in nature. Sorting, collating, cross-referencing work papers can be done. Signing off on the completion checklist relating to the final assembly process can be done. Documenting audit evidence that the auditor has obtained, discussed and agreed with the relevant members of the engagement team even before the date of audit report. I got the evidence before the date of audit report, but right now only I am documenting. Then also it will be considered as administrative in nature. So changes to the audit documentation during the final assembly process can be done only if they are administrative in nature. For that administrative nature changes, 4 examples are given in the standard itself. If they ask in the exam, you are also going to exactly write these 4. Deleting or discarding superseded documentation, sorting, collating, cross-referencing work papers, signing off completion checklist relating to the final assembly process, and documenting any audit evidence that the auditor has received previously and agreed with all the members of the engagement team even before the date of audit report. That I am documenting right now. Is that clear? Now, this is the case number 2 with respect to changes in the audit documentation. Case 3, after completion of assembling the final audit file, SQC1 requires firms. SQC1 is sonale, what is the keyword that has to come in your mind? Policies and procedures. Requires the firm to establish policies and procedures for the timely completion for the assembly of audit file. The auditor will not delete or discard audit documentation before the retention period. What is the retention period? Minimum 7 years from the date of audit report or group audit report, whichever is later. Minimum 7 years from the date of audit report or group audit report, whichever is later. Here the words that they have used is no shorter than 7 years from the date of auditor's report, or if later the date of the group auditor's report. Is that clear? So after completion of the assembling of final audit file, SQC1 specifically says it requires firms to establish policies and procedure for timely completion of the assembly process of the audit file. For this purpose, the auditor will not delete or discard any documentation. He has to have it for the retention period. Retention period is given in SQC1, minimum of 7 years from the date of audit report or group audit report, whichever is later. Is that clear? Now, documentation of significant matters and related professional judgment. We'll finish off this. Who is the owner of audit documentation? Very, very easy. Who is the owner? Whoever writes it, they are only the owner. So SQC1 specifically says that audit documentation is the property of auditor. But if he wants, he can make portions available or extracts available to the clients, provided such disclosure does not undermine the validity of the work performed or the independence of the auditor or his personnel. Independence should not be compromised just because you're sharing the audit documentation work with the client. But the standard as such is not saying that you should not share and all. You can make portions of or extracts available to the client. However, make sure that it does not affect your independence as such. Is that clear? So who is the owner of audit documentation? SQC1 is saying auditor is the owner of audit documentation. Documentation of significant matters and related professional judgment. What you have to do with respect to significant matters and related significant professional judgment. Matters that give rise to significant risk, that is results of audit procedures indicating. Now, once you know that, okay, financial statements are materially misstated, there is mistake in the financial statement, that becomes a important matter, significant matter, documented properly. Now, previously I saw, okay, these places are risky. That is, the risk of material misstatement is high in these places. But later I understood ROM is actually much more than what I identified. Now you have to Revise your ROM. Now, if you revise your ROM, that is a matter which gives rise to significant risk. Need to revise the auditor's previous assessment of risk of middle misstatement. Significant difficulty in applying the necessary audit procedure. I want to do the audit procedures, but I'm unable to do. Reperformance, that is an activity I want to do. Recalculation, that is an activity I want to do, but I went to the client's place. He's saying, hey, get out of my office. Like that he's saying. How you will do the reperformance, recalculation activities? You are unable to do your audit procedures. Then that is a matter giving rise to a significant risk. You found something which is going to be the base as why you are going to modify your opinion. You found something which is the base as to why you are going to the emphasis of matter paragraph. Then that also becomes a matter which is going to be a significant matters which involves extra documentation. So matters which gives rise to significant risk. These three are the matters which gives rise to significant risk. Result of audit procedures indicating that there is a mistake or there is a need to revise ROM or there is significant difficulty in applying the procedure in itself, or you found something where there is a modification or EMP paragraph is there. Some examples of circumstances in which it is appropriate to prepare audit documentation relating to the use of professional judgment include where the auditor will be using the professional judgment, where the matters and judgment are significant, where judgment will be more high judgment. If it is there, then it becomes risky automatically. The auditor shall consider certain information or factors, and that consideration is important in the context of particular engagement. Reasonableness of the judgment, authenticity of the document, you will have to see all of these things, and based on this only you will be doing your documentation. What is completion memorandum or audit documentation summary? Now you saw these significant matters, correct? These documentation of the significant matters has to compulsorily be there in your completion memorandum. The significant matters identified during the audit must be there in the completion memorandum, and how they are addressed. What are the things that you are doing to address them? That also must be part of your completion memorandum. Is that clear, guys? Now with this, the chapter number 6 audit documentation essay 230 comes to an end. Now already if you see 8 plus 8 plus 4 marks, close to 8 plus 8 itself is 16, close to 20 marks is already in your pocket, guys. Just few questions we have done and 20 marks has come to your pocket. I hope you have full clarity on these questions with whatever we have completed right now. Yes, guys, let's go to essay 300. If you ask me, ma'am, which is the most important standard that I have to give full attention to, I would say it is essay 300. You have to read word by word. If they ask a question, do not make any mistake here. One standard, they always ask for 10 full marks. We've seen this attempt on attempt, and this time also in essay 300 they will ask for 10 marks, guys. And one of the most important part of essay 300 is the audit program for this attempt. That is the reason why the first 4 questions I have given with respect to audit program. Audit program, most important concept. Can even ask make a sample of audit program. Then you have to make a sample of audit program. Points to remember for audit program. Just see here. Yes, this is the audit program. First of all, for you to understand what an audit program is, my first client in KPMG was Daimler India Commercial Vehicles Private Limited, that is Mercedes-Benz. So how will me as an article know what to audit there? And my partner comes and tells me, hey, don't tell them that you're an intern, act like a chartered accountant. But how am I supposed to act like a chartered accountant when I wasn't one? So audit program is what actually helped me at that point in time, because this is like a series of verification procedures that I have to do. This is like step by step what I have to do when I enter the client office. So this is a detailed plan and consists of series of verification procedure. So in case if the audit program is going to read like check the inventory, do a physical counting of this inventory. Now I will go there and I will tell them, hello sir, I want to check the inventory. Today I am planning to do the physical counting. Then they will show me where the inventory is kept. Now I will do physical counting. The next point will be, have they done physical counting of inventory? What is the frequency of done? Now I have to ask the question, sir, what is the frequency that you do? So it is basically like a guide for me because I don't know audit. Now when I know also, there is a structure that I have to follow. Now this audit program will act as a guide for people when they go and do the audit. This is the series of the procedures that the auditor has to do. Now here points to remember for audit program. Evolving one audit program, not practicable for all the businesses. Yes, for each size, composition, nature of business, one audit program is not sufficient. The assistant has to keep an open mind. An auditor having regard to the nature, size and composition of the business and dependability of the internal control in given scope of work should frame a program that should aim for providing a minimum essential work that will be termed as a standard program. Periodic review of the audit program. You can't just do the audit program and say, okay, I will sleep, I will take care the later. You have to keep reviewing because each and every year, the way a company is operating will change. So you have to keep reviewing the audit program as well. These three are points to remember for an audit program. The next question is constructing an audit program. How will you construct an audit program? For the purpose of program construction, the following points should be kept in mind. Stay within the scope and limitation of the assignment. Always prepare a written audit program. Determine the evidence reasonably available and identify the best evidence possible. Apply only the steps which are useful in accomplishing the verification purpose, including the objectives of each and every area. Consider all possibilities of error. Coordinate the procedures to be applied to related items. This is the way you will construct the audit program. What are the advantages and disadvantages of audit program and how will you eliminate the disadvantages? Now, I had the advantage because a clear set of instruction was given to me. Now, if there is a major audit, what is the total work I will be able to see? And now when I get the full picture, I will be able to select the people for each of the work that is there. Now, without all of this, without writing it down, everything I will have to do a mental calculation and there is a possibility that I will miss out on few things. So, all of these are advantages. It provides a clear set of instructions. For major audit, it gives a total perspective of the work. The selection of the team members become easier. Without a written and predetermined program, work is carried out with a mental plan. Assistant, when they put the signature on the program, that means they have accepted the responsibility. The principal can control the progress of various audit and audit program serves as a guide to be carried forward in the succeeding year. The properly drawn up audit program serves as evidence in the event of any charge of negligence being brought against the auditor. Now, whenever there are advantages, there will be disadvantages also. The one disadvantage is work may become mechanical. Now you keep seeing, asking. So it becomes mechanical and really if I'm inefficient, no one will know that I'm inefficient because I will only be following the series of verification procedures. So inefficient assistant can take shelter behind the audit program. The program often is rigid and inflexible. Hard and fast audit program may kill the initiative of efficient assistants. These disadvantages can be eliminated by imaginative supervision of the work of the assistant. Auditor must have a receptive attitude as regards the assistant. Assistant should be encouraged to observe matters objectively and bring the significant matters to the notice of supervisor or principal. So it can be eliminated by these points. So this is advantages and disadvantages and how to eliminate the disadvantages. How to eliminate the disadvantage is given in red, guys. This disadvantage can be eliminated by imaginative supervision of the work. The auditor must have a receptive attitude to the assistant. Assistant should be encouraged to observe matters objectively. Bring the significant matters to the notice of supervisor or principal. So these 4 points you will write how they will eliminate the disadvantages of audit program. Overall audit strategy helps the auditor in determining what. It is given here in the first part of OAS, even before they start off with the points. Overall audit strategy sets the scope, timing, and the direction of audit and guides the development of detailed audit plan. The process of establishing overall audit strategy assists the auditor to determine, subject to completion of the auditor's risk assessment procedure. What is the question? Overall audit procedure helps the auditor in determining, assists the auditor to determine. Now, did you understand from how they are asking? Yes. Now, how are you going to remember this? Is all the 4 points that is given here is respect to resources, that is the human resources. The human resources which is required to deploy for specific audit areas, the amount of resources to allocate to specific audit areas, when these resources are to be deployed, such as whether as an interim audit stage or key cutoff date, how the resources are supposed to be managed, directed and supervised. Now all the 4 points are respect to human resources, how you are going to deploy for specific audit areas, amount to allocate for specific audit areas, when these resources are to be deployed, how these resources are to be deployed and managed. So all 4 points respect to the human resources. The question is, the process of establishing overall audit strategy assists the auditor to determine, subject to completion of risk assessment process, such as these 4 resources. Point. That's the reason here also we would have given overall audit strategy helps the auditor in determining all 4 points respect to human resources. Now, under overall audit strategy, identify the scope of objective. So, in the overall audit strategy, that is a high level strategy when you are doing, you will be considering these 5 factors. You will identify what is the scope, ascertain the reporting objective, consideration of significant factors in directing the team's efforts, considering result of preliminary engagement activity, net of resources which is required for engagement. In that, this question is a separate question in itself. Identify the scope of engagement. Identify the characteristics of engagement that define the scope. What are some of the characteristics? What is applicable financial reporting framework? What is the nature? Industry specific requirements. Expected use of audit evidence from the previous audits. These 4 points. These 4 are the keywords that you have to remember. Identify the characteristics of the engagement that define the scope. Some characteristics are as under: applicable financial reporting framework to the entity, nature of the business segments to be audited, industry specific reporting requirements, expected use of audit evidence which is obtained from the previous audit. This is the answer for this one. Overall audit strategy, identify the scope of audit engagement. Is that correct? The next one is benefits of planning the audit. Now here this is an easy answer why planning is necessary or benefits of planning. Why you have to plan? Only when you plan you will understand as to where I have to give more attention to. Say for example 1.5 days before the exam you have planned to watch this expected questions marathon. Yes or no? You have allocated that 6 to 7 hours specifically for me. So it helps you to devote proper attention to important areas. Same way when auditor goes for audit also, he will do a planning process so that when he plans, he understands, oh, this company is so big, these areas, so much time is required. He will be able to devote proper attention to important areas. It helps the auditor to identify and resolve potential problems on a timely basis. Helps the auditor properly organize and manage the audit engagement. And last 3 points are with respect to engagement team. Assists in selection of engagement team, direction and supervision of engagement team, assisting where applicable, the coordination of the work of experts also. So these 3 points also is with respect to benefits of planning. Because I planned only, I know, oh, this is so big. 10 people are not sufficient. I need at least 15 people to do the job. Direction and supervision of all the people. How am I supposed to do? How am I going to do the hierarchy? All of those things I'll be able to do only when I do the planning process. So there are 6 points here. It helps the auditor to devote proper attention to important areas, helps the auditor identify and resolve the potential problem, helps the auditor for organizing and manage the audit engagement, and next 3 are with respect to engagement team. Selection of engagement team, direction and supervision, coordination of work with other experts also. So that is benefits of planning. Planning includes the need to consider prior to auditor's identification and assessment of risk of material misstatement such matters as. Now here, if you are wondering where this answer is, under planning, see this is a question. Planning includes the needs to consider prior to auditor's identification and assessment of risk of material misstatement such matters as. That is, even before identifying and assessing the ROM, planning includes needs to consider what are those things. The analytical procedures to be applied as risk assessment procedure. Analytical procedures to be applied as risk assessment procedure. General understanding of legal and regulatory framework. Determination of materiality, involvement of experts, performance of other risk assessment procedures. So these 5 points are for this question, that is, planning includes needs to consider prior to auditor's identification assessment of risk of material misstatement. What are those matters, like that they can ask. It's just a sentence which you have to remember, guys. Very, very important question this one is. Planning, supervision and review of work of engagement team members. See here, the auditor should plan the nature, extent, timing of direction and supervision of engagement team member and review of their work also. The nature, extent and timing of direction and supervision of engagement team member and review of their work vary depending on many factors. What are the factors? Size and complexity of the entity, area of audit, assessed ROM, capabilities and competence of individual team members who are performing the work. What is internal financial control and what is IC over FR? See, one thing which you have to understand is IFC and IC over FR are completely different concepts, just that they sound similar. IFC is the internal control only. Internal control is what? Policies and procedures which is done by the management for specific things, safeguarding of assets, prevention, detection of fraud, effectiveness, efficiency of operations, compliance with applicable laws and regulations. All these points we know that is internal control. Internal control is only IFC. Then what is IC over FR, ma'am? IC over FR is basically a separate opinion that the auditor gives. Now this opinion is completely separate from the 700 series opinion. The IC over FR is required where auditors are required to express an opinion on the effectiveness of entities' internal control. Such an opinion is an addition to and different from opinion expressed by auditor on the financial statements. IFC is a wider term, whereas in IC over FR is a narrower term. IFC is what? It refers to policies and procedures for reliability of FR, effectiveness and efficiency of operation, compliance with laws and regulations, safeguarding of assets, prevention and detection of fraud. These 4 points are the same points that you read for internal control definition. If you don't remember, in SA 315, internal control definition, this IFC only will come. IC over FR only is a new concept where the auditor will give a separate opinion on the internal control over financial reporting, and this opinion is completely distinct from the opinion which is expressed on the financial statements. Examples of considering results of preliminary engagement activity and knowledge gained in other engagements is relevant. Now read the question again. Examples of considering results of preliminary engagement activity and knowledge gained in other engagements is relevant. Now, if you are thinking this is a question from preliminary engagement activity, you are wrong. Now, just see here in overall audit strategy, we saw 5 points, correct? Identify the scope of engagement, ascertaining the reporting objective, considering significant factors, considering the result of preliminary engagement activities. This question is actually from the fourth point of overall audit strategy. See that this entire sentence will be here. Consider the results of preliminary engagement activity and where applicable whether the knowledge gained on other engagements performed by the engagement partner for the entity is relevant. Same question. Consider results of preliminary engagement activity and knowledge gained from similar engagement goes a long way in establishing sound audit strategy. What are the examples? Result of previous audit that involved evaluating operating effectiveness of internal control, including nature of identified deficiency and whatever action was taken. The manner in which auditor emphasizes to engagement team members the need to maintain a questioning mind, that is the professional skepticism for evaluating the audit evidence. So your preliminary engagement activity is telling you how much of a professional skepticism that you have to have, and the previous audit is going to tell you what kind of internal control was there and how much it was deficient in the previous year. So based on that, you will do your overall audit strategy for the current year. So these 2 points are for considering the result of preliminary engagement activity and knowledge gained from similar engagement goes a long way in establishing sound audit strategy. Example are from previous audit, what one example they gave, and professional skepticism was the second one that they told. Now the last question with respect to essay 300 is preliminary engagement activities can ask ethical requirements as a separate question. Now preliminary engagement activities, how many points are there? First, only 3 points. Before the engagement is starting, you have to see procedures regarding continuance of client relationship, compliance with ethical requirements, to understand the terms of engagement. Now ethical requirements can be a separate question in itself. Evaluating compliance with ethical requirements. The engagement partner shall form a conclusion on compliance with independence requirements that apply to the audit engagement. For that, he has to see whether the firm he has identified and evaluate circumstance and relationship that is creating threat to independence. Evaluate information on identified breaches for firm's independence policies and procedures. If there is any independence issue, take appropriate action. Either eliminate the threat or reduce them to the acceptable level, or if nothing is possible, withdraw from the engagement where withdrawal is permitted by law or regulation. The engagement partner shall promptly report to the firm any inability to resolve the matter for appropriate action. This is compliance with ethical requirements, but actually preliminary engagement activity, there are 3 points. First one is performing procedures regarding continuance, compliance with ethical requirements, establishing, understanding the terms. But here question was specifically ethical requirements, and that is the reason why we said inside points for that also. Essay 300, really important guys. Don't skip this and see this one. See this one. Sample of audit program. I want you to take the time and see this. It is really important. Is that clear? And with that, essay 300, that is chapter number 2, like I said, the most important chapter, 10 marks comes to an end. Now actually, if you see here guys, this itself, right now you already have 25 to 30 marks in your pocket. 30 marks in your pocket already. So just be with me till the end. The confidence that you will get, immense amount of confidence that you will get at the end of this marathon. And with that, I want you to go to the exam hall. I keep telling this in my class also, guys. The confidence you should have before entering the exam hall. You give whatever kind of question paper that you want. I will be able to crack it. That level of confidence you must have. Trust me, if you have that level of confidence, you don't have to be worried about anything. Let it be a lengthy paper, let it be from nook and corner paper, let it be a tricky paper, whatever it is, your confidence will be able to save you. And that is the reason why I actually wanted to do this marathon, where all standards, everything will be covered in just 6 to 7 hours, and after that you will be able to do another revision. That's the reason, guys. So just carry this to the exam hall. Everything else, confidence itself will take care. And yes, guys, with that essay 300 chapter number 2 comes to an end. Guys, are you all with me? Are you all alive? Are you all awake? Essay 300 was very, very important. I hope it was useful for you. Let us move ahead, but a quick break. Move your legs, move your hands a little bit. Have a sip of water, hydrate yourself, and then proceed forward. Chapter number 7, and under that most important standard is essay 570, and that is the reason why it is given in red, guys. Now in that there are 7 questions. Quickly let's get into them. The first one, meaning, significance of essay 570 and what does it deal with? Now here, meaning, significance, what does it deal with? These 3 are only the first question. What is going concern? Going concern is basically making an assumption that the company will go on forever, that is in the foreseeable future. It will go on. So how am I going to make this assumption? In accounting, if you remember in AS1, assumption, the first one is the going concern assumption. So when the management, when they are making the financial statements in itself, they'll be making an assumption what? That the company is going to go on, that the company is going to continue its operations in the foreseeable future. So meaning of going concern is, it is one of the fundamental accounting assumption. The enterprise is normally viewed as going concern. The general purpose financial statements are prepared using going concern basis unless management intends to liquidate or management intends to cease the operations. Unless these 2 are there, it was always under going concern only. What is the significance of going concern? The significance of going concern, it has a direct impact on the preparation of financial statements. If the entity is going concern, you will prepare the financial statements on accrual basis. If the entity is going to liquidate or cease its operations, you will prepare your financial statements as per liquidation basis, that is nothing but your cash basis of accounting. So the significance of going concern is due to the effect of preparation of financial statement. Direct effect on the preparation of financial statement is there. Ability or otherwise of an entity to be viewed as going concern affects its preparation of financial statements. When the use of the going concern is appropriate, assets and liabilities are recorded on the basis that entity will be able to realize the assets and discharge its liability in the normal course of business. If it is not viewed as going concern, then financial statements are prepared as per liquidation basis. Now there is an inventory example which is given. Say if it is on liquidation basis, the inventories may have to be written down than their cost value, because inventories will be at cost or net realizable value, whichever is lower. So if you have to sell fast, you might have to sell for lesser than the cost price in itself. That is the reason this example is also given. Essay 570 going concern deals with 2 things. Auditor's responsibility. As an auditor, what is my responsibility in auditing the financial statements, and what is the implications in the auditor's report? That also is what the standard is dealing with. What is the objective of the auditor? To obtain sufficient appropriate audit evidence regarding and conclude on the appropriateness of the management's use of going concern basis. Auditor is not going to check whether entity is going concern or not. Auditor will not modify the report if the entity is not going concern, but auditor will see however the management is used the going concern basis of accounting is appropriate or not, whether they have used it correctly or not. That means really is the entity going concern, then only use going concern basis of accounting. If it is not going concern, go to cash basis of accounting. To conclude, based on the audit evidence obtained, whether material uncertainty exists relating to events or conditions that may cast a doubt, to continue with the going concern. To report in accordance with this standard. So these 3 are the objectives of the auditor. The first one is seeing whether the management is properly using the going concern basis. That means really are they going concern. Second, to see whether material uncertainty exists. Third, to report in accordance with this standard. Second is adequacy of disclosure. Material uncertainty exists, material uncertainty doesn't exist. This is in the one of the last parts, correct? Adequacy of disclosures. If material uncertainty exists. Now, if you confirm that material uncertainty exists, that means if the auditor concludes that management's use of going concern basis is appropriate, but a material uncertainty exists. What is a material uncertainty? Material uncertainty means 50-50 scenario. Say, for example, for Audi, there is a court case pending. Say Audi's revenue, for example only, Audi's revenue is say 4,000 crores and there is a court case which is pending, and if Audi loses that court case, then Audi has to pay about 8,000 crores. In that case, what happens? There is a 50-50 possibility whether they will win or whether they will lose. If they lose, if they have to give 8,000 crores, Audi itself has to shut down. Yes or no? Just for example, I'm telling all the Audi fans, don't pounce on me. Just for example. Okay, so the going concern itself can be affected, but this is based on a future scenario. That is what? The judgment of that court case. So it is a 50-50 scenario. Can happen, might not happen. So we will call that as material uncertainty. If the auditor concludes that management's use of going concern basis of accounting is appropriate, but a material uncertainty exists, the auditor shall determine whether adequate disclosure has been done. Adequately disclose the principal events or conditions that may cast a significant doubt on entity's ability to continue as going concern. Disclose clearly that there is a material uncertainty related to events or conditions that may cast a significant doubt on entity's ability related to going concern. Therefore, it may be unable to realize its assets and discharge its liability in the normal course of business. If no material uncertainty exists, then if events or conditions have been identified that may cast significant doubt on entity's ability to going concern, but based on audit evidence obtained, the auditor concludes that no material uncertainty exists, in that case, the auditor will evaluate whether, in view of requirements of AFRF, the financial statements provides the adequate disclosure. If they provide, then auditor does not have any problem. So the auditor will only check whether financial statements provides the adequate disclosure about that event or condition, and whether it is as per AFRF is what they will see. If no material uncertainty exists, but any event or conditions that may have been identified may cast a significant doubt on entity's ability of going concern. So this is material adequacy of disclosure. If material uncertainty exists, definitely you have to disclose. You have to adequately disclose the principal event that is going to cast a doubt on going concern. Disclose clearly about the material uncertainty also. If no material uncertainty exists, if there is an event which is casting a significant doubt on entity's ability, then based on the audit evidence obtained, auditor concludes that no material uncertainty exists. However, the auditor will evaluate whether the financial statements provide the adequate disclosure and it is as per accounting standards, that is AFRF. Is that clear? The implications. 3 cases. Each case can be a separate question in itself. The implications for audit report. If use of going concern basis of accounting is inappropriate, that means if the financial statements are prepared as per going concern, but in auditor's judgment, management's use of going concern basis of accounting is inappropriate. That means in reality, the company is not going concern. Then in that case, is there a material misstatement? There is sufficient appropriate audit evidence that there is a material misstatement, and of course going concern is pervasive in nature. So in this case, what opinion will you give? The auditor has to give a adverse opinion. Are you able to understand? The financial statements are prepared as per going concern basis of accounting, but in reality they are saying that it is inappropriate. That means it is not going concern actually. So as an auditor, we do have sufficient appropriate audit evidence that there is a material misstatement and it is also pervasive in nature. So tick means you will be giving a adverse opinion. In the second case, if the use of going concern basis of accounting is appropriate, that means correctly only management has done, but material uncertainty exists. Now, whenever material uncertainty exists, what should they do? Material uncertainty exists means they have to properly disclose clearly. Now here, whenever they say material uncertainty exists, we will have to see whether adequate disclosure is made. If adequate disclosure is made in the financial statements, as an auditor, do we have any problem? Everything has been disclosed as per AFRF. If the financial statements are as per AFRF in SA 200 itself, we studied that auditor will not have any issues. Auditor's job is only to give an opinion based on whether the financial statements are prepared as per AFRF. So here adequate disclosure is made in the financial statement. So the auditor has no issues. So he will give a clean report, that is unmodified report. unmodified opinion, and the auditor's report shall include a separate section under the heading Material Uncertainty relating to going concern. This is to draw attention to the note in the financial statement to disclose about the material uncertainty matters. State that these matters with regard to material uncertainty exist that may cast significant doubt on entity's ability to continue as going concern, and that auditor's opinion is not modified in respect of this matter. We will have to state this separately. If adequate disclosure is not made, now it is supposed to be made as per AFRF, but it is not made. Now you have sufficient appropriate audit evidence that there is a material misstatement, but you don't know whether it is pervasive or not. So if it is pervasive, you'll give a adverse opinion. If it is not pervasive, you'll give a qualified opinion. So the auditor will express a qualified or adverse opinion as per SA 705. In the basis for qualified or adverse opinion, state that a material uncertainty exists that may cast a significant doubt on the going concern and the financial statements does not adequately disclose this matter. You will have to show this separately again. If the use of going concern basis is appropriate but material uncertainty exists, then as an auditor we have to see what? We have to see whether they have disclosed or not. If it is disclosed, do we have any issues? We should not have any problem because the financial statements are as per AFRF. If adequate disclosure is not made, then the auditor will express what? A qualified or adverse opinion. Are you able to understand, guys? Case number 3, management unwilling to make or extend its assessment. The auditor shall consider implications for the auditor's report. Now in this case, management is not giving any sufficient appropriate audit evidence. No sufficient appropriate audit evidence. There is a material misstatement. It is also pervasive, or we don't know whether it is pervasive. If it is this scenario, we give disclaimer of opinion. If it is this scenario, we give qualified opinion. That is the reason why if management is unwilling to make or extend the assessment, then auditor will consider the implications for audit report and he will give a qualified or disclaimer of opinion, because it may not be possible to obtain sufficient appropriate audit evidence regarding management's use of going concern of accounting and the preparation of financial statements. Easy. All 3 cases. Quickly to recap the 3 cases, really important for your exams. If going concern basis of accounting is inappropriate, that means the financial statements are prepared as per going concern, but in reality the entity cannot be going concern. In that case, there is a material misstatement, there is evidence, and it is also pervasive, so you'll be giving a adverse opinion. If the use of going concern is correct but material uncertainty exists, now we have to see whether they have disclosed the material uncertainty. If there is disclosures, do we have any issues? We will give a unmodified opinion. If the disclosure is not made, then according to the pervasiveness of the case, we'll either give a qualified or adverse opinion. If they are not willing to extend its assessment, management unwilling to make or extend its assessment, they are not cooperating with us, no sufficient appropriate audit evidence, means based on the pervasiveness, we'll either give a qualified or disclaimer of opinion. Is that clear, guys? The responsibility of management for assessment of entity's ability to continue as going concern. Responsibility of management. It is here. Responsibility for assessment of entity's ability to continue as going concern. 3 points you have to remember. Manager has to make assessment of entity's ability to continue as going concern. Following factors are relevant for the judgment. Now, how is the management going to say, yes, this company is going to go on forever based on these 3 factors? What are the 3 factors? The degree of uncertainty associated with outcome of event. What is the meaning of degree of uncertainty? In the same Audi example, I told you Audi is making 4,000 crores, but if they lose the case, they will make 8,000 crores. Now there is another company, say for example Horlicks and Complan is there. There also Horlicks has filed a case on Complan and Complan has won the case. Complan was an Audi scenario and Complan has won the case. Now the uncertainty, degree of uncertainty associated with outcome of event. How easy is it for me also to win the case? Now I have a case to show. See, similar case, person similar to me only has won the case, so the judgment has to be in favor of me. So what is the degree of uncertainty we have to see with respect to outcome of the event? What is the size of the entity, complexity of the entity, nature and conditions of the business, and degree of the business in which it is affected by the external factor? Any judgment about the future based on the information which is available at the time where the judgment is made. So these 3 points we will have to consider from the management side. Responsibility for assessment or for going concern, management has to make the assessment. 3 factors. One is degree of uncertainty, size and complexity of the business, and judgment about the future. These 3 points you will have to write. Responsibility of the auditor and conclusion. The auditor's responsibility is to what? Obtain the sufficient appropriate audit evidence with respect to appropriateness of management's use of going concern. That means really if it is going concern, then financial statements also is prepared as per going concern. So appropriateness of management's use of going concern basis of accounting in the preparation, and to conclude based on audit evidence obtained whether material uncertainty exists or not. These responsibility exists even if the financial reporting framework used in the preparation of financial statements does not include an explicit requirement for management to make the specific assessment. However, as described in Essay 200, potential effect of inherent limitations, that means because it is regarding to the future and we will not be able to detect the future to 100%, auditors' ability to detect the material misstatement are greater for future events that may cause for ceasing the business. The auditor cannot predict the future events. Accordingly, absence of any reference to material uncertainty about entity's ability to continue as going concern cannot be viewed as guarantee. This only is a problem for the auditor, because we are talking about the future, whether it will be there in the foreseeable future and all. We really don't know. We don't know whether if we go to sleep tonight, we will wake up tomorrow. That is the honest truth. Yes or no? We don't know what will happen. But here, the auditor has to see whether the entity will be continuing in the foreseeable future. So that itself is a problem, because in Essay 200 we saw limitations, where limitations was about we will not know about the future, but still judgment has to be made here. So it might be not true. So what are the 5 points which you will write for responsibility of auditor? The auditor's responsibility is to obtain the evidence with respect to appropriateness of management's use of going concern. Auditor is also supposed to see whether material uncertainty is existing or not. As per Essay 200, there can be inherent limitations, so the auditor cannot predict such future events or conditions. Accordingly, absence of any reference to material uncertainty to continue as going concern cannot be viewed as guarantee as to whether entity's ability to continue as going concern. What is the additional audit procedures and examples? The additional audit procedures. If events or conditions have been identified that may cast a significant doubt, the auditor shall obtain evidence to determine whether or not a material uncertainty exists. Now, for this, he has to do a few procedures. Where management has not done the assessment for entity's ability to continue as going concern, the first thing is he will request the management to first assess whether this entity will go on in the foreseeable future. Evaluate the management's plan for future action, whether the outcome of these plans will improve the situation and whether management's plans are feasible in the circumstances. Where the entity has prepared a cash flow forecast, a future cash flow, analysis of the forecast is a significant factor in considering the future outcome or events. Evaluating reliability of underlying data generated, determine whether there is adequate support for the assumptions. You are saying next year I will get 1 crore. Please tell me from where you will get. What is the source that you will get? Simply don't make the budget. So evaluate the reliability of the underlying data. Determine whether there is adequate support for the assumptions, considering whether any additional facts or information has become available, requesting written representation from management and where appropriate TCWG. These 5 are additional audit procedures that the auditor has to do. Examples of audit procedures: analyzing and discussing cash flow, profit, and other relevant forecast, analyzing and discussing interim financial statements, reading the terms of debenture and loan agreement, minutes of the meeting between shareholders, those charged with governance, inquiry with entities' legal counsel, confirming the existence, legality, enforcement to maintain the financial support with third parties, and assessing financial availability, evaluating entities' plan for unfulfilled customers' orders. How is the borrowing facility? How is the regulatory action? Reviewing report of regulatory actions, adequacy of support for planned disposal of assets. So all these 11 are examples of audit procedures. What are the areas that we have to see? See the minutes of the meeting, inquire the entity's legal counsel, obtain the report for regulatory action, see how the borrowing facility terms are there. All these things are audit procedures that the auditor has to do. Examples of what he can do. It's actually a inclusive list. That means many more you can do, but this is what is given in the study material. But if they ask what are the audit procedures, you will start off with the 5. And then if there is more marks, say for 5 marks they have asked, then these 5 should be sufficient. But if they ask for 6 or 8 marks, then everything you will have to write. Examples of audit procedures also you will have to write. Actually, if time is there, write everything if they ask. Is that clear? So mainly you will talk about the procedure will include where management has not done the performance of assessment of going concern, then requesting the management to do it. Then see how is the outcome of the plan, whether it is going to improve the situation, whether the entity has done a budgeted forecast of cash flow, how is the reliability of data and all these things, any additional facts, anything which is available, get a written representation from the management or TCWG. You'll start off with these 5 and then for examples only you will say read the minutes, inquire with legal counsel, all those things is for examples. Is that clear, guys? The last one with essay 570 is example of event or conditions that may cast a significant doubt. Financial or other events. Why financial or other events I have given, I'll tell you. Each and every example which is given here can be a separate case study. Say for example, in the financial events, net liability or net current liability position. I will tell you how the question will be framed for this. There will be a huge case study where they will say the assets of the company is 1000 crores, the liability of the company is 4000 crores, the company is somehow surviving but don't know whether they'll be able to pay off the liability. They are in a shaky position, like that they will give the question. Now when you see the numbers, you should know that it is a net liability position. When you see that it is a net liability position, directly you should come to financial event or condition that is going to cast a significant doubt on going concern. So like this, each and every case can be a case study in itself. They can ask in financial event or they can ask in other events. We'll just go through one by one. Net liability or net current liability position. Fixed term borrowing approaching maturity but don't know how to pay. Indications of withdrawal of financial support by creditors. Negative operating cash flow. This also is a very good question. They can say creditor number 1 is for 1 lakh, creditor number 2 is for 5 lakh, creditor number 3 is for 10 lakhs. Due date has been gone but we don't have the money. Company does not have the money to pay. Now creditors is saying, hello, no more, I cannot wait. You please pay all the money back. All the creditors have sent emails. They're coming to office. So this is a going concern case you will have to identify. Negative operating cash flows indicated by historical or prospective financial statements. Adverse key financial ratio. Substantial operating losses. Arrears of discontinuance of dividend. This also can be a good question. They can say in 2021 this much dividend was there, 2022 this much dividend was there, from 2023 onwards no dividends have been paid. So discontinuance of dividend means financial event which is going to cast a doubt on going concern. Inability to pay creditors, inability to comply with loan agreements, change from credit to cash on delivery transactions with suppliers, inability to obtain financing for essential new product development. All these 11 are examples for financial events. For other events, non-compliance with capital or other statutory or regulatory requirements such as solvency or liquidity requirements, pending legal or regulatory proceedings, changes in law or regulation or government policy, uninsured or underinsured catastrophes when they occur. These 4 are for other events or conditions. Are you able to understand? And with that, the essay 570 has come to an end. Essay 260, 265 we will finish, guys. Just 5 questions here. In that, the first one is objective of auditor and documentation the auditor has to make. What is the objective of the auditor? Now see here very clearly. The auditor has to tell his responsibilities to TCWG. The communication must happen with respect to his responsibilities. Now, TCWG will give information to the auditor. If auditor asks for any information, the TCWG has to give information to the auditor. Now, after getting the information, whatever the auditor has observed, his observations will again be shared with the TCWG. That means the information is not only flowing on one side, it is also flowing on the other side. That means it is a two-way communication. Now read the 4 objectives of auditor with respect to SA 260. To communicate clearly his responsibilities with TCWG, obtain the information relevant of the audit from TCWG, provide the TCWG the timely observations from the audit, that is important, to promote two-way communication. These are the 4 objectives of auditor. Now in this, the question is objective of auditor and documentation that the auditor has to make. He has to document anything which has been communicated orally. He has to document that in writing. In essay 230 we studied everything has to be documented and it has to be reduced in writing. Yes or no? So here if there is any communication which has been done orally, the auditor will include them as per essay 230 about when and to whom what is communicated, to whom it is communicated, when it was communicated. Everything has to be documented properly. If something has been communicated in writing, then you can just retain a copy of that communication. The auditor will retain a copy of communication as part of the documentation. Communicating significant efficiency in internal control in writing to TCWG reflects importance of the matters and assists the TCWG for the oversight responsibilities. So with respect to documentation, if something is in oral, then the auditor shall include as per essay 230 about when and to whom and what is communicated. If it is in writing, then he will retain a copy of that communication. This is objective and documentation. Matters to be communicated by the auditor or in case of listed entities. What are the things that has to be communicated by the auditor? We already saw he has to communicate his responsibilities, the planned scope and timing of audit, significant findings from the audit. Where is it given? See here, to communicate clearly with TCWG responsibilities of the auditor and an overview of the planned scope and timing of the audit. The same 3 points are given here. The responsibility, scope and timing. If there is any important findings from the audit, he has to communicate that also. The auditor shall communicate with TCWG. Apart from these 3, these also. The auditor's view about qualitative aspects with respect to accounting practices, accounting policy, accounting estimate, those views also will be communicated. If he is unable to conduct the audit, that is any difficulty encountered during the audit, that also he will communicate. Unless all of TCWG are involved in managing the entity, any important matters arising during the audit and written representation, if he is requesting, then that also will be communicated. Circumstances that affect the form and content of audit report. First itself I am telling scope, timing of the audit, everything. Now if it is going to change my content of the audit report, that first has to be told to the TCWG. Any other important matters which is arising during the audit, that also has to be communicated. In the case of listed entities, what has to be communicated? The independence of the auditor along with all his team members has to be communicated. A statement that engagement team and others in the firm as appropriate network firms have complied with all the ethical requirements regarding independence and all relationship and other matters between the firm, network firm and entity, that auditor's professional judgment may reasonably be thought to bear on independence. This shall include total fees charged during the period covered by financial statements for both audit services and also non-audit services. Everything you will showcase and you will show that related safeguards have been applied if there is any threats to independence or reduce that to an acceptable level. Read this properly here. In case of listed entity, a statement that engagement team members and the others have complied with relevant ethical requirements regarding independence. matters to be conducted, and in case of listed entities, independence also must be communicated. Written communication to management and TCWG must be done. The communication process. The auditor shall communicate the form, timing, and expected general contents of communication. This communication must be in writing with TCWG. If there is any oral communication, it will not be adequate. Written communications need not include all the matters that arose during the course of audit. However, the auditor will communicate in writing with TCWG regarding the independence in case of listed entity. Auditor will communicate with TCWG on a timely basis. So the communication has to be in written format. Examples of matter that auditor may consider whether deficiency is significant deficiency. Examples of indicators of significant deficiency in internal control. Don't get confused between these two. This is essay 265. Examples of matters that auditor may consider whether deficiency is significant deficiency. This is indicators of significant deficiency. Now, first of all, in essay 265, deficiency in internal control, you will say that it exists when control is not at all there, or control is there but it is unable to prevent, detect and correct a misstatement. In these two cases, we will say that there is a deficiency in internal control. Now, significant deficiency in internal control is there when a deficiency or combination that is sufficient to merit the attention of TCWG. Then in that case, you will say that significant deficiency. But the question is actually here. Examples of matters that the auditor may consider in determining whether a deficiency in internal control constitutes a significant deficiency. The likelihood of deficiency is leading to material misstatement in the future. Susceptibility or loss of fraud of the related assets or liability. Subjectivity and complexity of the determining of estimated amounts. Financial statements amounts which are exposed to deficiency. The volume of activity that has occurred or could occur in ABCD which is exposed to deficiency. Cause and frequency of the exceptions detected as a result of deficiency. Interaction of the deficiency with other deficiency. Importance of control in the financial reporting process. Examples of indicators of significant deficiency in internal control. This is indicator. What are the indicators? Evidence of ineffective aspects of control environment. Here, lot of SA 315 topics will come. Control environment, risk assessment procedure, risk assessment process. See here, absence of risk assessment process, ineffective risk assessment process, evidence of ineffective response to identified significant risk. That is, controls are not there for a risk. Misstatements detected by auditors' procedures that were not prevented, detected and corrected. Disclosure of a material misstatement due to fraud or error of the prior period items in the current year statement. Evidence of management's inability to oversee the preparation of financial statements. So these are indicators that there is a significant deficiency in internal control. Did you understand the difference between these two? The keyword here is indicator. In this case, the SA 315, the risk assessment procedure, disclosure, misstatement, all these points will come here. Control environment, yes, all these points will come here where the keyword is indicator. Where they say examples of matter that auditor will consider whether deficiency is a significant deficiency, then in that case we will write all these points. The volume of activity, frequency, interaction of that deficiency with another deficiency. Just read the example also. General monitoring controls, controls over prevention and detection of fraud, controls over selection application of accounting policy, controls over related party, controls that are outside the normal course of business, controls over period end financial reporting process. These are the examples to see that auditor will consider whether deficiency is a significant deficiency. And with that, 260 and 265 and chapter number 7, 10 marks guys. With 570 and 260, 265, I have given approximately 10 marks. And without you knowing, see how many marks you have already completed. Yes, we are going in full speed. Stay with me till the end guys. Now, with respect to chapter number 8, 700, 701, 705, you have to study fully, guys. I will spend some time on 710 because it's a little confusing standard, and there's also a reference to multiple other standards like 560 reference, 580 reference, 700 series reference is there here. So I will spend some time here, and of course, CARO also I will finish. So essay 710, definition of comparative information and corresponding figures. Now, comparative information, under that we have corresponding figures and comparative financial statements. Now, that is the reason why I've also put this. Comparative information is the head, and under that there is comparative financial statements and corresponding figures. What is the meaning of corresponding figure? Now, when we are doing the balance sheet, we will be writing the current year figure and the previous year figure, correct? So this is the corresponding figure where when the audit opinion is given, the opinion is only on the current year. This is with respect to the corresponding figure. When you say comparative financial statement, I am comparing this year maybe with something which happened 5 years back, 3 years back, 20 years back. It could be anything. So comparative financial statement means auditor's opinion refers to each period. Corresponding means just corresponding year. That is just the previous year, the prior year you are saying. So the opinion is only for the current year with respect to the corresponding figures. But these two are together are called as comparative information. Are you able to understand? Okay. Now we'll proceed forward as to what is definition of comparative information. The amount and disclosures which is included in the financial statements in respect of, it could be one or more prior periods, but this is in accordance with the accounting standards only, AFRF only. This is comparative information. What is corresponding figure? Corresponding figure is also a comparative information. They're starting that way. If you remember here, both are comparative information. Corresponding figure and comparative financial statements are both comparative information. We saw what is comparative information. It could be for one or more previous year and it could be amount and disclosure. Now we are seeing the corresponding figure. They are starting it by saying it is a comparative information where amount and other disclosure for the prior period are included as an integral part of the current period financial statements. And this is intended to be read only in relation to the amount and disclosure relating to the current period. The level of detail with respect to the corresponding amount and disclosure is dictated primarily by its relevance to the current period figures. So corresponding figure in sonale, whenever I say corresponding figures, you have to correlate it with the current year figure and only read it. That's the reason why I showed you this example, where in this scenario, the corresponding figure of the previous year cannot be read in separate terms. It has to be as per the current year only, whether it is amount or disclosure of the prior year. That is called as corresponding figure. Now, definition of corresponding figure, definition of comparative information you have seen. What have they asked? That only, right? Definition of comparative and definition of corresponding information. What is the audit procedures regarding comparative information they are asking? Audit procedures regarding comparative information. The auditor shall determine whether financial statements includes comparative information as required by AFRF and whether such information is appropriately classified. That means it agrees with the amount and disclosure which is presented in the prior period and accounting policies are consistent. I will just write this down separately so that you understand better. We are in essay 710 and we are seeing comparative information audit procedure. The first one, what they are saying, perform specific audit procedures to figure out whether the prior year is as per that year's information with respect to balance sheet or P&L or disclosure. It could be amount or disclosure. The second is the accounting policies, whether they are consistently followed. If there is a change in the accounting policy, then it has to be disclosed appropriately. This is the first audit procedure. Now read here, you will understand. The comparative information agrees with the amount and disclosure presented in the prior period. In the prior period, whatever information is there, it is agreeing. The second is with respect to the accounting policy. The accounting policies are consistent with those in the current period. The second point is about SA 560. If the auditor becomes aware of any possible misstatement at a later stage in the comparative information while performing the current period audit, then he will do additional audit procedures to check whether that misstatement is still existing as of today. If the same auditor only is the auditor for that period also, then SA 560 will come. So what they are trying to say is, if the misstatement in the comparative financial statement is there, when you are doing the comparative financial statements, there is a misstatement in the when you are doing the current financial statements, you are finding out that there is a mistake in the comparative information. And if you yourself are the auditor of that year's information, then SA 560 will come. If the same auditor have audited the comparative information previously and misstatement is identified when doing the current year audit, misstatement with respect to the prior period is identified while doing the current period audit, then in that case SA 560 will come into place, because you only are the auditor who did that time. Now it is a subsequent event. Right now you have found out that there is a mistake that you have not seen at that point in time. So auditor will obtain a written representation for all periods referred in the auditor's opinion. If there is any specific period which is disclosed in the current period, auditor obtain separate written representation for that period. So in the current period, if there is any specific issue, then SA 580 written representation will be received by the auditor. Is that clear? Now these three are for audit procedures with respect to the comparative information. What was the question? Audit procedures regarding comparative information, only that. Now the next question is, when corresponding figures are presented, the auditor's opinion shall not refer to the corresponding figures except in the following circumstances. Now this is here. When the corresponding figures are presented, the auditor's opinion will not refer to corresponding figures except in the following circumstances. I will explain to you first and then you come to the theory, you will have a better understanding. Now we are under corresponding figures. Auditor's opinion shall not refer to the corresponding figure except in the following circumstances. What is that circumstance? The first one being, in the prior period audit report, he has given either a qualified or adverse or disclaimer of opinion. And for whatever reason he has given that qualified, adverse or disclaimer of opinion, the matter is still unresolved. Matter is still unresolved. So in the current period also he has to modify. Modify means either he has to give a qualified or adverse or disclaimer of opinion in the current period also. The second case being, there is audit evidence that there is a material misstatement in the prior period. In prior period, if there is a material misstatement, he has to modify the report, but that did not happen. He has given a unmodified report in the prior period. Now what happened to the material misstatement? Is it still there or has it been dealt with? The material misstatement is not dealt with. That means it is still there. Then in the current period, you have to give a qualified or adverse opinion in the current period. Think logically thinking, there is audit evidence that there is a material misstatement in the prior period. That means it has to be modified, but unfortunately in the prior period it was not modified. Now what happened to that material misstatement? It is still existing, not yet dealt with. So in the current period you have to give either a qualified or a adverse opinion. Simple, logical, yes. Now coming to the third case. In the prior period it is not audited. the financial statements are not audited at all in the prior period, then in the case, in the current period, please mention that in the other matter paragraph. Mention that in the other matter paragraph. If in the prior period it is audited, but it is audited by some other auditor, audited by a predecessor auditor, that means some other auditor is there, then also you have to mention it in the OMP of the current year. What you should mention, that the financial statement is audited by whichever firm is audited the financial statements, you have to mention. And that time he audited, what is the opinion given at that time, type of opinion. If modified, have to give reasons for the same. Reasons for the same has to be given if there is a modification. And what is the date of the report, that also has to be mentioned. Now, if in the prior period, if it is audited by some other auditor, then in the current year, in the other matter paragraph, you have to mention the three things. The financial statements is audited by whom, what is the opinion which is given by him, if modified, what are the reasons for the same, and what is the date of his report. These three details you have to give the prior period audited by predecessor auditor. If it is not audited at all, just mention in the current period other matter paragraph that it is not audited at all. These two are logical, prior period audit report qualified adverse disclaimer, matter still unresolved, so current year also qualified adverse disclaimer. Prior period, there is a material misstatement but unmodified report in the prior period, matter is still not resolved, so qualified or adverse opinion in the current period, because you have sufficient appropriate audit evidence, disclaimer of opinion will not come. In the prior period not audited, then in the current period other matter paragraph. In the prior period, if it is audited by some other auditor, then in the other matter paragraph you have to mention these three items. Clear? Very, very clear. That is, when corresponding figures are presented, the auditor's opinion shall not refer to the corresponding figures except in the following circumstances, the four circumstances which I just told you. Only then you will go to the corresponding figures and talk about them. Otherwise, you will not be bothered about them. With that, the essay 710 comes to an end. But I also want to tell you one more thing with respect to 710. You studied about comparative information, audit procedures regarding comparative information. I hope you remember this. Yes. Comparative information audit procedure 560, 580 specific audit procedure, and we went to corresponding figure. You also saw when you will refer to the corresponding figure, and then comes comparative financial statement. This comparative financial statement is also a comparative information where amount and disclosure for the prior period are included for comparison for the financial statement of current period, but if they are audited, they are referred in the auditor's opinion. The level of information is comparable with that of the current period. This is very, very similar. When comparative financial statements are presented, the auditor's opinion shall refer to each period for which the financial statements are presented. If auditor's opinion on such prior period is different from the auditor of that period, then disclose the statement in other matter paragraph. If it is audited by some other auditor, then please mention financial statements are audited by predecessor auditor. What is the type of opinion? If modified, give the reasons. What is the date of the report? If the auditor concludes that material misstatement exists that affects the prior period financial statements and predecessor auditor has previously reported without modification, then communication with TCWG and request the predecessor auditor be informed. If the predecessor auditor gives a new audit report on the amended financial statement, then this auditor will only be bothered about the current period. If prior period is not audited, then just state in OMP that the comparative financial statements are not audited. Such a statement does not, however, relieve the audit to obtain the sufficient appropriate audit evidence, but the opening balances does not contain the material misstatement. It is very similar. The comparative financial statements is very similar. That's the reason why this question was not given, but in case they ask, you will not miss that question. You will get the full marks. Yes, guys, 710 was easy, right? When I explained like this way, comparative information, corresponding figures, these 4 points, that's it is there in the entire 710. It's actually an easy standard, but if you see 580, 560, OMP 706, 705 modification is there. There are multiple references which is there in essay 710, and that is the reason why even 450 is there. Yes, misstatement. So 450, 560, 705, 706, almost every other standard gets interlinked with essay 710, and that's the reason why you have to be a little careful with the standard. But otherwise, it's not difficult and all. Now, CARO, you have to study all the clauses. Clause 2, 10, 7, it is asked in the previous attempt, so less priority for them. But remaining 18 clauses have equal chances of being asked. I just made a wild guess. Clause 1, 3, 11, and 12 might be asked just based on trend, but still CARO, I'll not be able to tell, so we will study fully all the 21 clauses. For CARO, I'll tell you a kutty story, guys, for you to remember all the 21 clauses. Now, there was a very, 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 very worst fellow in this entire universe, worstest boy in the entire universe. Now, what he did, he bought fixed assets, and inside the fixed assets, he kept all his sarak, that is the stock, that is the inventory. How he got the stock and how he got the land and building is by way of loans. I told you he is a very, 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 very worst person. He got two kinds of loans from the company and from director. But after getting the loans, he is supposed to pay to the people who have given him the sarak, correct? But he did not do that. He went and put deposits. He thought, I will take the loan, I will put the deposit, and I will enjoy the interest which is coming from the deposit. And he maintained all the records very pakka, very carefully. But looking at the dues, looking at the taxes that he has paid, the government understood that he has some kind of an undisclosed income. The government understood that he has some kind of an undisclosed income. And government also understood that this guy is doing some kind of a fraud, and they gave him a last warning and said, better you repay all the loans. He said, okay, I'll repay. But is he going to repay? He's a very, 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 very worst fellow. So he said he will repay, and he will repay by way of issue proceeds. He will get money from the public, and he started repaying. So he's a big fraud fellow. Very, 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 very worst fellow, big fraud fellow. Now, after doing such a big fraud, it is interval he has gone to the jail. Once he came back from the jail, you think he is a changed man? No, no chance. He is a very, 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 very worst fellow. So he came back from jail and he started a Nidhi company. With whom he started a Nidhi company? With mother, father, wife, brother, sister, all his related parties he brought together to start this Nidhi company. Then he appointed an internal auditor for Nidhi company. And that internal auditor found out three important things: that there are lots of non-cash transactions which is happening. He is supposed to get RBI registration, but he is not getting the registration. And there is lots of cash losses which is there in the entity. So internal auditor found three things about non-cash transaction, RBI registration, and lots of losses which is there. And once the internal auditor gave the report with these three observations, the statutory auditor got scared and he said, I am going to resign. Resignation of statutory auditor happened. And after the statutory auditor has happened, everybody, whoever has given the IPO, FPO, all those people, they have become very, very cautious and they are asking for their money back. People who gave the loan, they are asking for money back. Now he doesn't know what to do. Entire going concern itself is getting affected. Now he is slowly changing into a good person. He said sorry and he donated all his money by way of CSR activities, and then he made a consolidation of all his money and saw whether he is at profit or loss. Why I told you this story is because clause number 1 is fixed asset. Clause number 2 is inventory. Clause number 3 is legs provided. 3 is legs provided. Clause number 4 is again legs provided, section 185, 186. Clause number 5 is deposits. For this also section 73, clause number 5 is deposits, that is section 73 to 76. Clause number 6 is cost record, section 148, subsection 1. Clause number 7 is statutory audit. Clause number 8 is undisclosed income. For this, is there section? No. Clause number 9 is repayment of loan. Clause number 10 is issue proceeds. For issue proceeds, section 42 and section 62. Clause number 11 is internal auditor. He is finding, issue proceeds. After issue proceeds, what is happening? No. Clause number 11 is fraud. It's here. Sorry. Clause number 11 is fraud. Clause number 12 is internal audit, and he is finding the three things. Yes. Sorry. Full confusion. Clause number 11 is fraud, and then he goes to jail. He comes back and he starts the Nidhi company. Nidhi company is only clause number 12. Clause number 13 is related party. 14 is internal auditor. Internal auditor is finding the three things, that is 15, 16 and 17. That is non-cash transaction, RBI registration under 45 IA, and cash losses is clause 17. Clause 18 is resignation of statutory auditor. 19 is going concern. 20 is CSR activity, and 21 is consolidated financial statements. Sorry for the small confusion with fraud and jail and all. Now clause number 1 is fixed assets. 2 is inventory. 3 is leaks provided. 4 is leaks provided under section 185, 186. 5 is deposits, section 73 to 76. 6 is cost records, section 148, subsection 1. 7 is statutory dues. 8 is undisclosed income. 9 is repayment of loan. 10 is issue proceeds by way of IPO and FPO, that is section 42 and 62. Clause number 11 is fraud. Clause number 12 is Nidhi company. 13 is related party. For this section number is 177 and 188. Clause number 14 is internal auditor. He is finding three things, that is 15, 16, 17, non-cash transaction, RBI registration and losses. Clause number 18 is resignation of statutory auditor. Clause 19 is going concern. 20 is CSR, and 21 is consolidated financial statements. For CSR, it is 135 subsection 5 and 135 subsection 6. This is the CSR. Yes. If you want, you take one screenshot like this so that everything is coming in one page. Before you go to the exam hall, you can just quickly revise this and go, so that it will be fresh in your memory. Clause 1, fixed assets. 2, inventory. 3, leaks provided. 4, leaks provided, 185, 186. 5 is deposit, 73 to 76. 6 is cost accounts, 148, subsection 1. 7 is statutory dues. 8 is undisclosed income. 9 is repayment of loan. 10 is issue proceeds, and 11 is fraud. 12 is jail. So 12 is Nidhi company. 13 is related party, 177, 188. 14 is internal auditor. 15, 16, 17 is non-cash transaction, RBI registration and losses. 18 is resignation of statutory auditor. 19 is going concern. 20 is CSR, and 21 is consolidated financial statements. Now with this Kutti story, you can remember the name and number of the clause. That's it. But inside that, you have to write properly. Fixed assets, the first 2 points with respect to records. Whether company is maintaining proper records showing full particulars. Whether company is maintaining proper records showing full particulars. This is for tangible assets, quantitative details and situation of PPE. This is for intangible assets. Whether the PPE have been physically verified at reasonable intervals, whether any discrepancy was there, whether the same has been properly dealt with, whether the title deeds of all the immovable property is disclosed. If it is not disclosed, what is the description of the property, gross carrying value, who is holding it, whether that person is promoter, director, relative or employee, what is the period, what is the reason for not being held in the name of company. Whether the company has revalued its PPE. If the revaluation change is more than 10%, then has to disclose separately. Whether any proceedings have been initiated in the Benami Transactions Prohibition Act. Under inventory, that is clause number 2. Whether physical verification of inventory at reasonable intervals is done, whether discrepancy 10% of more, whether it has been properly dealt with in books of accounts. Whether during any point in time, the company has been sanctioned a working capital loan of more than 5 crore rupees in aggregate from banks and financial institutions, then quarterly returns has to be filed with the bank, which has to be in agreement with books of accounts. If it is not, then You have to give the details for the same. Legs provided, that is clause number 3. Whether during the year company has provided any loans or advances in the nature of loan which is stood as guarantee or security to any entity, then you have to mention the aggregate amount, the balance outstanding to subsidiary, joint venture and associate. Aggregate amount during the year, the balance outstanding, guarantee securities to other than subsidiary, joint venture and associates. You have to show them separately. Subsidiary, joint venture, associate. Other than subsidiary, joint venture, associate, you have to show separately. Whether investments made, loans or advances given are not prejudicial to the interest of the company. In respect of loans and advances in the nature of loan, whether the schedule of repayment of principal and payment of interest have been stipulated, whether repayment and receipts are regular. Can I just give the loan and say you give whenever you want? I have to give the schedule as to when monthly, how much installments has to be there, correct? So that has to be there for each and every loan. If the amount is overdue, state the any amount which is overdue more than 90 days and what is the steps that has been taken. Whether any loans or advances have been renewed, extended or fresh loan has been granted. Specify the aggregate amount of due, extended, fresh loan and granted and percentage of the aggregate to the total loan. Whether the company has granted loans or advances which are repayable on demand or without any specification of any terms. When you will give like that to a friend, you will get, hey, I'll give the money whenever I want it back, I'll take it back from you. So it is repayable on demand. Legs provided 185, 186. If you just write the section number, it is enough. Deposits again, section number, it is enough. Cost records again, section 148, subsection 1, it is enough. Now comes statutory dues. It is split into two, disputed and undisputed statutory due. If it is a disputed statutory due, that means some fight is happening between us and the court or ITAT or some place where a dispute is there. Then you have to mention the amount involved and the forum where dispute is pending is to be mentioned. If it is an undisputed statutory due, nobody is saying that you have to pay more or less or whatever. The company is regular in depositing the dues, including GST, PF, sales tax and everything. However, if there is any arrears of outstanding for more than 6 months from the date they become payable, then that has to be mentioned. If there is any undisclosed income, it is not recorded in the books of accounts, but in the current year it has been surrendered or disclosed as income, then that has to be shown separately. Repayment of loan. Whether this company has defaulted in the repayment of loan or borrowing, then you have to mention this in the same format. Nature of borrowings including debt security, who is the lender, amount not paid, what is that amount, principal or interest, what is the number of days and the remarks. Whether the company is declared as willful defaulter. Willful defaulter means they have the money but still they refuse to give the money. Whether term loans for whatever purpose they were applied and received, whether they were actually put to use for that purpose only, or if there is any diversion, what is the purpose for which it was diverted. Whether funds raised for short-term basis have been used for long-term purposes, then you have to mention that because liquidity will be shaken at that point. If it is taken for long-term and used for short-term purpose, then no problem. But if it is raised for short-term and used for long-term purpose, I will get the return only in a long-term. After 5 years, after 10 years only I will get the return. But in 1 year I have to repay the loan. I will be in a crunch at that time. So whether the funds raised for short-term is used for long-term purpose, I have to mention that separately. Whether company has taken any funds from any entity or person to meet the obligation of subsidiary, joint venture, associate. Whether company has raised loan through the pledge of subsidiary, joint venture, associate for meeting the loan. That also has to be shown separately. Issue proceeds, whether money raised by way of IPO or FPO, purpose for which they are raised, if there is any default and subsequent rectification has to be shown. Section 42 and 62 have been complied with. Fraud, any fraud by the company or on the company have been noticed or reported. 143 subsection 12 comes where the auditor has been considered any whistleblower complaints, and that also has to be shown. What is that 143 subsection 12? So this fraud is basically any fraud by the company or on the company, right? So 143 subsection 12 is basically saying if the amount of fraud is less than 1 crore, then auditor has to tell either the board of directors or audit company. He has to give a report. If it is more than 1 crore, then auditor has to tell the CG in ADT 4. Act has been filed in form ADT 4 as prescribed. So this form has to be filed if the amount of fraud is more than or equal to 1 crore. But this 143 subsection 12 is fraud by the company. The first point is saying whether any fraud by the company or fraud on the company, but 143 subsection 12 is fraud by the company. Nidhi company net owned funds is to deposit has to be in the ratio of 1:20, and net encumbered term deposits must be maintained at 10%. There should not be any default and repayment of interest. Related party section 177, 188. Internal audit. It should be commensurate with the size and nature of the business. For small business, small internal audits are required. For huge business, then internal auditor also must be huge in number. Like for HUL and all, there'll be hundreds of internal auditor. But if you see for a company which is doing probably 1 lakh revenue, one internal auditor is sufficient. So it should be commensurate with the size and nature of the business. Non-cash transaction section 192 should be complied with. RBI registration. If the company is supposed to be registered under 45IA of the RBI Act, then whether they have registered. If the company has undertaken any non-banking financial or housing financial activities without any valid certificate of registration. Whether the company is a core investment company. If the group has more than one core investment company, indicate the number of core investment companies which is part of the group. Cash losses, whether the company has incurred cash losses in the financial year and immediately preceding financial year. If so, state the amount of the cash losses. Resignation of statutory auditor. If they have resigned, or for what issue, what objections, any concerns raised. Going concern on the basis of financial ratio, aging, expected date of realization of assets. They are not able to pay the financial liabilities, no material uncertainty exists as on the date of financial statements. Whether they are able to pay off all the liabilities within a period of 1 year, we have to see. For CSR, it is split into two other than ongoing and ongoing project. If the amount for an ongoing project, it has to be transferred to a special account as per 135 subsection 6. Other than ongoing projects, within a period of 6 months, it has to be transferred in 135 subsection 5. Consolidated financial statements, whether there have been any qualification or adverse remark under CARO in the consolidated financial statements, just mention the para number of the CARO report, that is sufficient. These are the 21 clauses of CARO. After these 21 clauses, applicability is also there. To be honest, not that important for your attempt, but still we will finish it. It shall refer to every company, including a foreign company, except a banking company, CARO is not applicable. Insurance company, CARO is not applicable. Company licensed under Section 8 Act, CARO is not applicable. One-person company, small company, CARO is not applicable. For a private limited company under these limits, then it is considered as a small company, so CARO is not applicable. A private limited company, if it is a subsidiary of a public company, then CARO becomes applicable. A private limited company where it is holding a public company, then also CARO becomes applicable. So here also public should not be there. Here also public should not be there. Then only you come inside the limits itself. If public is somewhere in the picture, then CARO becomes applicable. So if it is a private limited company which is not a holding or a subsidiary of a public company, having paid up capital and reserves in surplus, not more than 1 crore rupees, less than or equal to 1 crore rupees, which has a total borrowings less than or equal to 1 crore rupees from banks and financial institutions. The revenue from operations, including the discontinuing operation, should be less than or equal to 10 crore rupees. Then in that case, we will say that CARO is not applicable. But keep in mind, if public company comes into the picture, public company means big company. All big companies, CARO automatically becomes applicable. Is that easy? CARO is very, very easy, right? All the 21 clauses, 10 marks has come to your pocket. And remember guys, these three standards, 700, 701 and 705, I want you to study on your own. Don't skip it just because we have not done it. Moving ahead to chapter number 3 guys, risk assessment and internal control. Wait. Don't skip this chapter. I know many of you all are planning to skip this chapter, especially this essay 315 and all. That is the reason why I have written the marks here. 4 to 8 marks. 4 to 8 marks. Do not skip this guys. At least study these 13 questions. That should be the mindset for you. Let me at least study these 13 questions and then go to the exam hall. Now I am starting off with question number 1, and trust me, it's easy. Till now it was easy, correct? We found a way to remember things. We did a little bit of mnemonics here and there. It is easy. Essay 315 is also easy. I'll go a little slow here because I know many of you all would not have studied this standard. What is inherent risk, control risk, detection risk, and what is sampling and non-sampling risk? Inherent risk means the risk is inherent. Risk is whatever you do, you cannot eliminate that risk. It will always be there. That only is inherent risk. Say, for example, there are 10 businesses in a particular industry. During COVID, hospitality industry, all of them, they fell. Will you go to the hotels and eat food? Will you go to cafes? Will you go to restaurants and eat food? No. We all ate only home food during COVID. So during that time, entire hospitality industry fell down. Now, inherent risk means if you are also part of that industry, you are also doing a business who is into hospitality only, then definitely no chance you will have a way out. You will also fall down. That is called as inherent risk. The susceptibility of the assertion about ABCD to a misstatement could be important when it is aggregated with other misstatements before consideration of any related controls. Read the example, you will understand. There are large number of business failures in another industry. Therefore, assertions in financial statements of an entity operating in such an industry carrying an inherent risk of being misstated. Now, if everything is going to fall, then there is a possibility that there is a fraud which can happen here. An accounting standard, there is some complex guidance which is given in the accounting standard, and management is not understanding this at all. Some complex issue which might not be understood by the management. Therefore, recording of this issue in the financial statements carries the inherent risk of being misstated. If they don't understand, can we expect them to correctly record it? Inherent risk, that definitely it will be misstated only. Inherent risk means whatever you do, you will not be able to save that. There will be a misstatement there. You cannot change it, because when everything is falling, the company also will fall. When everything is falling, there is a possibility that company will make a misstatement. So no one can save it. That only is the inherent risk. What is control risk? Control risk is the risk that a misstatement can occur in ABCD that could be material, where a control which is supposed to be there is not there, or a control which is supposed to be there is there, but it is unable to do its job properly. What is the job? It is to prevent, detect and correct the misstatement. So control risk is the risk that the misstatement that could occur in an assertion about ABCD and that could be material will not be able to prevent, detect and correct on a timely basis by the entity's internal control, where internal control is unable to PDC, prevent, detect and correct. Examples of control risk. Company has devised control that cash and checkbook should be kept in a locked safe and access is granted to authorized personnel only. There is a risk that this internal control is not being followed by that entity. Detection risk is what? Detection risk is of the auditor. Now, till now, inherent risk and control risk is that of the management. It is that of the client. But detection risk is that of the auditor, where detection risk is the risk that the procedures performed by the auditor to reduce the audit risk to an acceptably low level will not detect a misstatement. An auditor is supposed to detect a misstatement, but whatever audit procedure that the auditor is doing is unable to detect the misstatement that exists, and that misstatement could be material, either individually or when aggregate. This detection risk, there are two types for it, that is sampling risk and non-sampling risk. Sampling risk means whatever sample that you are taking, it is supposed to represent what? It is supposed to represent the population. But sampling risk is a risk that auditor's conclusion based on that sample may be different from the conclusion based on the entire population. If the auditor has selected each and every item from the population and has tested it, the conclusion would have been different. Because the auditor did a sample basis, the conclusion is different. That means what? The way the sample was selected is wrong. The sample is not representative of the population. That is the sampling risk. What is non-sampling risk? It is the risk that auditor reaches an erroneous conclusion for any other reason not related to sampling risk. Say, for example, I'm supposed to do inspection, I'm supposed to do recalculation. I just did inquiry and left it. Inappropriate audit procedures. That is non-sampling risk. Sampling risk is risk that auditor gives a wrong conclusion based on the sample that is selected, provided if it has selected the entire population, the conclusion would have been different. That means the sample is wrong. For non-sampling risk, the risk that the auditor reaches a wrong conclusion for anything not related to sampling risk. For example, inappropriate audit procedure. Now, audit risk is ROM and detection risk. ROM is only inherent risk and control risk. Now, what is audit risk? Audit risk is a risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. That means when the financial statements are materially misstated, there is some mistake which is there in the financial statement, but auditor says that financial statement is very good and gives a clean report. In that case, this is called as audit risk. Now, what you have to note here is the vice versa is not audit risk. Say the financial statements, there are no material misstatement. That means financial statement is actually good, but auditor gives a modified opinion. Auditor says that something is wrong. This is not an audit risk. Just because auditor makes a mistake, don't say it is an audit risk. Audit risk will come only if people who are believing on that signature are being fooled. Now, in this case, you imagine if the auditor says that the financial statements is clean, bankers will give the money, government will give the money, suppliers will give extra credit looking at the financial statements, but in reality, the financial statements are materially misstated. So, who will be the loser in the end? All the stakeholders will be cheated in the end. In this case, the auditor is saying it is wrong, but in reality, it is not materially misstated. It is all clean only. In this case, no one is going to believe this report and give anything. So the stakeholders are not getting affected here. So this whole scenario is not an audit risk. Audit risk is only the risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. If the financial statements are correct and if the auditor gives an inappropriate audit opinion, it is not an audit risk. Audit risk is a function of risk of material misstatement and detection risk. Audit risk is a function of inherent risk and control risk and detection risk. That means what? Risk of material misstatement is inherent risk and control risk. Are you able to understand? Yes? Clear, guys? Now we saw inherent risk, detection risk, control risk. The next one is risk assessment procedures. Inquiry of management and others, observation and inspection, insight points also. Now one thing which you have to understand is for risk assessment procedures, there are 4 things that you have to remember. Analytical procedure, inspection, inquiry and observation. For risk assessment procedure, analytical procedures, inspection, inquiry and observation. Now for normal audit procedures, SA 500 audit procedures, I told you it is error, external confirmation, inspection and inquiry, reperformance, observation, analytical procedure and recalculation. Now again it is coming something else and confusing or feeling like ayo. So risk assessment procedure means you remember it as ayo. What is that ayo? Analytical procedure, inspection, inquiry and observation. Now see here. For risk assessment procedure includes the following: analytical procedure, inquiry, observation and inspection. Now the question in the expected question list is such that they can ask this separately and this separately. Now inquiry of management and others within the entity. Why will the auditor actually inquire with the management and others? And who are that management and others that you are talking about? Now say for example, I want to understand what is the risk when I undertake this audit. How will I understand? Only when I see what is happening around the entity will I be able to understand. Now, if you want to marry somebody in the future, how will you understand what is the risk of marrying this person? Is this person a truthful person? Can I believe this person? Can I trust this person? You will have hundreds of doubts, especially if you are a girl. Even if you know that person, you will have hundreds of doubts. Yes or no? Because of the stories that we are hearing on a day-to-day basis. Now, what we will do? We will see where that person is working, especially in arranged marriage scenario. They will go and see where that person is working. They will ask around, how is that person? Does he have girlfriend? Does he have bad habits? Like that you will ask about that person around his area, his neighbors, where he is staying. You will go to them and you will ask, hey, do you know that guy? How is he? Is he a good guy? Like that you will ask. If you have any mutual friends with them, freely you can ask, hey, I saw that you are a mutual friend. How about him? How is he doing? Is he a good guy? Like that you can do your inquiry process with everybody around that person so that you understand about the person. Yes or no? Same way, for entity also, you will be inquiring for the people around the entity. Who are the people who are around the entity? Inquiry directed towards internal audit personnel, inquiry of employees, inquiry towards in-house legal counsel, inquiry towards marketing or sales personnel, inquiry towards risk management functions, inquiry towards information systems personnel. You understood? Whatever entity is doing, you are inquiring around the entity. Whoever is involved with the entity will inquire with them, so that you will understand what is the risk. You are assessing the risk. As part of the risk assessment procedure, the first procedure that you will be doing is inquiry. Inquiry, which is directed towards internal auditor, employees, in-house legal counsel, marketing and sales, risk management, information system personnel. 6 points are there with respect to inquiry. Now you also have to know what you have to inquire. Internal audit personnel may provide information about internal audit procedures which is performed during the year, respect to design effectiveness of internal control. Employees involved in initiating, processing, recording complex or unusual transaction. Inquiry directed towards in-house legal counsel. They may tell about litigation, compliance with laws and regulations, knowledge of fraud or suspected fraud affecting the entities, post-sales obligations, arrangements, all those things. The sales people, legal people will be able to tell. Inquiry directed towards marketing or sales personnel. Changes in entities' marketing strategy, sales trend, contractual agreements with the customers. Inquiry towards risk management function, information about operational and regulatory risk. Inquiry towards information systems personnel. What are the system changes, system or control failures, information system related risk. Are you able to understand how to study? So the inquiry of management and others within the entity, you will have to write those 6 points. A is analytical procedure. You already know in SA 520 what and all is there. IO is observation and inspection in the same place. Now, what will you observe and inspect? The entity's operations, that is control manuals, internal control manuals, the documents, the business plan, strategy, records, and any other internal documents, reports prepared by the management, quarterly management report, interim financial statements, and TCWG, such as minutes of the meetings, board of directors meetings, entities, premises, and plant facilities. Now, you're going and inspecting these places. What are you inspecting? You're inspecting the documents. You're inspecting the documents such as business plan, strategy. You're inspecting the report which is prepared by the management. You are inspecting the premise and plant facility. You will inspect the control manuals. You will also observe what is happening in the internal control. You will also observe what is happening in the entity's premises and plant facility. That's why it is coming under inspection and observation. These 4 points you will have to remember. See how they will ask is, they will not ask what is risk assessment procedure, write what is under that. They might ask, as part of risk assessment procedure, what kind of inquiries has to be done? Where will you do the observation and inspection with respect to the risk assessment procedure? Like that, if they ask, then you will have to write these 4 points. Are you able to understand, guys? From where he is coming, how he is asked the questions. Understanding the entity, it is a continuous process. Yes, of course, it is a continuous process. This only all the standard names, standard numbers will come if you remember. Understanding the entity, it is a continuous process. Now, say for example, before getting married, you have inquired, you did your observation, you went to their house, you saw how is the house, you did everything possible, you're fine. You're completely fine. Now you feel like, okay, I know about this person. Do you really know about that person? Can you ever really know about any person in this planet? The answer is no. The answer is not yes, sir. 100% you cannot know everything, maybe 99%. Reasonable assurance, yes, you can have. But absolute assurance, investigation and all, don't do. Waste of time. Don't do that investigation and all. Be happy with that reasonable assurance. Now, you have to keep understanding about that person. Of course, people will change as the years go by. The same person is not going to be there. People are bound to change. People are supposed to change. Are you the same person who was in school? You changed, correct? Same way you will keep changing when you are 25 years old, 30 years old, 40 years old, 50 years old. I will also keep changing. I am not the same person whom I was when I was a student right now. I am not the same person whom I was when I was in school right now. There is a drastic difference. So if you really have to understand a person, Continuously, you have to put the effort to understand. Same way when you go to an entity also, okay, I remember risk assessment procedure. I did all the IO procedures. Now I know in and out of the entity. No. You will never know in and out of the entity. It is a continuous process to understand about the entity. Now I told you the way you have to remember this is there are multiple SA numbers that you have to remember. That's it. Identifying and assessing the risk of material misstatement. Where did you see that? In 315. Materiality. 320. Considering appropriateness of the selection and application of accounting policies. Where did we see about accounting policy? In SA 510. Identifying areas where special audit consideration may be required, related party transactions, appropriateness of management's use of going concern or considering the business purpose, developing expectations for doing analytical procedures, evaluating for written representation 580. See here, 315, 320, 510, 550, 570, 520, 580. That's all you have to remember. In 500 series itself, how many? 1, 2, 3, 4, 5 are there. In 300 series, 2 are there. That's it. So understanding the entity, a continuous process, you only have to write standard names. So if it is 315, identifying and assessing risk of material misstatement of the financial statements, if you write also, you'll get marks. 320, determining in the materiality concept as per SA 320. What is 520? Accounting policy. Appropriateness of the selection and application of accounting policy. Identifying areas of special audit. Under this, we have 550 and 570. For example, related party and appropriateness of management's use of going concern assumption. 520 is what? Expectations for doing the analytical procedures. 580 is what? Written representation from the managements. Is that clear? Now, these 6 points is for understanding the entity, whether it is a continuous process. Understanding entity and its environment. Read the inside points also. First, let's see the outside points, guys. Understanding the entity and the environment. The first one is understanding the entity and environment. So, environment is the industry, regulatory, and applicably financial reporting framework. What is the nature of entity? What is the operations? Who has the ownership? How is the financial structure? What is the debt? What is the capital? How is the group structure? All of those things will come under nature of the entity. Accounting policies, including reason for change of the accounting policy. Every business will have the risk. How is it for this entity? How are the industry developments? Is there any new products or services? Is there any expansion which is happening? All of these will come under the business risk. And finally, the financial performance. How will you measure? What are the key performance indicators? How is the credit rating agencies talking about the financial performance? All these things will come under understanding the entity and the environment. Relevant industry, regulatory and other external factors including AFRF. Example of matters: market, competition, whether entity is engaged in seasonal activities. Example of matters include account principles, industry specific practice, regulatory framework, direct supervisory activity, taxation, government policy. All of this will come under understanding the relevant industry, regulatory and external factors. Nature of the entity. I told you nature of the entity will cover operations, ownership, financial structure, group structure, debt equity ratio, all those things. It's operation, ownership and governance structure. Types of investments that entity is making. The way the entity is structured and how it is financed. Example of matters that auditor will consider while obtaining understanding of the nature of the entity includes business operations, investment and investment activity, financing and financing activity, financial reporting such as accounting principles and revenue recognition. If you remember, cash flow statement, operating activity, investment activity, financing activity, those 3 points only are the first 3. Business operations such as nature of revenue sources, investing activities such as capital investment and planned or recently executed acquisitions, financing activities such as major subsidiaries debt, financial reporting such as accounting principle and revenue recognition practices. So this is what nature of the entity. Selection application of accounting policy, whether they are appropriate and whether they are consistent with the AFRF. Entities, objectives and strategies and the business risk that may result in risk of material misstatement. What kind of business risk can happen? New products or services, expansion of business, industry developments, all of these are business risk. Measurement and review of entities, financial performance. What kind of financial performance can happen? Key performance indicators. What kind of KPIs? What are the key ratios? Trend analysis. operating statistics, period on period financial performance analysis. What happened last year? How was the current year trend analysis? What is going to happen in the future? If you see here, it is past, present and future. Past is what has happened previously. Current is period on period financial performance analysis. Future is budget, forecast, variance analysis. And apart from that, additional point is credit rating agency. This one is for which question, guys? Don't remember only the answer. Question is also important. Understanding the entity and its environment. We studied the inside points also for each of the points which is given. Now I'm going to move ahead to the next question, that is definition, purpose, nature, objectives, benefits and limitations of internal control. Internal control is really important, guys. They can twist and ask so many questions with respect to internal control. Now what is internal control? You first have to understand. Actually, if you see, internal control, only so many questions are possible. Nothing more they can ask with internal control. Now see here, the definition of internal control, I will read through it and then I will explain to you. As per SA 315, internal control may be defined as a process which is designed, implemented and maintained by TCWG and management to provide reasonable assurance about achievement of the entity's objectives. Now, first thing you have to understand is, this is a process which is done by whom? By the management and TCWG. For whom are they doing? For achievement of entity's objectives of entity. That means entity means management and TCWG only, right? So it is done by the management at TCWG for the management only, for the management and TCWG. It is designed, implemented and maintained by the management for the management to give some reasonable assurance. Now, what is that objectives we have to see? There are 4 objectives: reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, compliance with applicable laws and regulations. Now, I will write it down separately here so that you have a better understanding of the definition of internal control. Definition of internal control is, it is a process which is designed, implemented and maintained by the management and TCWG to give what? To give a reasonable assurance about achievement of entity's objectives. What are the 4 objectives? Effectiveness and efficiency of operations, safeguarding of assets. What else is there? Safeguarding of assets, effectiveness and efficiency of operations, reliability of financial reporting, and there was one more which was there. Safeguarding of assets, compliance with applicable laws and regulations. Laws and regulations. So these are the 4 objectives that internal control is going to take care of: effectiveness, efficiency of operations, safeguarding of assets, reliability of financial reporting and effectiveness of laws and regulations. It is a process which is designed, implemented and maintained by management and TCWG to give a reasonable assurance for the achievement of entity's objectives. Now, you have to understand, in PVR, there will be a person who is standing outside the theater, correct? You know PVR theater, there will be a person who is standing outside the theater. This only is the screen, there are all the seats. Now say for example, you are going inside the theater. When you want to go inside the theater, you are showing something to that man who is standing outside the theater. What are you showing actually? You are showing the QR code or you are showing the ticket. Is he actually seeing the ticket? He will simply see and he will say, he won't even see the date, he won't even see the row, he will simply see and he will send you inside. Now if you book the ticket for 10 people, can 12 people actually go inside and sit? Yes, it is possible. That means the internal control of PVR is weak. This internal control, if it is weak, who is going to suffer? PVR is going to make the loss, where 2 people extra will come and sit and watch the movie without even paying for the ticket. That means it is for PVR the internal control is framed. Now, are you able to get a better understanding about what is internal control, guys? Yes. Now see, objectives of internal control. Transactions are executed in accordance with management's general or specific authorization. For this, I'll tell you another example for internal control. Say for example, for petty cash which is there. Petty cash means cash which is kept for day-to-day use in the organization. If there is petty cash, I will frame the rules for petty cash. Less than 5,000, no need to ask anyone, you can just take the money. If it is less than 10,000, 5,000 to 10,000, then you have to get the general manager's signature, then only you can take the money. More than 10,000, less than 50,000, you have to get the director's signature, then only you can take the money. More than 50,000 and all from petty cash, you have to take partner's signature. More than 1 lakh, you should never take it out from the petty cash. Now this is a rule that I am forming. This is the internal control that I am forming. Now what I did here is less than 5,000 you can just take, you don't need anybody's approval. The person who is keeping that petty cash, if he approves itself, it is okay. That is a general authorization that I have given. Specific authorization for more than 5,000, less than 10,000 general manager, more than 10,000, less than 50,000 director, more than 50,000 partner, more than 1 lakh, no one will be able to approve from the petty cash. Like that, I'm giving a specific authorization. This is the internal control for petty cash, where transaction is executed in accordance with management's general or specific authorization. All the transactions are promptly recorded in correct amount, in correct account, and in the correct period in which it is executed. Properly it is recorded in proper amount, account, and period. Assets are properly safeguarded from unauthorized access, use, or disposition. If someone comes and directly takes the assets and goes and sells it off, say we have laptops in the office. If people who are coming to the office are going and selling the laptop, downstairs there is a watchman Tata. He will ask, hello, where are you taking the desktop and going? Are you taking it home? Like that he will be able to ask. That means assets are safeguarded from unauthorized access, unauthorized use, or unauthorized disposition. The recorded assets are compared with the existing assets at reasonable intervals. That is, physical verification is done for internal controls only. This is the objective of internal control. Why should you understand the internal control? So that you will know, is there any risk of material misstatement? Is there any potential misstatements that is there? Based on that, I will do my FAP. That is nothing but the further audit procedures. Based on these two, I will do my further audit procedures. These are the benefits. The understanding of internal control assists the auditor in identifying the misstatement, identifying the factors that affect the ROM, designing the net of further audit procedures. What is the limitation of internal control? If there are benefits, definitely there will be disadvantages also. We started off with definition. This is a process designed, implemented, maintained by TCWG management to provide reasonable assurance about achievement of entities' objectives with respect to 4 things: safeguarding of assets, laws and regulation, reliability of financial reporting, and effectiveness and efficiency of operation. Then objectives of internal control: transactions for general and specific authorization. Transactions are properly recorded in correct account, correct amount, and correct period. Assets are properly safeguarded, and recorded assets are compared with existing assets. That is, physical verification is done properly. What are the benefits? I'm able to identify misstatement. I'm able to identify ROM. I'm also able to see the net of further audit procedures. Clear, guys? What is the limitation of internal control? Whenever there are advantages, there will be disadvantages also. The definition, what did we study? It is a process which is designed, implemented, and maintained by the management TCWG to provide a reasonable assurance. That itself is the first limitation. Internal control can provide only a reasonable assurance and not an absolute assurance. Internal control is done by whom? Management and TCWG. They are all human at the end of the day. So there is a human in judgment. So the decision making can be faulty, and breakdown in internal control can happen because of human error. The person who is doing this, in our example, the PVR person who is doing this, he does not understand as to why he is standing there. That's the reason he is simply looking at the phone and sending you off. So the person, if he does not understand, then it becomes a waste. Lack of understanding the purpose, then it may not be effective, such as where information produced for the purpose of internal control. Collusion among people. Now in petty cash, I told you, I kept slabs of amounts where each person will be responsible. There can be collusion among the people where people will get confused as to where I have to go and get what approval. Collusion of 2 or more people. or inappropriate management override of internal control. Judgment by management. In designing and implementing control, management may make judgment on the nature and extent of control it chooses to implement. Limitations in case of small entity. If there are only few employees, how can I say you get sign from here, sign from here? There are only 10 people. How between them we will keep changing the signs? So smaller entities have fewer employees where segregation of duties is normally not practicable. These 6 are the limitations of internal control. The next is components of risk of material misstatement. Did we already complete the components of risk of material misstatement? Inherent risk and control risk. Now what is the components of internal controls? Insight points also for each of the internal control components they are asking. Components of internal control is crime. What is crime? Control activity, risk assessment procedure, information system, monitoring activity, and control environment. These 5 are the components of internal control. See here, the components of internal control is crime, control activity, risk assessment procedure, information system, monitoring of control, and control environment. What is the control activity? This is the internal control in itself, the activity of the internal control. Control activity is the policy and procedure that helps to ensure management activities are carried out. The mnemonic that you will remember is ISPA with double P. I is information processing, segregation of duties, performance review, physical control, and authorization. This is the control activity. This is the first C, guys. This is first C. R is risk assessment procedure. You already know what is risk assessment procedure. This is the component of internal control. This also is ISPA. You have to identify the business risk, see the significance of the risk, see the probability of the risk, and see what actions you have to take for that risk. That is also ISPA. There was double P, here there is only single P. Identifying the business risk, estimating the significance of the risk, assessing the probability, that is a likelihood, deciding about actions to address the risk. Entities risk assessment procedure, which is a component of internal control. Then you will come to ISPA. If they don't talk about internal control, normally if they talk about risk assessment procedure, you will go to where? You will go off to IO, you will go there. Are you able to understand? Now, this is the R. Crime law. Next is I, information systems. Information system, what you will check? The class of transactions in the entity's operations that are significant to the financial statements. Procedure by which the transactions initiated, recorded, processed, corrected. How are the backup records there? How the information system captures the financial reporting process, control surrounding journal entries. This is respect to the information system in CRI. M is monitoring of the control. So why is monitoring of control actually required? After internal control has been established by management and TCWG, it is for them only. They themselves will see, that is the management and TCWG itself will come and see whether the controls are operating effectively and efficiently. Whether controls are in place properly, they themselves will keep monitoring. So monitoring is a process to assess the effectiveness of the internal control over time. It helps the effectiveness of the control on a timely basis. Management accomplishes monitoring through ongoing activities. Management's monitoring activities may include using information from communication from external parties such as customer complaints and regular comments that may indicate problems or highlight areas in need of improvement. This is monitoring of control. The last one, that is control environment. The environment is surrounding the internal control, correct? The auditor will obtain understanding of the control environment. Here the auditor shall evaluate whether management has created and maintained a culture of honesty and ethical behavior. Strength in the control environment elements collectively provide appropriate foundation. So control environment will basically talk about the culture of the organization. How is the culture which is maintained? For that the mnemonic is SHAPE PC. S is organizational structure, H is HR policies and practices, A is assignment of authority and responsibility, P is management's philosophy and operating style, E is ethics, another P is participation by TCWG, and C is commitment to competence. That is SHAPE PC. These are the elements of the control environment. Now, all of this put together is only crime, that is components of internal control. Is that clear? Crime components of internal control. The first C stands for control activity, ISPA with double P. Risk assessment procedure is R, under that also ISPA with single P. I is information system, how data is captured, how the backup record is there, all that we saw. Then monitoring activity, that ongoing activity we saw. Last one is E, control environment, where it is talking about the culture, and for that the mnemonic is SHAPE PC. What is SHAPE PC? Organization structure, HR policies and practices, assignment of authority and responsibility, philosophy of the management, ethics, participation by TCWG, and commitment to competence. That is SHAPE PC. Elements of control environment, SHAPE PC is completed. Next one is, are all the controls relevant to audit? Now there will be thousands of internal controls. We as auditors need to know which control is required for me for audit purposes. For that you have to see SLM, NCC, DRS. See, here are all controls relevant to the audit. There is a direct relationship between entity's objectives and the control it implements. The factors relevant to auditor's judgment about whether a control individually or in combination with others is relevant to the audit may include such matters as the following: materiality, size of the entity, legal and regulatory requirements, this is SLM. NCC, nature of the entity's business, nature and complexity of the systems, component of internal control, this is NCC. DRS, diversity and complexity, related risk and specific control, this is the DRS. Now SLM, NCC, DRS, these 9 points are all controls relevant to audit. Actually the meaning is there are thousands of control, but for audit purposes we'll be taking only the controls which is of high importance, that is materiality. Where the significance of related risk is there, that is the important one, so we will be considering that. The size of the entity will tell us whether we have to test all the controls or what kind of samples that we have to take. What is the nature of the entity's business also will tell me what kind of controls I have to test. The complexity, the legal, the component of internal control, the complexity of the system, the specific control, whether this is able to prevent, detect or correct the material misstatement, all of these are going to tell me what are the controls that I have to pick. What are the controls which is actually relevant for me as the auditor? Because actually if you go to HUL, LNT and all, I have seen the internal controls with respect to internal audit. We used to do testing of controls there. There used to be not thousands, lakhs of internal controls are there. We have to see what is important. We have to see what is relevant for us, and we will be picking the controls. And at that time, this SLM, NCC, DRS will come in handy so that we will know as to what are the internal controls that we have to pick. Nature and extent of understanding the internal control. How deep I have to go to understand the internal control they are asking. Now for nature and extent of understanding the internal control, evaluating the design of the control involves considering whether control is capable of effectively preventing, detecting, correcting the misstatement. The same thing, internal control, it keeps repeating. Then comes risk assessment procedure. Normally for risk assessment procedure, what is the mnemonic that you remember? IO is the mnemonic, correct? Now you tell me, analytical procedure is going to find plausible relationship between financial and non-financial data. Now internal control, can there be any analytical procedures which can be done? So automatically A is out of the picture. So if they ask risk assessment procedure for internal control, then only IIO will come. If you want, you add a T. That is tracing the transactions through the information system relevant to financial reporting. If you remember, you talk about the tracing, but ideally A should not come. IIO must compulsorily come. Inquiry, inspection and observation. You can remember risk assessment procedure means IO is there. And for internal control, I will remove the A and add a T. So it becomes IIO T. That is inquiry, inspection, observation and tracing the transaction through the information system. Obtaining an understanding of the entity's control is not sufficient to test their operating effectiveness. Just because you understand something, that is not enough for you to test the operating effectiveness. Now, nature and extent is done. testing of internal control. Here MCQ possibility is there. Now when testing of internal control is there, again you have to remember a few audit procedures. What are the audit procedures? I will tell you. In the end, I will tell you all the audit procedures together. Don't worry, you will not get confused. For testing of audit procedures, it is IIO. Again and again it is coming. For 500, it was ARO. For risk assessment procedure, it was IO. Now for testing of internal control, it is IIO. Now is it looking like TR? Like Dandanaka, Danakanaka, TR? So IIO, TR will come here for testing of internal control. How you will remember? Testing is T. So T will definitely come here. Like that you remember. IIO TR. So testing of internal control is IIO TR. IIO you already know, that is inspection, inquiry and observation. TR, T stands for testing only. R is, now in ARO there were 2 R's. Reperformance was also there, recalculation was also there. Ma'am, why is this so confusing? No, it is not confusing. You tell me, internal control, you will be calculating something or you will be performing the internal control. You will do a reperformance. So this R is automatically reperformance. So for testing of internal control, it is inspection, inquiry, observation, testing and reperformance. They can ask in MCQ. Risks that require special audit considerations. Here, whether the risk is a risk of fraud, whether risk is related to recent significant economic, accounting or other development, the complexity of transaction, risk involves significant transactions with related party, degree of subjectivity in the measurement of the financial information, whether risk involves significant transactions that is outside the normal course of business. So risk that requires special audit consideration is here outside the normal course of business, degree of subjectivity for the financial information, related party and outside the normal course of business is similar, yes or no, complexity of the transaction, significant economic, accounting, developments like changes in regulatory environment, risk of fraud. All these are risks that require special audit consideration. The significant risk are inherent risk with both a higher likelihood of occurrence, higher magnitude of potential misstatement. So very frequently it can happen, or definitely there is a higher chance that it will happen. Then you will call that as significant risk. So this is testing of internal control is done. Risk that require special audit consideration is also done. Identifying significant risk is also done. Essay 315, you tell me, how easy was it actually? I told you I'll do a full briefing overview of all the mnemonics of Essay 315. We started off with normal audit procedures, that is AROR. Then, if there is risk assessment procedures, it is IO. Analytical procedure, inspection, inquiry and observation. If it is testing, you will say it is IIO TR. Now risk assessment procedure with respect to internal control, you will say IIO T, and this is tracing. If you remember T, it's okay, otherwise just write IIO, that also is completely fine. Apart from this, we saw components of internal control, that is crime, and under that, C, control activity is ISPA with double P. Risk assessment procedure is ISPA with single P. Control environment is shape PC. Is that clear? Easy when you look at everything together. Like this you will be able to answer if they ask in the question. Now essay 315 comes to an end. Automated environment. This is an important chapter, guys, because everything in the future is going to be AI and technology is literally taking over jobs right now. So automated environment is gaining a lot of importance in the last few attempts of audit also. Attempt on attempt, we can see a minimum of 4 marks from this chapter, guys. I'm moving forward with the first question, that is key features of an automated environment. So automated environment is basically using computers and doing the audit. What are the features of using computers? They are asking. One of the first features will be it is faster. It is able to tap vast amount of data. There will not be any silly mistakes, so accuracy will be there. Security is better because password will be required. Human errors will be less. Connectivity and networking capability, all of these are key features of an automated environment. Faster business operations, accuracy in data processing, processing large volume of data, integration among different business operations, better security and better controls, less human errors, provides the latest information, connectivity and networking capabilities. These are the key features of automated environment. What is data analytics? Data analytics is given here, 12th Roman number. Quickly, let's go through data analytics. So basically, to tap vast amount of data by using specific tools and techniques, that is called as data analytics. And when this data should be inside the computer. So there are lots of computer assisted auditing techniques also, where we call them as CAT, where computer will be helping us to do the audit. Nowadays audit is done like that only. If you go to Big Four, audit program will be inside a software, and that audit program will basically tell you what you have to do. So each and every audit will be done through the laptop, through the computer only. So data analytics for audit, the combination of process, tools and techniques that are used to tap vast amount of electronic data to obtain meaningful information is called as data analytics. Auditor can make similar use of the tools and techniques in the audit also. Nowadays, you tell me guys, if you want to do sampling, what do? In Google, either you can go and pick a number from 1 to 1000, or you can put all the data in ChatGPT and tell ChatGPT to say, pick a random sample of 10 samples from this entire population, and ChatGPT will brilliantly do the job. Yes or no? So all the data analytics is actually becoming easier right now with respect to Claude and ChatGPT taking over everything. Data analytics can be used in testing of electronic data and data residing in IT systems using spreadsheets. Now they are in Excel era. Spreadsheets is in Excel, and specialized audit tools, that is IDEA and ACL, to perform the following. Actually, if you see in Mind & Company, at least every single day we use Claude. We have those Claude credits. Every single day it will get exhausted, and after it gets exhausted, Claude will give us a time, say 3 o'clock. If it gets exhausted, come back at 5 o'clock. Like that, it will take 2 hours of break, and then it will again work, and it beautifully gives a dashboard. The dashboard will analyze real-time data. How beautiful it is. Real time, whatever is happening, I'll be able to see from the Claude dashboard in itself. Check the completeness of data and population that is used in either test of controls or substantive audit tests. Selection of audit sample. I told you selecting the audit sample can be done. Recomputation of balances. Yes, AI can do it in 1 second. Reperformance of mathematical calculation. Analysis of journal entry. Fraud investigation. Evaluating impact of control deficiency. Actually, you know what guys? We are hosting a new website for Mind & Company. Approximately around May 15th or May 20th, that website will go live. And right now the testing is being done by all 3 AIs, Gemini, ChatGPT and Claude. All 3 are doing the testing and giving us data. Whatever is wrong or wherever the flow can be corrected, we are correcting it, we are hard coding it. Sometimes we take the code also from Claude. And yes, AI is actually taking over data analytics. Of course, in audit also, the data analytics will be taken over by AI very, very soon. Or maybe in audit also, there are few softwares using AI to do the data analytics. What I know is Power BI, because when I did articles and after CA also in Deloitte, we used to use Power BI for data analytics. But right now, there are so many other tools. I'm sure AI has come inside Power BI also. I will not be surprised even if that happens. So that is data analytics. What are IT risks and what is its impacts? So of course we saw the features of automated environment and all. There are so many advantages. If there are advantages, there is a downside risk also. So what are the IT risks and what is the impact of that IT risk? This is the risk arising from use of IT systems. Inaccurate processing of data or processing the inaccurate data or both. What is the meaning of inaccurate processing of data? Now here, the processing is the problem. The second one is processing inaccurate data. Here, the data is the problem. That is the difference between the two. Inaccurate processing of data, processing the inaccurate data is happening in the second situation, or both. Unauthorized access to data, direct changes in the backend, excessive access or privileged access, lack of adequate segregation of duty, unauthorized changes to the system or changes to the program, failure to make necessary changes. See, where you have to make change, you have to make change. Where you should not touch, you should not touch. So unauthorized touching to the system or program is wrong, or not even touching the change that is for the system or program, that is also wrong. Loss of data, all these are risks arising. What is the impact of the IT related risk? The impact is on three things: on internal control, on reporting, and substantive checking. Impact on substantive checking. Inability to address above discussed risk may lead to non-reliance of data obtained from systems. We will not be able to trust the data. So it will lead to increased substantive checking, where we will do a detailed checking. Impact on controls. It can lead to non-reliance on the internal control system calculation. So it will result in additional testing of controls, that is additional audit work. Impact on reporting. It may lead to modification of audit report in some circumstances. This is the impact of IT related risk. The next one is what? General IT controls and application controls. What is the suitability they are asking? The general IT controls are the policies and procedures that relate to many applications and support the effective functioning of application controls. So these are indirect controls or pervasive controls. There are 4 types of general IT controls: data center and network operation, program change, access security, application system acquisition, development, and maintenance. These 4 are general IT controls. What is data center and network operations? The business, whatever said and done, has to continue its operations without any disruption. And if there is a disaster, then they have to know how to recover all the data from that disaster. That is data center and network operations, where they keep the data properly with them. Controls over data center and network operation. I told you: business continuity plan, disaster recovery plan, which deals with recovery from failures, also taken care of. Program change is what? The program has to continue its operations even when there is a change. Say, for example, Instagram is undergoing an update. It's been quite some time since that happened. But if you remember, 1.5 years back, there was an Instagram update. And when the update was happening, for 20 minutes, we did not have Instagram. And you know how many people felt like their hand itself was broken? And that is because when there is an update, there is an interruption in the service. When there is an update, ideally, they should be able to continue its operations. Otherwise, people will feel like they've broken their hand. The objective of program change control is to ensure that modified systems continue to meet the financial reporting objectives. It includes activities such as change management, recording, managing, tracking change requests, making and testing changes, etc. What is access security? The application security, data security, OS security, network security, physical security, all of that comes under the access security. Application system acquisition, development, and maintenance. The objective of this control is to make sure that the systems, whatever is developed, configured, implemented to maintain the financial reporting objectives. It includes overall management of development activity, project initiation, analyzing, designing, construction, testing, quality assurance. All these 4 are what? General IT controls. What is application control? Application controls are both automated and manual control. IT dependent is manual control. General IT is completely automated control. Now we have to see suitability of manual and automated control. The automated is the general IT control. Manual is the IT dependent control. Manual plus automated is the application control. This also in one of the RTPs, it was an MCQ question. For application control, what is it? Manual, automated, manual and automated, none of the above, something like that was given. So you have to know general IT controls are automated controls, application controls are manual and automated controls, and IT dependent controls are only manual controls. When you will use the automated controls? When there is large volume of data, when there is high volume of recurring transactions or control activities where specific ways can be adequately designed and automated. High volume recurring transactions. When manual elements are more suitable, large unusual non-recurring transactions, then you have to go for manual elements. In monitoring effectiveness of automated controls that require controlled response outside the scope of existing automated control, circumstances where errors are difficult to define, anticipate or predict, in that case we will go for manual control. This is general IT controls, application controls, suitability, testing methods in an automated environment. Whenever testing comes, it is IIO TR. This is automated environment. So IIO R. If you want, you write testing and R also, no issues. Now here automated environment, IIO is inspection, inquiry, observation, and R is re-performance. Now, see here, inquiry, inspection, observation, re-performance. Inquiry is the most efficient audit test. Yes, of course, it takes very less time, but it also gives the least audit evidence because what they say, we will not be able to trust. So, inquiry along with something else has to be there. What is this something else? Inquiry alone is not sufficient. Re-performance, if you take, it is the most effective. Effectiveness is very good, but if you have to do the same thing again, the time taken is too high, so efficiency is too low. So re-performance is most effective and gives the best audit evidence, but testing by re-performance could be very time consuming and least efficient most of the time. So inquiry in combination with inspection gives the most effective and efficient audit evidence. So inquiry along with inspection gives the most effective and efficient audit evidence. This also they can ask in this thing, MCQs, guys, where they will ask testing methods in an automated environment. What are the methods to be used? Inquiry and inspection, observation and inspection, re-performance and observation. Like that, they can jumble and ask you. You should be able to tick on inquiry and inspection. Simple. Inquiry is the most efficient, no doubt about it, but we don't know whether they'll tell the truth. So it is the least audit evidence. So inquiry along with something else must be used. Inquiry plus we are left with inspection, observation and re-performance. Re-performance is of course really effective, but the efficiency is not as much. So inquiry plus inspection as a combination is the most effective and also an efficient audit evidence. However, which test to use, when and what combination is a matter of professional judgment and will vary depending on several factors including risk assessment, control environment, desired level of evidence, history of error or misstatement, complexity of business, assertions being addressed. These only will tell me what I have to use as the audit procedure. Are you able to understand, guys? Testing methods is done. Assess and report the audit findings. Now, why are we testing the automated environment, seeing the manual controls, automated controls, manual plus automated controls? We're doing all of this to ultimately come to a conclusion, correct? So the auditor at the conclusion of the audit, there will be few findings or exceptions with respect to the IT environment and IT controls. And these exceptions, can he keep it by himself? He has to communicate to the management and TCWG. In some cases, he also has to communicate that to the board of directors and audit committee. What are the points to consider by the auditor? Are there any weakness in the IT controls? What is the impact of these weakness on the overall audit? Is there any deficiency? If there are any deficiencies, please tell to the management. There is a management letter or ICM. In both of these things, they can give the deficiencies to the management. Communicate in writing any significant deficiencies if there is any to TCWG. These two are with respect to deficiency. These two are with respect to weakness. Any weakness in internal control, impact, IT systems, impact of the weakness on the overall audit. The next two are with deficiency and significant deficiency. Now this is assess and report the audit findings. The next one is digital audit. Digital audit. Entities are embracing digitization as part of operations to keep pace with changing times. I told you nowadays audit can be done by AI also actually. Then you will have this question, ma'am, then my job will go. It will not go if you can control AI. If you can prompt and make the AI actually do its job properly, your job will be safe with you. But if you're like, no, I will not learn AI, I will not learn technology, then definitely AI will wash you off. So you have to be above AI. You have to be in a level where you will be giving the work to AI. New technologies are helping companies revamp their operations and rethink the way business is conducted. Companies are restructuring their business models driven by technology. Automation is the key to digitization. In such a business environment, use of digital technology is being made by auditors, right from planning to expression of final opinion. Auditors are making use of artificial intelligence, data analytics, and other latest technology to help understand the business process. By using the tools, auditor can conduct audit in a better way and devote more attention to area whichever is needing higher focus. Digital audit is helping auditors to better identify risks by making use of technology. So this is the digital audit. What is internal financial controls? It is the same thing as internal control only. In another chapter we saw IFC and IC over FR. The same question is here, IFC. Now what is the documentation that the auditor has to do with respect to the automated environment? Documentation is very important. The auditor shall document discussion among the engagement team and the significant decisions reached. So if there is any deficiency, first there will be a discussion with management and TCWG. Elements of understanding with each of the aspects of entity and environment and each of the internal control components. Identified risk of material misstatement at the FS level and the assertion level. Whatever risks identified and related control about which the auditor has given a understanding. The discussion, elements of understanding, key aspects of entity and environment, internal control components, sources of information, and the risk assessment procedure performed. Identify and assess ROM, risk identified, related controls about which auditor has an understanding. So the auditor has to document these 4 points. If I have to write that short for you, discussions with engagement team, understanding of entity and environment has to be documented. Risk of material misstatement at 2 levels, that is financial statement level and also at assertion level. Risk identified and related controls must also be documented. So these 4 points has to be documented with respect to automated environment. Audit approach in an automated environment. That is the last question with respect to this chapter. This is simple, guys. How the audit approach should be there with respect to automated environment. First is risk assessment, understanding and evaluating, test for operating effectiveness, and finally reporting. When you do the risk assessment, you will be identifying the relevant statement assertions, identify the source of misstatement, consider the risk from the IT system, identify the significant account and what kind of disclosures they have to do, quantitative disclosure, qualitative considerations, all of those things will come under risk assessment. Understanding and evaluate. What should I understand, evaluate about the automated environments, business processes, flow chart, narratives, RCM, risk and control matrices. Understand the design of controls by doing the walkthrough, IT general control, application control. All these things you will understand and evaluate. The third is test for operating effectiveness. Assess the net of control testing. Assess the reliability of the source data. Sample test it. Consider the competence and the independence of the people who are performing the testing process. The fourth is reporting. Evaluate control deficiency. Any significant deficiency, if it is there, ICM, internal control memo or management letter, and auditor's report also. All these things is respect to reporting process for automated environment. So 4 audit approaches are there: risk assessment, understanding and evaluating, test for operating effectiveness, and reporting structure. And with that, the automated environment 4 marks has come to your pocket. We only have 330 and 320 to finish this off. Very small and very easy. Let's quickly finish it. If you want a short commercial break, put your headphones and keep walking. That itself will be like a break. If you know a specific standard, say for example 320, I know very clearly, ma'am. So you put the headphones and you keep walking. And you can keep listening to me. You don't have to sit in one place. So when you walk, when your body moves, it feels like a break. So that's the reason why I said, and please have that water bottle next to you. Whenever the water is not there, please go fill it, because hydrating will keep your brain active, will keep your body active. That is also very, very important, guys. And yes, let us move on to essay 330. In essay 330, the first question is, what should the auditor consider for determining the extent of test of control? How deep the auditor has to go for extent of test of controls. Now, frequency of performance of the control. If it is too frequent, then he has to go more deep. The length of time during the audit period that and is relying on the operating effectiveness of the control. If the length of time during the audit period is too much that he is relying on the operating effectiveness control, then the extent also must go deeper. The expected rate of deviation from a control. If the rate of deviation is high, then the extent has to be deeper. The relevance and reliability of audit evidence to be obtained. Extent of test of other controls. If I do test of other controls, then here for the test of controls, I can reduce my depth, I can reduce my extent. So these 5 are extent of test of controls. What are the specific enquiries by the auditor when deviation in control are detected? Now, when there is a deviation in the internal control, what are the specific enquiries that the auditor has to do? Specific enquiries by auditor when deviations from controls are detected. When the deviation from controls upon which auditor intends to rely are detected, the auditor should make specific enquiry to understand the matters. Specifically with respect to the test of controls that have been performed, provide an appropriate basis for reliance on the control. Additional test of controls are necessary, or potential risk of material misstatement need to be addressed using substantive procedure. Irrespective of the assessed risk of material misstatement, the auditor shall design and perform the substantive procedure for each material class of transaction, account balance and disclosure. So what are the specific enquiries that he has to do? What are the test of controls that have been performed for appropriate basis of reliance? What are the additional test of controls that are necessary? And with respect to risk of material misstatement also, he has to ask the enquiry. What should the auditor do when he is designing the FAP, when he is designing the further audit procedures? What are the things that the auditor should ideally be doing? See, when he is doing the further audit procedures, if the risk of material misstatement is increasing, that means when he did the planning, the risk of material misstatement was at a certain level. Now when he again assessed it, it is at a higher level. Then he has to design the FAP accordingly. Yes, sir. So whenever in designing of FAP comes, the auditor will consider reason for assessment given to the ROM at the assertion level for each of class of transaction, account balance and disclosure, including probability of the misstatement due to ABCD, whether risk assessment takes into account the relevant control, obtain more persuasive audit evidence, the higher the auditor's assessment of risk. So this is for designing of FAP, the auditor has to check all these things. What should the auditor consider when he is using the audit evidence regarding controls from previous audit? If he has to use the audit evidence that he has obtained from his previous audits, he has to consider 6 points. The first one being, what are the elements of internal control? What are the elements? Crime, control activity, risk assessment procedure, information system, monitoring activities, and control environment. What are the risks arising from the characteristics of the control, whether they are manual risk or automated risk? Effectiveness of the general IT control, effectiveness of the control and the application by the entity, whether lack of a change in a particular control poses a risk due to the changing circumstances, and the risk of material misstatement, and the extent of reliance on the control. These 6 points are he has to check if he is using any audit evidence from the previous audit. Nature and extent of using the substantive procedure. See, essay 330 is actually really easy, correct? Very few questions is only given. Nature and extent of using the substantive procedure. See, substantive procedures are on the other side. So test of controls and substantive procedures should ideally balance out each other. I'll tell you, auditors' responses to assess risks are split into test of controls and substantive procedures. So if the test of controls here is done very well, here they can be little lenient. If the test of controls are not satisfactory, then he has to do a good amount of substantive procedures. So that balance has to be maintained, because after identifying and assessing the risk, the auditor is taking the response in SA 330. Identifying and assessing happened in SA 315. After that, how is he responding is SA 330. Now, how he will respond is by way of two ways, is by testing the test of controls and by seeing the substantive procedures. So both have to balance out each other. With this understanding, you just read out the substantive procedures, you will have a better purview. Nature and extent of substantive procedures. How deep I have to go and do the substantive procedures. Performing only substantive analytical procedure will be sufficient to reduce audit risk to acceptable low level. Only test of details are appropriate. A combination of substantive analytical procedures and test of details are more responsive to the assessed risks, because assessment of risk of material misstatement takes account of internal control. Extent of substantive procedures may need to be increased when the results from test of controls are unsatisfactory. In designing the test of details, the extent of testing is ordinarily thought of in terms of a sample size. What they are telling here, these two has to get balanced out. Test of controls and substantive procedures has to get balanced out. Same way, substantive analytical procedures and test of details, they have to be balanced out. If it is satisfactory here, I can be little lenient here. If it is not satisfactory here, I have to do good amount of substantive analytical procedures. Is that clear? So it has to balance out whenever the auditor is responding to the assessed risk. Now that is SA 330. Now we have only 320 to complete off chapter number 3, guys. SA 320, what is materiality, what is performance materiality, and what is benchmarks? Now, materiality is here, performance materiality is here, benchmark is here. There are three different concepts, but still they are interlinked with each other. What is materiality? Materiality in layman's English is called as important. Something is important, you have to give importance to some areas, that is called as materiality. SA 320, materiality in planning the audit and performing an audit, states that any kind of misstatements, including omissions, are important if they individually or in aggregate could reasonably be expected to influence the economic decisions of the users taken on the basis of the financial statements. So materiality is not always a matter of relative size. It could be, say, a fraudulent practice by a certain type of employees indicate that there is a huge flaw in the entity in itself. It indicates that the internal control might not be operating properly at all. So it does not matter about the size. Don't see just the size. Also, few people in the organization can tell you that something is important here. So, for example, to tell you, for a company which is making 10,000 rupee revenue, what will be materiality? Probably anything above 1,000, you will say it is really important. For a company making 1 lakh rupee revenue, you will be saying probably anything above 5,000 or 10,000 rupees becomes important. For a company making 10 lakh rupees revenue, you will be saying something about 25,000 or 50,000 or even 1 lakh. More than that, it becomes important. For a company making 1 crore revenue, then you will be saying something about 1 lakh will be important. Now, it is not that it is always the same percentage, correct? Now, here if you see, I put about 1%, but I started off with 10%, correct? So it is a matter of judgment that the auditor will be making to determine what is important, what is material or not. Now they have used this terminology called individually or in aggregate. Actually, if I have to tell you, if something is material individually, it is called as materiality. If something is material in an aggregate basis, then comes the concept of performance materiality. I will come there. Now say for example, now we are in 320, SA 320. Now say for example, there is a company which is making a revenue of 10,000 rupees. Now you told me that the materiality level for this company will be about Anything about more than 1000 rupees, we will consider that as material. Okay. Now, any fraud, if it is less than 1000, we will consider that as immaterial. Say not even 1000. 1000 looks like a big number, correct? Let the materiality be 500 rupees. So, any fraud which is less than 500 rupees, we will leave it, because for this company, 300, 200, let's not break our head about that. But if it is above 500, then it is important. It becomes really material for us. Now what happens? They are doing fraud of only 100 rupees. 100 rupees fraud, will it get caught here when the auditor is seeing materiality? It will not get caught. But this 100 rupee fraud is done 20 times. So what is the actual value? It is 2000. Ideally, it should be getting caught, but because it is done 100 rupees at 20 times, it is not getting caught. So, I will set a value which is less than the materiality level. Now, I am setting the materiality level at 50 rupees. So, this is for aggregate transactions. This is called as performance materiality. This is for singular transaction. That is for materiality level. Are you able to understand? Yes. Now read the theory, you will be able to understand. Materiality in planning and performing audit states that misstatements are important if they individually or in aggregate will be expected to influence the economic decisions of the users of the financial statements. Whereas if you see for performance materiality, here, read the theory which is given. Practically, it is difficult for auditors to design tests to identify the individual misstatements. When the misstatements are material in aggregate, it takes us to the concept of performance materiality. In our case, it was 100 into 20 times. In aggregate, it became material. Now, performance materiality means an amount or amounts set by the auditor at less than the materiality. What was our performance materiality? We set it as 50 rupees. It was still lesser than the materiality level. Set less than materiality to reduce to an appropriately low level, the probability of aggregate, uncorrected and undetected misstatement exceeds materiality for the financial statements as a whole. So, I am setting an amount which is lesser than the materiality amount to capture all the aggregate, uncorrected and undetected misstatement. Performance materiality is always set at a lower value than overall materiality. You know the reason why, because I have given you the example. It lowers the risk that auditor will not be able to identify a misstatement, that it becomes material when you add everything together. So, the auditor must determine both materiality and also performance materiality while planning the audit. Did you understand the concept? Now comes the concept of benchmarks, guys. Now, what did I do here? I said the revenue is 10,000 and I put some percentage. I think this is 5% of the revenue, correct? 5% of revenue is what I put. Now, for PBT of 1000, I will have a materiality level of probably 100. So I put 10% of profit before tax here. Now I can also do total expenses, because say I am seeing the materiality level for the expenses. So total expenses is say 1 lakh rupees. Different entities, guys. Don't think like, oh, revenue is 10,000, expenses 1 lakh, not like that. Different entities, different scenarios. If the total expenses is 1 lakh, now I am setting the materiality level for all the expenses, or say at 10,000 rupees. So I am saying 10% of total expenses is my materiality level for this entity. Now there is another entity for which the total asset is 1 crore. Total asset is 1 crore. Now I am seeing the fixed asset figure. Fixed asset figure is about 50 lakhs. Now looking at this, I am saying that my materiality level is 10 lakhs or 1 lakh. My materiality level is 1 lakh. Now 1 lakh divided by 1 crore, probably at like 1% of the total asset is my materiality level. Or I am able to say 0.1% of my fixed assets, simply I am saying, is the materiality level. Now what I am doing here is, I am doing a percentage on something. That on something is called as benchmark. Here my benchmark was total asset, here my benchmark was fixed assets, here my benchmark was total expense, here my benchmark was the revenue. Yes. Here my benchmark was the profit before tax. So whenever I do a percentage of something to find out my materiality level, that of something is called as the benchmark. Now read this. Benchmark in determining materiality for the financial statements as a whole, a percentage is normally applied to the benchmark to determine the materiality level. Example of benchmarks can be PBT, total revenue, gross profit, total expense, total equity, or net asset value. On this, I apply a percentage to find some number which becomes my materiality number. Factors that affect the identification of an appropriate benchmark. What are the factors which affects identification of benchmark? So what should I consider as my benchmark? Now say it is a NGO. For an NGO, if I take profit before tax as my benchmark, does it make any sense? It is pure stupidity, correct? For an NGO, I can probably take the expenditure, or I can probably take the donation value and then put a percentage on that and find the materiality. But for a profit-making company, I definitely can take PAT or PBT for my benchmark, for my materiality levels. So what are the factors that will affect the identification of an appropriate benchmark? There are 4 factors here. Elements of financial statements. What are we looking at? Assets, liability, equity, revenue, expenses. Whether this item requires the attention of the users. What is the nature of the entity? What is the industry, economic environment, ownership structure? How is it financed? And relative volatility. How frequently is your benchmark changing? That also is important. So the factors that may affect the identification of the appropriate benchmark, 4 points are there. Elements of FS, whether this requires the attention of the users, nature of the entity, and relative volatility of the benchmark. This is the first one, materiality, performance materiality, and benchmarks, factors for benchmark. Percentage to be applied for benchmark can ask in MCQ whether it is higher or lower. I will show you here. There is a relationship between percentage and the chosen benchmark, such as the percentage applied to PBT from continuing operations will normally be higher than percentage applied to total revenue. Obviously, what did we do when our revenue was 1 crore? We said 1 lakh, correct? So 1% or 10 lakhs, that is 10%. Now, PBT is 1 lakh. Now if we say 1 lakh is our materiality value, what percentage did we put? 100%. So on PBT, the materiality level was higher, the percentage was higher than the revenue. That only is given here. Percentage applied to PBT from continuing operation normally be higher than percentage applied to total revenue. Now say for example, our PBT was 5 lakhs. Correct? PBT was 5 lakhs. In this case, materiality is 1 lakh. So 20% of my PBT is materiality. Here 1% of my revenue is materiality because the revenue value is high, the percentage is low. Here the PBT value will be low, so obviously the percentage will be high. Consider, for example, auditor will consider 5% of PBT from continuing operations to be appropriate for profit-oriented company, while auditor may consider 1% of total revenue or total expenditure for non-profit entity. The same example I told you. Higher or lower percentages may be deemed appropriate in different circumstances. Whether the percentage has to be higher or lower, it will be deemed appropriate in different circumstances. How to document the materiality? What should you document? The materiality should be documented for the financial statement as a whole. It should be documented separately for ABCD also. The performance materiality also should be documented, and any revision from the 3 above, that also should be documented. Materiality for the financial statement as a whole. The materiality level for particular ABCD. The performance materiality. Any revision in the 3. Can you revise the materiality as audit progresses? Yes, the materiality can be revised as the audit progresses. What is the statutory requirement of the materiality? It is given in dabba, guys. That means it is very, very important. What is the statutory requirement saying? Any item of income or expenditure which exceeds 1% of the revenue from operations or rupees 1 lakh, whichever is higher, needs to be disclosed separately. 1% of revenue or 1 lakh, whichever is higher, has to be definitely shown separately. This is the first point. Second point is respect to equity shareholding, where shareholding is more than 5%. of shares if they are holding, then you have to specify the number of shares held, and this is normally as per Schedule 3 of the Companies Act. Nothing new you are learning here as such. But here the materiality level is 1% of revenue or 1 lakh, whichever is higher. If they ask the statutory requirement, you are supposed to write both the points. Alright. Now this is the statutory requirement. While planning audit, auditor makes judgment about the size of misstatement. What does this provide a basis for? The judgment about the size of misstatement provides the basis for net of RAP, net of FAP, and identification assessment of risk of material misstatement, and for benchmark also. I will show you that answer. Judgment about size of materiality provides the basis for determining nature, extent and timing of RAP, net of RAP, nature, extent and timing of further audit procedure FAP, identifying and assessing the risk of material misstatement. The auditor has to apply his professional judgment determining materiality, choosing the appropriate benchmark and determining the level of benchmark. How will you remember this? Judgment about size of size of misstatements is the keyword. Then you will just remember net of RAP, net of FAP, identifying and assessing risk of material misstatement, and choosing appropriate benchmark, materiality and level of benchmark. So 4 points are there for in planning the audit. Auditor makes a judgment about the size of the misstatement, and this provides the basis for net of RAP, net of FAP, identifying and assessing risk of material misstatement. Determination of materiality is a matter of professional judgment. Yes. So when auditor is determining the materiality level, he makes a few assumptions that the users of the financial statements understand that the financial statements are prepared as per materiality. The users of the financial statements understand that everything in the financial statements are prepared, presented and audited to the levels of materiality. The users have reasonable knowledge of the business. They have reasonable knowledge of the economic activities which are surrounding the entity. They recognize the uncertainties which is inherent in the measurement of the estimates and make reasonable economic decisions on the basis of whatever information is given to the users of the financial statements. It is reasonable for the auditor to assume that the users have reasonable knowledge of business and economic activities and accounting and willingness to study the information in the financial statements, understand that financial statements are prepared, presented and audited to the levels of materiality, recognize the uncertainties which is inherent for estimates and all, make reasonable economic decisions. So a matter of professional judgment is such that it is reasonable for the auditor to assume that the users have such knowledge. When is materiality and audit risk considered? It is primarily considered throughout the audit. The materiality and audit risk is considered throughout the audit when identifying and assessing the ROM, when determining the net of FAP, evaluating the effect of uncorrected misstatements on the financial statements and forming an opinion in the auditor's report. And with this, the essay 320 comes to an end. Guys, are you all alive, awake with me? All of you there? Yes, you all can understand, right? You all are having some kind of a confidence that yes, in one day itself we are able to revise so many standards. Are you able to recollect all the points? I hope you all are able to recollect, guys. I hope you all are alive and awake and you all are with me. I'm so happy that this marathon is actually helping so many of you all. I'm recording this when you are actually writing the costing exam. I already told you that. But yes, guys, this is only to save some time. Actually, I have to find the answers, go up and down. If I don't do that, if I actually do in live, it might take another 1 or 2 hours. You can see the time already right now. I'm sure like it will take overall about 5 to 6 hours to complete the entire marathon. But yes, we are going in super speed. Only the chapter number 3, I took it a little slow because I know many of the students have not studied this properly, especially the automated environment 315, 330. It's important and that's the reason why I went a little slow here. But I hope you are able to understand from the next chapter onwards. Again, I'll pick up speed like the previous ones, like how we did this one, completion and review, we did in good speed, 300, 230 and all, we did in very good speed. Same way, I will pick up the speed from the next chapters also. Guys, I'm sure chapter 3 was a little heavy for all of you, but in the end, it's all gonna be worth it. Just trust me, trust the process, and stay with me till the end. Only one more chapter to go. Only one more chapter to go, and it will go in no time. So just stay with me, guys. Let's go to chapter number 4, audit evidence, guys. And in that, 500 and 505, if you see, are given in red. That means they are important. Now I'm starting off with essay 500. The first question is, if an information is to be used as an audit evidence, now we have to see who is giving the information. If the information is given by entity, what I have to see. If the information is given by management expert, what I have to see. If the information is given by the entity, we have to see CAS. What is CAS? Completeness, accuracy, and sufficiency. Whether it is proper or not, we will have to see if it is given by entity. If it is given by management expert, then we have to see a lot of things. Nature and complexity of transaction, the risk of material misstatement, what are the alternative sources, is that expert employed by the entity itself, is the entity able to exercise control or influence, subject to technical performance standard, what is the auditor's knowledge and experience, what is the field of expertise, and what is the previous experience of the auditor with respect to this expert. We will have to see all of these things. If there is any information which is given by the expert which the auditor is using as audit evidence. Is that clear? That was the first question. What is audit procedures? Is very simple. You know the mnemonic error. What is that error? External confirmation, inspection, inquiry, reperformance, observation, analytical procedures, and recalculation. Now quickly let's go through each of the things. Inspection, examining the records or documents whether internal or external in paper or electronic form. What is the degree of reliability depending on the nature and source. Direct audit evidence of the existence of asset. Not necessarily has to provide audit evidence about ownership or value. Yes, of course, this is talking about different assertions which will come in as audit evidence. Inspection of tangible asset may provide reliable audit evidence with respect to existence but not about rights or obligation and valuation. What is inquiry? Going with a mic and asking questions, seeking information from knowledgeable persons. That is getting the formal written inquiries, evaluating responses. This is the integral part of getting the audit evidences. What is observation? Looking into the process. I am going and seeing what is the process, what is the procedure which is performed by the entity, and then based on that I will do an inquiry. Observation is basically looking at the process or procedure. External confirmation. This only is, I say, 505, where the auditor will get a direct written response from the third party. Where the auditor is getting a direct written response from the third party. Direct written response to the auditor from a third party, that is called as external confirmation. These need not be restricted to account balance. It can be for anything. It can be account balance, class of transaction. It could be anything. What is reperformance? Where auditor is he himself doing that activity. Again, independent execution is the keyword that you have to remember. Recalculation, mathematical accuracy. You definitely have to write this keyword. Analytical procedure. Which standard is this? SA 520 is talking about analytical procedure, where plausible relationship between both financial and non-financial data will be given. Audit evidence obtained from previous audit and circumstances provide appropriate audit evidence where the auditor performs audit procedure to establishing the relevance. All of these are what? The audit procedures. In the question, what was given? What are the audit procedures? What is the nature and timing of audit procedures? This part also we have to see. Yes, nature and timing of audit procedure. See here. I'll show you in the concept book. This one is the same, guys. Actually, if you see 5th Roman number in concept book will directly be translated here also. The 5th Roman number here also will be nature and timing of audit procedures. So the summary notes is basically exactly the replica of the concept book, just that keywords will be emphasized more in the summary notes. Now see here, nature and timing of audit procedure. The nature and timing is to be used may be affected by the fact that some of the accounting data and other information may be available only in electronic form or only at certain point or period in time. For example, for purchase order invoices, they will exist only in electronic form when an entity uses electronic commerce. Yes, for e-commerce website, where will the invoices be generated? In that website itself, or it may be discarded after scanning when an entity uses image processing system. So nowadays, everything is under electronic form only. So based on that, you have to do your nature and timing of audit procedures. Certain electronic information may not be retrievable after a specified period of time. Example, if files are changed, backup is not existing, then how will we verify the invoices? We are in a bad situation to verify the invoices. We just have to do an inquiry and leave it at that point. So what kind of audit procedures you will have to do depends on what kind of data you actually have in the hand. The next question is with regard to types of audit evidence, where they're asking about sufficiency and appropriateness, relevance and reliability. Sufficiency means they're talking about quantity. Appropriateness means they're talking about quality. But before that, what are the types of audit evidence? See here. Types of audit evidence will differ depending upon nature, depending upon source. Depending upon nature, we have visual, oral, documentary. Depending upon source, we have internal and external. What is this visual, oral, documentary? Anything that I see, observing physical verification of inventory is a visual audit evidence. Oral audit evidence, I am asking question, they are replying to me. That is discussion with the management, that is oral audit evidence. What is documentary? The name itself says that they are writing it and giving it to me. Say for example, fixed deposit certificate, loan agreement, all of these are documentary audit evidence. Depending upon source is simple, only two are there, internal and external. Internal means which originates within the organization. External means which originates outside the client's organization. So all your external confirmation will come under external audit evidence. All the sales invoices will come under internal audit evidence. All the purchase invoices will come under external audit evidence. Why? The answer is simple. Sales invoice is generated by whom? That entity in itself. Purchase invoice is generated by whom? By the supplier who is external to the organization, and that is the reason why purchase invoice will be external audit evidence. Depending upon source, it is internal, external. Depending upon nature, it is visual, oral and documentary. Now comes sufficiency and appropriateness. Sufficiency, I told you, is the quantity of audit evidence. The factors which is going to affect sufficiency, there are three factors. First one is materiality. If something is important, materiality means the meaning is it is important. If something is important, you are going to increase your audit evidence. Logically, that is only correct. That means materiality is directly proportionate to the audit evidences. The risk of material misstatement, that means there is a mistake which can happen here. It is a risky area. If the risk of material misstatement is high, that means if it is a risky area, then in that case the audit evidence should also be high. Again, it becomes directly proportionate. The audit evidence are directly proportionate to the materiality. The audit evidence is directly proportionate to the risk of material misstatement also. What is the size of population? Now, under size of population, we have homogeneous and heterogeneous population. Homogeneous means they are all similar to each other. If all the items in the population are similar to each other, should you have to go and test each and everything? If you just test a small sample, you will be satisfied. So less audit evidence is sufficient if it is homogeneous in nature. If it is a heterogeneous population, each and every item in the population is completely different, then you will be satisfied only if you actually go and test each and every item which is there in the population. So more audit evidence is required if it is a heterogeneous population. Is that clear? This is with respect to sufficiency, but the question is asking about sufficiency and appropriateness. Now listen to what is appropriateness. Appropriateness talks about relevance and reliability. What is relevance? What is reliability? The relevance means there should be some kind of a logical connection as to why you are doing what you are doing. Say for example, you want to see the sales in the organization. You are doing the audit of sales. In that case, if you go and disturb the supplier, does that make any sense? No, the sales invoice is generated within the organization, so it does not have any logical connection as to whatever audit evidence that you are getting. So relevance has to be there in whatever audit evidence you are getting. The second one is the reliability. Reliability means trust. Are you able to trust the audit evidence that you are having in hand? This reliability depends on multiple factors. If it is an original document, you will trust more, or if it is a Xerox, you will trust more. If original document is there, reliability automatically increases. Oral evidence, will you trust more, or documentary format, you will trust more? If it is in written format, documentary format, reliability automatically increases. Now, auditor himself is going and doing the audit, or auditor is sending somebody else to go and conduct the audit. Which one you will trust more? Auditor himself is going and conducting the audit. They'll have more reliability, more trust will be there. Internal control in the organization is very weak. If the surrounding internal controls are weak, then whatever data is coming from there, you will not be trusting. So if the internal control is strong, reliability automatically increases. Now, whatever I told here, only you will be finding it in the concept book also. See here, types of audit evidence, depending upon nature, depending upon source. Depending upon nature, visual, oral, documentary. Depending upon source, is it internal and external? For relevance and reliability, for relevance, what is the keyword that you have to have in mind? Logical connection. Relevance deals with logical connection for the purpose of audit procedure, and where appropriate, the assertion under consideration. Given set of audit procedure may provide audit evidence that is relevant to certain assertion but not for others. So you have to check for each and every assertion what is relevant, what is having the logical connection. With respect to reliability, the reliability is increased when it is obtained from independent sources. Reliability of audit evidence that is generated internally is increased. Audit evidence obtained directly by the auditor, then reliability increase. Audit evidence in documentary form, then reliability increases. Audit evidence in original document, then the reliability increases. Now it looks very simple after the explanation. Yes guys, now we saw types of audit evidence, sufficiency and appropriateness, relevance and reliability is also completed. Factors affecting sufficiency, that also is completed. If you remember, I told you here, factors affecting sufficiency, materiality, risk of material misstatement and size of population. Under the size of population, there is homogeneous and heterogeneous. So this question is also completed. The next one is audit trail. What is the meaning of audit trail? Now for audit trail, you have to first understand what is the meaning of audit trail. Say for example, you have taken a sales invoice. Now that sales invoice will be documented. There will be tenders which is given, and then selection of tenders would have happened. So how is the flow of the transaction to see? That only is the audit trail. Documented flow of transaction, where a source document is translated into an accounting record. Maintaining a record of system and user activity. Say sometimes we will also want to know as to who and all have entered the building. Then that is a log of user activity. How many people have entered the building? How many people have entered this computer? So log on attempt, that is also audit trail. It is a step-by-step record. Track the transactions including the final transactions. So all this is audit trail. Audit trail is basically the documented flow of how the transaction is moving from one place to the other. The next is assertions. What is assertion? What is positive assertion, negative assertion, explicit assertion and implicit assertion? Assertions are basically representations which is made by the management and which is embodied in the financial statements. Now assertions are representations made by management. So management is trying to tell something, but they might not explicitly tell it out. So there are positive assertions and negative assertion. Under negative there is explicit and implicit. Under positive there is explicit and implicit. What is the meaning of positive and negative assertion? Positive means I am saying something is there. Negative means I am saying something is not there. How will I say something is not there explicitly? If you see in notes to accounts, there is no contingent liability, like that they would have written, correct? So this is an explicit assertion that the company is making, and they are saying that something is not there, so it is a explicit negative assertion. Now, how do I implicitly say that something is not there? Say, for example, in the balance sheet asset side, there is building, there is furniture, there is fixtures, there is current assets, everything is there, all the numbers are given here. The company is trying to say that land is not existing as part of the company. So I am saying something is not there, but I did not write land is not there. I just omitted it. I am implicitly saying that land is not there. So it is a implicit negative assertion. Under positive assertion, we have explicit and implicit. Now, if I tell you explicitly that secured loan, 12% secured loan is 5 lakhs. Explicitly, I am telling you that there is a loan of secured loan, and I am also giving you other details with respect to amount, interest, and all of those things. Now, if I tell you cash in hand is 20,000. Now, I am implying that if you come here and see that really cash will be there with respect to notes or coins, and if you add everything together, exactly 20,000 will be there. I am implying that we do have cash in hand of 20,000 with this. But implying, and I'm saying it is there, so it is positive. Are you able to understand? If I say something is there, it is positive. Is not there means it is negative. If I tell openly, it is explicit. If I tell without telling it, it is implicit. Are you able to understand? These are the assertions. Positive, negative, explicit, implicit. Inconsistency or doubts over reliability of audit evidence. Now, sometimes what will happen? Inconsistency or doubts over the trust. Now, I got the audit evidence. I either did inspection, inquiry, re-performance, whatever I did, I got some kind of evidence. Now, I am having doubts about that evidence. If audit evidence obtained from one source is inconsistent with that obtained from another, that means while doing inspection, they are telling me that asset value is say 1 crore rupees, but when I went and did physical verification, I inspected the asset, only 80 lakhs is there. So the evidence obtained from one source, that is inquiry, is different from that which is obtained from the other, that is observation. If the auditor has doubts over the reliability of information to be used as audit evidence, the auditor shall determine what modification or what addition to audit procedures are necessary to resolve the matter, and shall consider the effect of the matter, if any, on other aspects of the audit. Example, responses to inquiries of management, internal audit, and others are inconsistent. Internal auditor is saying something else, management is saying something else, both are not matching, they are inconsistent with each other. Then in that case, the auditor has to see what modification, what additions has to be done to the audit procedure to resolve this matter. SA 230 includes a specific documentation requirement if the auditor identified information that is inconsistent with auditor's final conclusion regarding a significant matter. Now, the reason as to why I have given this question in red is because there is a reference to SA 230. SA 500, SA 230 combined questions. ICI loves to ask these combined questions. That is the reason why this is given in red. Inconsistency or doubts over reliability of audit evidence. Sufficiency also have given in red. Notice relevance and reliability also in red. If it is given by management expert, list of points we saw, that also is in red. Remember guys, red means extremely important. We can expect this time from SA 500 one question at least. Moving on to SA 501, we have segment reporting, litigation and claim, inventory. 501 itself has only these three things: inventory, litigation claims, and segment reporting. Easier, I will explain the entire 501 for you now. See here, how to study SA 501 is understand the assertion that they are actually talking about. If it is inventory, they are seeing whether really inventory is existing over there, and they are seeing the condition of inventory, because inventory means it has to be ready for sale, correct? And litigation and claims, completeness of litigation and claims involving the entity. That is, the completeness is the assertion which is being taken care here. For segment information, it is presentation and disclosure. First, understand the assertion. Inventory is existence and condition. When inventory is material to the financial statements, the auditor shall obtain audit evidence regarding existence and condition. How is he going to obtain audit evidence with respect to these two assertions? First, he will do the attendance at physical count of inventory. He will do a physical verification of inventory. and then he will perform audit procedure. Now when he is doing the physical verification of inventory, he has to inspect the inventory to see whether it is really existing and it is in the condition. Observe complaints with management's instructions, obtaining the evidence to the reliability of management's count procedures. Now, when he is doing physical verification of inventory, there can be some problems. The first problem is if the auditor is unable to attend the physical inventory due to unforeseen circumstances. Say, for example, on 31st of March, physical verification of inventory has to be done. But unfortunately, it is not being done because there are 10 other clients. It is not possible for the auditor to go to 10 different places on a single day. So what he did for 7 places in 31st March, on 31st March itself. For the remaining 3 places, he probably went on 4th or 5th of April. Then what he has to do is, he has to do audit procedures on intervening transactions. What is the meaning of audit procedures on intervening transaction? He will basically take the stock on 5th of April. For in our example, say 5th of April, he is doing the physical verification of inventory. He has to add all the sales which is happening between 1st April to 5th April. Stock on 5th April end only he is doing, minus the purchases between 1st April to 5th April. Then he will get the stock as on 31st of March end. Is that clear? Yes. So on these transactions also he has to do audit procedures. That is only the intervening transaction. Say for example, the standard is saying physical count of inventory has to be done and audit procedures has to be properly followed. But that date physical count is unable to be done, then it will be done on an alternate date. In our example is 5th of April. If it is done on an alternate day, then audit procedures on the intervening transactions has to be done. Now in the second case, if physical count is impracticable, it is not practicable for me to go and do the physical count of inventory because the inventory is kept in Jammu and Kashmir. I asked the client, sir, where is the inventory? I need to go and do the physical verification. They said inventory is in Jammu and Kashmir. Then I will not be able to do the physical verification. I will go for alternate audit procedures. If alternate audit procedures is also not possible, then the only way is to use the weapon, modify the opinion. Is that clear? Now, there might be another circumstance where the custody of the inventory is with third party. In that case, what should the auditor do? Impracticability may be because of the nature or location of the inventory. Where it is in the custody of third party, then in that case, what should the auditor do? In that case, the auditor will ask a confirmation with respect to the quantity and condition, and he will see whether he is able to do the inspection or he will go for other audit procedures. Quantity and condition, a confirmation will be asked, and inspection will be tried to be made, or at least other audit procedures has to be made. What is this other audit procedures? That is only acid. The other audit procedures are acid. What is A stands for? Another auditor. He will send another auditor to the warehouse and do the physical verification of inventory. What is C? Requesting confirmation from other parties when inventory has been pledged as collateral. If inventory is given to the bank, then confirmation from the bank has to be received. Internal control and inspecting the documents. This only is acid. Acid is the other audit procedures which is to be done by the auditor when he is unable to conduct the audit because the inventory might be in some other place. Inventory is in the custody of third party. In the case of litigation and claim, there will be an in-house legal team and an external legal counsel. The audit procedures that the auditor has to do is inquiry, reviewing the minutes of the meeting, and checking the legal expenses account. If the auditor assess the risk of material misstatement regarding litigation and claims have been identified, or when audit procedures performed indicate other material litigation or claims may exist, basically in 2 cases, the risk of material misstatement is high or indicates other litigation and claims, then in that case he will seek a communication with entity's external legal counsel. The auditor shall, in addition to the procedure, seek for direct communication with the entity's external legal counsel. How will he do so? He will send a letter of inquiry requesting the external legal counsel to communicate directly with the auditor. That is the next point. The auditor shall do so with a letter of inquiry requesting the entity's external legal counsel to communicate directly with the auditor. If the law or regulation prohibits any kind of direct contact, the auditor will perform AAP, that is the alternate audit procedure. The auditor may seek a direct communication through letter of specific inquiry with respect to the list where available management's assessment of the outcome. External legal counsel confirm the reasonableness of the management. When will the auditor judge it necessary to meet with the external legal counsel? If management refuses or the entity's external legal counsel refuses to respond appropriately to the letter of inquiry, the auditor is unable to obtain, then the auditor doesn't have any other way out. He has to modify the opinion as per SA 705. If management is saying no, you can't talk to the external legal counsel, or management is saying okay, you talk, but external legal counsel is saying hey, why should I respond to you, then in that case the auditor is unable to obtain any kind of evidence, so he has to modify the opinion and he will go as per SA 705. Segment information is simple, where segment information is for what? Whether it is as per different products or service. Segments is done as per different products or service, or it can be for different geographical area. In these cases, the presentation and the disclosure of the segment information has to be as per AFRF. The presentation and disclosure has to be as per AFRF. The first point is auditor has to understand what are the methods which is used by the management. The auditor will first have to understand the methods which is used by the management, and if required, he will have to perform analytical procedures or other audit procedures. This is what the auditor's responsibility is with respect to segment information. Easy, guys. First we saw inventory. For inventory, we said two assertions has to be followed, that is existence and condition. Physical verification of inventory and audit procedures has to be done. If that day's physical verification is unable to be done, it will be done at an alternative date. However, audit procedures on the intervening transaction has to be done. If physical verification is impracticable because the inventory is kept in Jammu and Kashmir, then in that case, alternative audit procedures has to be done. If alternate audit procedures is not possible, then he will go for modification, that is SA 705. If it is held by the custody of another person, then he will ask for confirmation with respect to quantity and the condition of the inventory, and he will try to do inspection or other audit procedures. What is the other audit procedure? The mnemonic is ACID. With respect to litigation and claims, the auditor will first see if the risk of material misstatement, or when he is doing the audit procedure, it is telling that existence of other litigation and claims is there, then he will seek a direct communication with the entity's external legal counsel. How will he directly communicate? With a letter of inquiry. Now, if the external legal counsel is not responding, or if the entity is saying, I will not allow you to communicate with external legal counsel, then the auditor will use the weapon, that is SA 705. Now, what are the audit procedures with respect to litigation claims that will be done? Inquiry, minutes of the meetings will be checked, legal expenses account will be checked, and correspondence of confirmation with the correspondences will be checked. These four are the audit procedures. Now, when will he meet with the external legal counsel? When it is highly risky, or transactions are very complex, or there is a disagreement with the management and external legal counsel, then he will ask for directly meeting with external legal counsel. Next, we went to segment information. Segment information can be based on different geographical area, or it can be different products or services. Then the auditor will obtain sufficient appropriate audit evidence with respect to the presentation and disclosure, whether they are as per AFRF. Now, what are the audit procedures that the auditor will do? He will obtain an understanding of the methods which is used by the management for identifying the segment information, and he will also perform analytical procedures or other audit procedures. With that, SA 501 is completed. 505 is what? External confirmation. What is the objective definition and important terms for external confirmation? Now this is the mind mapping of external confirmation. The first question is objective definition and important terms. The objective of external confirmation is what? External confirmation means obtaining an audit evidence from a third party as a direct written response. What is the objective? To get relevant and reliable audit evidence. That only is the objective. The definition: it is the audit evidence obtained as a direct written response to the auditor from third party in paper, electronic or other medium. What are the important terms? Positive confirmation, negative confirmation, non-response and exception. Positive confirmation means whether you agree or disagree, you please respond to me. Negative confirmation means this is the amount that you owe to the company. Only if you disagree with this amount, you please respond to me. Non-response, name itself says failure to respond. Exception, there is a difference between the information which has been requested and a difference and whatever has been obtained from the third party. Then we call that as exception. So these are the important terms. Procedure of external confirmation. That is the next question. Procedure of external confirmation. External confirmation procedure. First, you have to determine what is the information that is to be confirmed or requested. Now, to whom are you getting the external confirmation? Select the appropriate confirming party. Now, how are you designing the request? That is also important. Sending the request and also doing follow-up request. These 4 procedures you have to follow. Now, how you are designing the confirmation request directly affects the response rate as to what is the assertion being addressed, what are the identified ROM, how is the layout and presentation, what is the prior experience, what is the method of communication, management's authorization. Does that person, the external person, has the ability to confirm whatever you are asking? External confirmation procedure, there are 4 points. Determine the information, select the party, design the request, send the request, do a follow-on request. Now the last question with respect to SA 505 is management's refusal to send the external confirmation. It is given in red, guys. Now when you want to contact the third party, usually there will be a friction from the management side. They'll say, why do you want to contact? You ask me for whatever information that you want. Now we have to check whether why the management is not allowing us to communicate with a third party. If it is reasonable or not is what we have to check. The keyword here is reasonable. If it is reasonable, perform alternate audit procedure. Now they are saying, sir, you want to ask to that man. That man itself is in coma. How will you ask? It is reasonable. Now you will perform alternate audit procedures. If you cannot perform alternate audit procedures, then what will you do? Tell me. If it is not reasonable at all, then you have to do a fraud reporting. But if the management refuses to allow the auditor to send the external confirmation, then you will modify your report and you will also communicate with the management and TCWG. Now see the flow for you to get a better understanding. Management's refusal to send the external confirmation. Now if the management refuses, what should we do? We have to check whether it is reasonable or not. Reasonable. If it is yes, it is reasonable, then see if you are able to perform alternate audit procedures. If you are able to perform alternate audit procedures, then you have no problem. You will obtain the sufficient appropriate audit evidence. If you are not able to perform the alternate audit procedure, or if it is not reasonable, then in that case you will go for SA 260. You will communicate with those charged with governance and you will also modify your opinion as per SA 705. Is that clear? Now with the flow chart, you are able to understand if the management refuses for the external confirmation, what you have to do. You first have to check whether it is reasonable or not. If it is reasonable, perform alternate audit procedure. If it is not reasonable, directly use the weapon. If it is reasonable but you are unable to perform the alternate audit procedure, no other go. You have to use your weapon only. Now that is SA 505, guys. Now the first question in SA 520 is types and purpose of analytical procedures. What are the types of analytical procedure? There are 5 types. Comparison of the client data with 5 different things. client data with industry data, client data with similar prior period data, client data with client determined expected results, client determined expected results using non-financial data, and auditor determined expected results. What are they trying to tell? I'm comparing the client data with usually what is happening in the industry. That is comparing the client data with industry data. If I compare this client data with previous year 2025 versus 2026, if I do that, then I'm comparing the client data with similar prior period data. Client determined expected results. Say for example, marketing spend till last year was 0. This year they've increased the marketing spend to 1 lakh. And that is the reason why sales has jumped by 5 lakhs. So client has determined an expected result saying sales will increase if marketing expense increases. Now we are comparing the data and seeing that is analytical procedure by comparing the client data with client determined expected results. Client will also determine expected results using non-financial data. Last time we were all working from home only. Now only we are starting an office. So my rental income has increased. So the square feet has increased. The square feet increase is the non-financial data. But once this increased, the employee cost came down and the sales increased. So I am able to compare the data using the non-financial data. Auditor determined expected results. Last year GP ratio was 20%. This year it is only 18%. Auditor is able to make some kind of a comparison. So he is having an expected result, and that is auditor determined expected results comparing with the client data. So 5 types of comparison can be done. Client data with industry data, client data with similar prior period data, client data with client determined expected results, client determined expected results using non-financial data, and comparing the client data with auditor determined expected results. The first one was types of analytical procedures. What is the purpose of analytical procedure? Why are we doing the comparative analysis? Say for example, last year sale is 1 lakh. This year sale is 10 crores. Something is wrong. You are able to say that. That means you are comparing one data with another data so that it appears reasonable for you. That is a reason as to why you are doing your analytical procedure. It has to appear reasonable. Example, you are checking the expense ratio, increase or decreasing trend, any differences which is manipulated to inflate or suppress the profit, unusual transactions or events, unusual state of affairs or audit implications, unusual or unexpected relationships or frauds. All these you will be checking for seeing whether the data that is given to you is actually reasonable or not. Factors to be considered for substantive analytical procedures. What are the factors to be considered? Availability of data. Disaggregation. Aggregation means putting everything together. Disaggregation means how much you are able to split and see the data. What is the account type? It is more predictable for certain types of accounts, not that much predictable for balance sheet and all. Source, expenditure on R&D and advertisement. Predictability of the data. Sales and cost of sales already has a relationship, so you can predict the data in a better way. What is the nature of assertion that you are using the analytical procedure for? And what is that inherent risk? That means what can go wrong? These are the factors to be considered for substantive analytical procedures. What are the techniques available for analytical procedures? Techniques means where should you go? Trend analysis, ratio analysis, reasonableness, and structured modeling. Those are the techniques for analytical procedures. Where is the techniques? Yes. Trend analysis, ratio analysis, reasonableness test, and structured modeling. What is the meaning of trend analysis? Previous year trend comparing with the current year figure. Any comparison, salary previous year to current year, all that is trend analysis. What is ratio analysis? Gross profit ratio, sales ratio, previous year to current year ratio, this company to industry ratio, all that will become ratio analysis. Reasonableness test is not necessary with respect to previous year. Current year itself we can see the reasonableness test. Say for example, you are saying that my sales has been normal, sales has been stable, but all my expenses have increased. Salary has increased, rent has increased, every other expense, miscellaneous, stationery, every other expense has increased, but sale is the same. Reasonably, it is not possible like that. So reasonableness test, it will get caught. Structured modeling is basically like last year it was like this, so this year it was like this. So linear regression you are trying to find out, that is the structural modeling. Where is the seventh one? I'll just show you in the concept book itself. Now see here the seventh Roman number, techniques available as substantive analytical procedures. Trend analysis, most commonly used techniques, comparison of current data with prior period balance or with trend of 2 or more prior period balance. Ratio analysis, useful for analyzing asset and liability account as well as revenue and expenditure account. Reasonableness test, unlike the trend analysis, this analytical procedure does not rely on events of prior period but upon non-financial data for audit period under consideration. For example, interest expense against interest bearing obligations, wastage and scrap percentage against production and raw material consumption. Structural modeling, it is a modeling tool, constructs a statistical model from financial or non-financial data of prior accounting periods to predict the current account balance. Example is linear regression. So these four are techniques available for analytical procedures. Analytical procedures used as substantive tests. See here there is a mnemonic given for analytical procedures used as substantive test. The auditor shall SRED. What is SRED? Determine the suitability of the analytical audit procedure, evaluate reliability of the data, develop an expectation, determine an acceptable difference. Determine suitability of analytical procedure applicable to large volume of relationship among data, whether it exists. Unsophisticated predictive model. Evaluate the reliability of data. What is the source of information available, comparability of the information, all of those things. Develop an expectation, accuracy of the expected results, degree of disaggregation, availability of the data. Determine the acceptable difference. Auditor's determination of the amount of difference that can be accepted without any further investigation also, that is SRED. Determine suitability, evaluate reliability, develop an expectation and determine the acceptable difference. This is question is what? Analytical procedures used as substantive test. Now, what is the result of analytical procedure? The result is either you'll do an inquiry or you'll do other audit procedure. That's all is the result of analytical procedure. Investigating results, inquiry or performing other audit procedures. Inquiry of management and obtaining appropriate audit evidence relevant to management's response. Performing other audit procedures. The investigation results of analytical procedures will lead to these two only. The last one, that is auditor's conclusion in performing analytical procedure. You will conclude in performing the analytical procedure, but it has to help you to collaborate the conclusion in performing the procedures. Helps to draw reasonable conclusion in overall financial statements. The results of such analytical procedure may identify a previously unrecognized wrong. If there is a previously unrecognized wrong, so now you please revise the auditor's risk of material misstatement and modify the further audit procedures accordingly. So auditor's conclusion with respect to SA 520 is he will help to collaborate the conclusion in performing the audit procedures, helps to draw a reasonable conclusion. Results of such analytical procedure may identify a previously unrecognized wrong. If there is a previously unrecognized wrong, then modify the FAP accordingly. Further audit procedures is FAPT. This is 520. 550. Related party transactions. Examples of relationships indicating a presence of control or significant influence. Control means what? Somebody has direct control on you. If you are under your parents right now, parents have full control on you. What is significant influence? Now, after you grow little more, after you go for articleship and all, you will start going for articles outside Chennai, outside Tamil Nadu, all those things will happen. When you go that time also, if your mind voice is saying, hey, don't go outside after 8 o'clock, after 7 o'clock, after sunset, don't go outside, it is risky for you, you will hear in your mother's voice itself. That means she is significantly influencing you. If you want, you can lie to her and go. No one can control. But still, those voices you are hearing, that is the significant influence. Example of relationship indicating the presence of either full control or significant influence is what they are asking. See here, Control is the power to govern the financial and operating policies of entity. Significant influence can be because of share of ownership, statute, agreement, and the power to participate in the financial and operating policy decisions of the entity. The existence of following relationship indicate that there is a presence of control or significant influence. The question is actually from here. Direct or indirect equity or other financial interest. Entity holding of direct or indirect equity holding or of other financial interest in other entity. Being part of TCWG or KMP. Close family member of TCWG and KMP. Significant business relationship with TCWG and KMP. The 3, 4, 5 are TCWG and KMP points. What is the first and second point? Direct or indirect equity holding or other financial interest in the entity. That means the client is here, somebody else is holding. So these two become related parties. That means either control or significant influence has been established. The entity's holding of direct or indirect equity holding. That means client is holding in another entity. That means this entity and the client becomes related party. That means control or significant influence is present. These 5 are the circumstances which tells you that yes, there is control or significant influence which is being existing. When will related party transaction give rise to higher risk of material misstatement? For related party transaction, the risk of material misstatement is high in these 3 cases. The first one being if it is too complex, complexity is too high, then in that case we will say that risk of material misstatement is high. Information system is ineffective, then we will say that risk of material misstatement is high. Not in the normal course of business. Not in the normal course of business. That means low consideration or no consideration is there. Then in that case, we will say that risk of material misstatement is high. Are you able to understand, guys? Now in these 3 cases, we will say that the risk of material misstatement is high. The next question is, how can an auditor verify existence of related party relationships and related party transactions? For this, we have the mnemonics SRI CLIPS CCC. SRI CLIPS CCC. Entity's income tax return. Information supplied by the entity to the regulatory authorities. Shareholders register. Statement of conflict of interest. Record of the entity's investments. Contract with an agreement with KMP, significant contract and agreement not in the ordinary course of business, invoices and correspondence from entities' professional advice, life insurance policy, internal auditor's report, contracts renegotiated with the entities, documents filed with securities regulator. These 12 if you see, then the auditor will be able to verify whether related party transaction, whether it is existing or not. SRI CLIPS CCC, how will you remember it? S is shareholders register. R is regulatory authority. For people who don't know, please write now. I is IT return. If they ask directly, you will be able to write each and every point. C is conflict of interest with management and TCWG. L is life insurance policy. I, internal audit. T, professional advice. Invoices for professional advice. S is securities, documents filed with securities regulator. CCC is contracts. Contracts which are renegotiated again and again. If they negotiate only with friends or known people, you will do that. Contracts which are between KMP and TCWG. Contracts which is not in ordinary course of business. This is SRI CLIPS CCC. The question is, how will the auditor verify the existence of related party transactions? Then you have to go to SRI CLIPS CCC. What are special purpose entities? The special purpose entity may be a related party because entity may in substance control it, the substance over form concept. Substance is able to control it even if the entity owns little or none of the special purpose entity's equity. Equity wise you are not able to control, but by substance you are able to control, then it is called as special purpose entity. What will auditor inquire the management? The auditor will inquire the management regarding identity of related party, including any changes from the prior period. What is the nature of the relationship? What is the type of the transaction and the purpose of the transaction? He will also see what? Do a risk assessment procedure to have an understanding of the controls which is there. Identify, account and disclose the related party transactions as per AFRF. Authorize and approve with the related parties, and authorize and approve anything which is outside the normal course of business. So the auditor will inquire the management with respect to these things. Yes, with this essay 550 is also completed. 600 is very small and 530 we have a few questions. Now essay 600 has these three sections: 128 subsection 1, 128 subsection 2 and 143 subsection 8. 128 subsection 1, what is it trying to tell you? Now all companies, these companies including the branches, they have to keep the books of accounts and the financial statements in the registered office of the company. Now this can be kept in electronic mode also. Now in case they are unable to keep it in the registered office of the company, they can keep in any other place. However, a notice in writing giving the full address, notice in writing giving the full address of such other place has to be kept at the registered office of the company. Basically, the reason as to why they are doing this is, if I go to the registered office of the company, I should be able to access the books of accounts and financial statements, or I should at least know where I can access the books of accounts and financial statements. That is the reason why all companies, including branches, have to keep the books of accounts, financial statements at the registered office of the company. This can be kept in electronic mode also. In case they keep in such other place, a notice in writing giving the full address of that such other place has to be kept at the registered office of the company. This is 128 subsection 1. Is that clear, guys? Now I'll go to 128 subsection 2. 128 subsection 2. Now, for all the branches, branch office, whether the branch office is in India or outside India, they have to keep the books of accounts in the branch office itself. They can keep the books of accounts with themselves in the branch office itself. However, summarized return periodically has to be kept at the registered office. Summarized return periodically has to be kept at the registered office of the company. If they want, they can keep in any other place. However, a notice in writing has to be kept at the registered office of the company, giving the full address of that such other place as to where they are keeping, similar to 128 subsection 1. But 128 subsection 2 is specifically for branches. They are deemed to comply with 128 subsection 1 if the branch in India or outside India is keeping the books of accounts in the branch office in itself, and the summarized return periodically is given to the registered office of the company. This summarized return periodically can be given to any other place also. However, a notice in writing has to be kept at the registered office of the company. This is 128 subsection 2. Now moving forward to 143 subsection 8. 143 subsection 8 is what? Duties and powers of the company auditor with respect to branch auditor. Company auditor's duties and powers with respect to branch auditor. Say for example, there is a branch office case. There is a branch office. Now for this branch office, the company auditor itself can be appointed as the auditor of the branch, or any other person as per section 139 can be appointed as the auditor of the branch. If this branch is situated outside India, then a CPA or any person duly qualified outside India can be appointed for the branch which is being situated. Yes or no? Now, this branch office, this branch auditor will prepare a report. and this report has to be sent to the company auditor. Now we saw the duties and powers of the company auditor with respect to branch auditor. Who can be a branch auditor? For a branch office, the company auditor itself can be a branch auditor. Any person under 139 can be appointed, or a CPA or any other person who is outside India duly qualified can be appointed as the auditor of the branch. Whoever that is, the branch auditor has to report to the company auditor. This is 143 subsection 8. Are you able to understand? These three, section 128 subsection 1 with respect to books of accounts, financial statements, 128 subsection 2 is respect to books of accounts of the branch, 143 subsection 8 is with respect to duties and powers of company auditor with respect to branch auditor. These are the three sections. Now coming to the definition of what? Who is a principal auditor? Who is a other auditor? Who is a component? We have to see. See this dabba given here. Principal auditor means the auditor with responsibility for reporting on the financial information of an entity when that financial information includes the financial information of one or more components which is audited by an other auditor. You definitely will not understand this. Now see the other auditor. Other auditor means other than the principal auditor who has the responsibility of reporting of the branch. For now, you can just imagine component means branch, but actually component has a wider meaning. Whoever is auditing for that branch, they are called as the other auditor. Whoever is responsible for the overall audit, they are called as the principal auditor. Component means the division, branch, subsidiary, joint venture, associated enterprise or other entity whose financial information is included in the financial information which is audited by the principal auditor. Principal auditor means auditor who has the responsibility for reporting on the financial information of the entire entity, not just the branch, not just the component, but entire entity when that financial information includes the financial information of one or more components. It could be division, branch, subsidiary, joint venture, associated enterprise. Other auditor means he is having the responsibility for reporting of one component which is included in the financial information which is audited by the principal auditor. Is that clear? Principal auditor is the main auditor. Other auditor is auditor of the component. Component could be a branch, subsidiary, joint venture, associate or a division. Is that clear with the definitions? What is a procedure by principal auditor? He will perform procedures to obtain sufficient appropriate audit evidence that the other auditor's work is adequate. Procedure by principal auditor. He will perform the procedure for what? To obtain sufficient appropriate audit evidence. That is his main objective. To obtain sufficient appropriate audit evidence that the other auditor's work is adequate. How is he going to do that? He has to basically see what is the use of the report, use of work or report, and that coordination has to be done in the planning stage itself with the other auditor. Special consideration and procedures for identifying any intercomponent transaction. The principal auditor has to help the other auditor to identify the intercomponent transaction and see if there are any special consideration for that. Intercomponent means what? Between the branches there will be some transactions which is happening. That should not be considered as sale. That should be a transfer between branches. In that case, for a person who is just looking at that branch, he will think that it is a sale. But when I have the overall view, I will just know that it is moved from one branch to another. So the overall auditor, that is the principal auditor, will help to see any special consideration and procedure for identifying the intercomponent transaction. He will also give a timetable for the other auditor. He will mention if there is any accounting, auditing and any other reporting requirements that the other auditor has to be done. Now this is the audit procedures that a principal auditor has to do. Procedure by principal auditor, and that is SA 600. Now how will you remember? 600 is another auditor, 610 is internal auditor, 600 using the work of an other auditor. Another auditor is 600. If it is 610 using the work of internal auditor, like this you can remember. Do not get confused between the two. The last standard is SA 530. What are sample selection methods? See the sample selection method, guys. Random sampling, systematic sampling, monetary unit sampling, haphazard sampling, and block sampling methods. Under statistical sampling only, we have random sampling, systematic sampling, and value weighted sampling or monetary unit sampling. Under non-statistical, we have haphazard and block sampling. Random sampling includes very popular methods which is discussed below. Simple random sampling. What is simple random sampling? Each unit of the whole population has equal chance of being selected. It is considered that random number table list are simple and easy to use. Also provide assurance that auditor's bias does not affect the selection. This method is considered appropriate provided population is to be sampled consists of reasonably similar units and fall within a reasonable range. What is stratified sampling? I am first dividing the population into different strata, different segments, dividing the whole population into few separate groups. These groups are only called strata, and then you take sample from each of the strata. Each stratum is treated as a separate population, and if proportionate of items are selected from each of these stratums, the number of groups into which the whole population has to be divided is determined on the basis of auditor's judgment. Interval sampling or systematic sampling. It is a selection method in which number of sampling units in the population is divided by sample size to give a sample interval. To minimize the effect of the possible known bias through a pattern in the population, more than one starting point may be taken. Monetary unit sampling is the value weighted selection. What is haphazard sampling? In which the auditor selects the sample without following a structured technique. Although no structured technique is used, auditor will nonetheless avoid any conscious bias or predictability. Block sampling. This method involves selection of blocks of continuous items from within the population. Block selection cannot ordinarily be used in audit sampling because most of the population is structured and they will have similar characteristics to each other. So block sampling in general, you will not be using that much. Just excuse me, guys. Now the next one is, what are the factors to be considered for the extent of checking on sampling plan? What are the factors? See here, the size of the organization under audit, state of internal control, adequacy and reliability of the books and records, tolerable error range, degree of the desired confidence. These 5 factors are to be considered for the extent of checking how deep I have to go and check the sampling basis I have to see. Stratification versus value weighted selection. Stratification, I told you, in one of the methods where each and every population is divided into different strata, and from each of the stratum they pick the sample where each of the stratum in itself is like a population. For value weighted selection, how do you do it? You assign weights according to the importance or according to the number in each of the segments, and then you will select the sample from each of the population after assigning the weights. Now I will show you stratification versus value weighted selection. Audit efficiency may be improved if auditor stratifies a population by dividing into subpopulations which have identifying characteristics. When performing test of details, that is value weighted selection, it may be efficient to identify the sampling unit as the individual monetary unit that make up the entire population. Selecting specific monetary unit within the population. One benefit is such that the audit effort is directed to the larger value items because they have greater chances of being selected. This approach is used along with the systematic method of sample selection and is most efficient when it is selected items using random sampling. Whereas the objective of stratification is to reduce the variability of items within each stratum and allow that the sample size to be reduced without increasing the risk of sampling. This allows greater audit effort to larger value items as these may be overstated. Results of sample drawn under each subpopulation are then projected to that stratum. I told you each of the stratum is like a population itself. So whatever sample that you're getting from each of the stratum, you will be projecting it to that stratum. To draw an opinion on the overall population, combine all the results of all the stratums. Projected misstatements of each stratum will be combined to consider the possible effect of misstatement in the A, B, C, D. What is sampling process? Sampling process and sampling risk we have to finish. Sampling process is here, guys. Sample design. First you have to make the design, then is identify the size of the sample, see what are the methods, which method is suitable for us, audit procedures, nature and cause of deviation, projecting the misstatement, evaluating the results of audit. These are the sampling process. When designing an audit sample, auditor's consideration includes specific purpose to be achieved and combination of audit procedures that is likely to be best used to achieve that specific purpose. Sample size has to be as sufficient as to reduce the sample risk to an acceptable level. Examples of factors influencing sample size for test of control. This is a beautiful question actually. Example of factors affecting influence of test of control and examples of factors influencing sample size for test of details. Now see here, an increase in extent to which auditor's risk assessment takes into account the relevant controls. When auditor's assessment of risk of material misstatement, including an expectation of the operating effectiveness, the auditor is required to perform test of controls. Other thing being equal, the greater the reliance the auditor places on the operating effectiveness on the controls in the risk assessment, greater is the extent of the auditor's test of controls. Thus, sample size will increase. Why they are saying like that? If risk of material misstatement is high, then you have to increase your size of the sample to be more sure because it is a risky area. If there is increase in tolerable rate of deviation, I can tolerate if there is a mistake which happens here. So I will reduce my sample size. So the sample size will decrease. If there is an increase in the expected rate of deviation, that means I know I am expecting a deviation in this place. That means I know there is a mistake that might happen in this place. So I will be extra careful. So I have to increase the sample size. An increase in the auditor's desired level of assurance that the tolerable rate of deviation is not exceeded by actual rate of deviation in the population, you will increase the sample size. In case of large population, the actual size of population has little or no effect on the sample size. There will be negligible effect on sample size due to increase in the number of sampling units in the population. Example of factors influencing sample size for test of details. Here also, if risk of material misstatement is high, for test of details also the sample size will be increasing. If more audit evidence is required, you have to increase the sample size. The more audit evidence that is to be obtained from TOD, the larger the sample size. More the auditor is relying on other substantive procedures, then you can, if you do other procedures and if you are satisfied with that, then here you can reduce your sample size. The less assurance the auditor will require from sampling. Increase in auditor's desired level of assurance. I want to have that level of assurance with respect to these areas. So I have to increase my sample size. Increase in tolerable misstatement. That means even if a mistake happens here, I will tolerate it. In that case, I will reduce the sample size, decrease the sample size. The greater the amount of misstatement the auditor expects to find in the population, the larger is the sample size. When stratification is appropriate, then sample size will reduce. For large population, the actual size has little or no effect on the size of the sample. Sample selection methods, you already know all the samples. Performing the audit procedures is the next step. Auditor shall perform audit procedures which is appropriate to the purpose on each item which is selected. If the audit procedure is not applicable for that selected item, then you will be performing the audit procedure on a replacement item. If auditor is unable to apply the audit procedure or suitable alternative audit procedures in that replacement item also, nothing is to be done, then auditor will treat that item as a deviation in case of test of control and misstatement in the case of test of details. Test of controls is when you are testing the internal controls. If it is not operating properly or it is not operating as desired, you will say that there is a deviation. For test of details, then you cannot call that as deviation. That means there is a mistake which has happened, because test of details is, say there is a mistake in the P&L numbers, there is a mistake in the balance sheet numbers, then you will say there is a misstatement. If it is for test of controls, it is deviation. If it is for test of details, it is misstatement. Don't forget that. The next step is the nature and cause of deviation. The common feature In analyzing deviation, the auditor will observe that many have a common feature, example, type of transaction, location, product line, period of time. In such circumstances, the auditor will decide to identify all the items in the population that is having that common feature. Then comes investigation. Such deviation may be intentional, that means fraud, and may indicate a possibility of fraud. If it is intentional, it is fraud. If it is unintentional, it is error. Auditor will investigate the nature and cause of deviation or misstatements identified and evaluate the possible effect on the purpose of the audit procedure on other areas of the audit. Projection of misstatement, or whatever misstatement has happened in the sample, you are going to project it to the entire population. Projecting misstatement to the population. For test of details, the auditor shall project misstatement found in the sample to the population. For test of control, just because one internal control is not operating properly, you cannot explicitly project the deviations. So for TOC, no explicit projection of deviation is necessary. Evaluation of sample results, the auditor will evaluate the result of the sample, whether whatever sampling that they have used, whether that has given a reasonable basis for conclusion about the population in itself. The results of the sample, whether the sampling has provided reasonable basis for conclusion about the population that has been tested. Sampling risk. Sampling risk is of two types, test of controls, risk of incorrect acceptance. Test of controls, you either over rely or under rely. Incorrect acceptance, that means it is wrong but you have accepted it saying it is correct. Then it leads to audit risk. Risk of incorrect rejection means it does not affect the audit risk. Overly I am relying on the internal control, then what happens? It affects my effectiveness because I will not take care of all those things because I am relying on it thinking everything is going well only. Risk of under reliance, it is going well but still I'm not relying on this, I'm not having the trust on that internal control, then again I'll keep testing it and it affects my time. Time is the efficiency. Risk of under reliance affects the efficiency, over reliance affects the effectiveness. This is the sampling risk. That also is completed. Yes guys, Essay 530 was actually easy. Sample selection methods they can ask in MCQ. Sampling process, sampling risk. We saw difference between stratification, value weighted and factors to be considered for extent of sampling. This is chapter number 4 and 12 marks has come to your pocket. Yes, guys, finally we have completed the entire marathon. All the standards revisions are completed. Hope it was helpful for you. Hope it gave you that confidence and hope you will go to bed tonight at peace with yourself. And yes, guys, like I said, I have recorded this entire marathon. When you're writing your costing exam, you can see May 11, 4:45 p.m. I'm completing the marathon. And yes, guys, if it was helpful for even 10 students, I am very, 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 very happy. So I will see you very, very soon with multiple other videos like I already promised. All the very best, guys. Good night.